Good morning and welcome everyone to the 8th Annual Easter Investors Summit, proudly hosted by Traders Corner. I'm your host, Anthony Chapman, and I'll be guiding you through today's incredible lineup of seasoned professionals, educators, and trading innovators. Today is all about navigating uncertainty, discovering powerful strategies, and learning how to thrive in today's volatile markets. And we've assembled one of the strongest lineups ever. From technical setups to automation, quantitative strategies to options mastery, you're going to walk away with actionable ideas you can implement immediately. So let's get right to it. First up, we have a veteran of the global trading scene, Michael Filighera of Logical Signals and Traders Helping Traders, with a trading career that began in 1979 on the Pacific Stock Exchange floor and global experience from London to Amsterdam. Michael has a unique perspective on how the Elliott wave principle is evolving in a world of quantitative trading. Today, he'll address a crucial question. Does Elliott wave still work in modern markets? Michael, the floor is yours.
Thank you. Thank you very much. And good morning, everybody. Or good afternoon, depending on where you're checking in into this webinar. My name is Michael Filighera. And again, today's webinar that I want to present is, does Elliott wave continue to function and within a quantitative atmosphere, which, and for those who want a little bit more background on that, I mean, quantitative trading has really started back many years ago, and now everything is algorithmically controlled, from entering a position, from managing the position, from doing your charting. Everything is quantitative, and so the trading is truly focused and guided by what the larger traders or what the larger market makers are doing. So a little bit of history of me. It was started right there. I began my career on the Pacific Stock Exchange, and I had many functions prior to stepping up and becoming a market maker. And so I started also then to study Elliott wave. That I began to do in 1988, 1989. And I studied with Robert Prechter and also with Dan Ascani. And so pretty much right after I finished my study with them and I started charting myself, I started to do analysis, and then I started to publish my analysis. I started publishing in 1990, and it's kind of been on the same road ever since. And currently I continue to publish my analysis, but I do that via YouTube, where I present a daily update, a morning update. Those are to memberships only. And then I also have a pretty wide audience outside of my memberships, and I try to keep some updates going on that. And what I update every day are the ES, or the SPX and the ES, and the NASDAQ. And so right now, though, I want to talk about the S&P 500. And I work off of the futures market, but I can start with the SPX, and you're going to see this is the largest picture I have. This information goes back to 1927. So it's just prior to the big crash. And when I'm trying to really suggest that Elliott wave definitely still works, there are some nuances, there are some changes, and I'm going to go over those in just a minute. But first, I want to present what my largest picture is right now for our markets and where we are now, and how, well, I'm going to use the word frightening it can be, because we're confronting as a country a new administration that has their own program and they have their own plans. And right now that's really rocking the globe and also our markets. And so I want to tie in everything that's kind of going on to how Elliott continues to forecast that. And so, but what can change sometimes is the timing. And so, because we always get a little surprised in here, which we did, sort of. I mean, we all knew that these tariffs were coming. The president ran on that. That was part of his platform. And then afterwards, he did announce that he was going to put those tariffs together and implement them pretty much in February, and follow through on exactly that. And now we're just dealing with the day-to-day on what is happening as accordingly to those. And the market, of course, is always going to have a tough time because now they want to try to ingest or digest what is going to happen to our markets. What's going to cause them to go up or down? How should we really factor in? Will these tariffs, this trade war, have some bottom line effects on our individual corporations here in the country? Who's it going to affect? Who's it not going to affect? Well, we started to get that. So now we're moving into earnings season. And that's going to really reveal a lot, because I know that the market is now sitting on hold and waiting for earnings to begin, but still digesting this news that comes out almost daily about the trade wars. And for example, yesterday we got a spokesman, or might have been the CEO of NVIDIA, coming out and telling us if those tariffs against his company exporting to China remain in effect, that is going to cost the company a great deal of money. So that is what's really behind today's adjusting to the downside, or the selling. It began in NVIDIA. So let's just take a look. Let me start with my largest picture. And right now, I believe the largest, if you have any background in Elliott, it goes on cycles, it goes on degrees. And so the largest degree that I count to is grand supercycle. And I use it because that's what Elliott started with. So this grand supercycle, which is in the dark blue, is grand supercycle 1 and 2. Those were put in place by Elliott. That's how he started. So I'm going to include, that's where I start my big picture in the S&P from, right on those levels. And then so the next cycle up, or the next degree up or down, I should say, from grand supercycle would be the supercycle. Those are in the blue. And then below that, the cycle degree, those are in the red. And then the primary, and then the intermediate. And then we have the next level is the minor. And you'll see the others when we get up into the smaller time frames. So right now, really what we're in, I'm going to start all the way up at my top. Well, starting from the bottom, we are still continuing to do, we're in grand supercycle wave 3. What's going to be inside grand supercycle wave 3 are 5 waves of supercycle degree. So we have 1 and 2 there. What's going to be inside of supercycle wave 3? 5 waves of cycle degree. Well, we have 1 and 2 done there. So in essence, we are in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So as Elliott would put it, we're in a 3 of 3 of 3 move. And so within cycle wave 3, again, these are very long term, right? Cycle wave 3 began in 1949. So we're still in there. And that's actually the high that I'm feeling that we're going to get up to. Now, I need to go down to my, down to this particular chart, because it's not that deep, and I'm on the futures market, which actually goes back just to 1985. That's when the future started in the S&P. So from there, what I'm counting is we're inside of that cycle wave 3. And in cycle wave 3, there are going to be 5 waves of primary degree, of which we did 1, 2, and we just, I believe, this is all new because I've rearranged my count, or actually the labeling, because we were coming into this period where we slipped quite a bit and we started heading lower. It started to break levels. Originally, my thoughts were that it was only going to be intermediate wave 3, and we were doing an intermediate 4th wave, which left open the potential or the probability that we'd get an intermediate 5th wave up, and then that one would have been completing this primary 3rd wave. Well, upon reflection, the 4th wave came down too far. And so I went back and I readjusted just on degree levels. And I know that can sound confusing, but right now, because of everything that's going on, the market itself continues to move in 5 waves as an impulse. And then when it corrects, it's correcting in 3, which we label as ABC. So if you have no background in Elliott, the premise is that the market impulses, or that would be in a direction. So it can impulse down, it can impulse up. But right now, the impulse is to the upside. And that's going to be 5 waves, as you can see here. And once that 5 waves are complete, then we are going to, actually on this level, we're finishing several degrees along with it. So on this high, what it finished was minute wave 5, which is missing, and I apologize for that. And then we have minor wave 5, intermediate wave 5, and cycle wave 3. Because primary wave 3, because what comes in primary wave 3 are 5 waves of intermediate degree, which we completed. And I could go out one more to my monthly chart, and there you can see it. So here we have intermediate 3, intermediate 4, and that was just the 2009 lows. That was the great financial collapse. And then we have intermediate wave 5. And so it was built very beautifully. Also within Elliott, we are taught and we study that it'll be the 3rd wave that is the most powerful, the longest and the strongest wave within an impulse move. And it certainly was. And outside of that, that 3rd was certainly the longest and the strongest within this climb up. And the primary wave 3 was, again, the longest and the strongest thus far. Now, bringing it back down. So what I want to also include, and I know that I have to kind of jump quickly, is some of the changes that I've noticed about quantitative trading. Now, quantitative trading, of course, it's just all algorithmic. And the other thing that kind of has also developed and changed is there are options. Options trade on everything in our markets, pretty much. And we've seen the development where options are being placed on ETFs. And there are a lot of ETFs that are being created. So first we have our indexes, the SPX, the ES, and then the NASDAQ and the NDX and the NQ and the Russell have, and we have the Dow, et cetera. Those are our indexes. But then we have futures on our indexes. And then there are options on the SPX, and there are options on the ES, and now we have an ETF called the spiders, the SPY, and there are options on that SPY. So we have all these forces that now can come in and trade. Originally, when options were first brought into the marketplace, they were considered a derivative of the underlying, the derivative of whatever rested above it. So in other words, the SPX being the index, the options on the SPX were a derivative of that index. And my theory or my thoughts is that because options are so widely spread out and we have 0 DTE options now in the SPX, 0 DTE stands for 0 days to expiration. The whole idea with an option is that they have an expiration date. They're only good to X period of time. Well, that's been reduced from monthly to weekly to daily. So we have options that expire every day. Now, when we look at an option, and if you have no knowledge of it, I apologize, but if you have some knowledge about option trading, you realize that within that, there are several what we call the Greeks. And that's how we monitor the risk and how we monitor what happens to that position as this market moves up or down. And so we have delta, we have gamma, and we have theta. We also have others that are rho and vega and other such things, and that deal with volatility. That's the other key factor that has produced a lot of change in our markets. The volatility, the VIX, still has that name, the fear factor, the fear index, because the VIX, when the market would start to drop, that VIX would shoot up because people were afraid. And so, but what's really behind that? That what they're doing is the VIX, the volatility, was created by the Chicago Board of Options Exchange. And what it really was showing is how quickly the prices could go up or down. And usually if the market is tanking, is being sold hard, then the price of the puts goes to the moon. Why? Because the puts are going to be in demand, because the put is the right to sell. Whatever sits above that option, if it's based on the SPX, it gives the holder of that put the right to sell the XPS at the strike price on or before the expiration. And initially, it was on or before the third Friday of the month. That was always the monthly expiration, was the third Friday of the month. So by the way, it would be the 18th, but that's a holiday here in the US, so it's going to come on tomorrow. Tomorrow is the April expiration. So what we have going on today is not only the news, basically anything on the tariffs, how that's going to affect our markets. We saw that NVIDIA started to sell off, now down 7, and it also is going to affect, of course, Apple, right? That's another one where we get sent to China and then we get back from China. And so then it just starts to go down the line. So we're seeing some heavier selling today. Now that fits into an Elliott count. And so how and where I see changes are going to come in basically what we look for. Like there are some basic rules which don't get broken, right? So one of the rules is that a fourth wave cannot overlap the price territory of the first wave, right? So if we look at it, it's like 1, 2, 3, 4, 5. Wave 2 corrects wave 1. Wave 4 corrects wave 3. So if I'm in a third wave and I have a fourth wave that goes up and crosses over the first wave, well, then it's not correcting the third wave because it's gone beyond it. So a fourth wave should not correct 100% of a third wave. So, and then we have Fibonacci levels that kind of come in as what are most common. So for example, if we're looking for a fourth wave, most common is going to be that it's 38% retracement. So from whatever direction, a 38% retracement is the most common for a fourth wave. The next most common would be 50%. So using what we have set up as our guidelines and our rules starts to get affected, because what I'm noticing within our markets is that the options trading and the hedging and the gamma levels and the delta, et cetera, that is beginning to have a pull on how the market reacts at different levels. Now, many times that'll line up with the Fibonacci. These are what these levels representing, Fibonacci. And it'll line up with those. And therefore, then when we get the break, it's usually a break of support or resistance at the same time. So what my point and what all of this is I have to combine what models are now showing is where there are a large buildup of gamma. Gamma is going to tell a trader who has a large position what happens to that position if that level is, say, for example, we might have a level of gamma here at 55.50, let's say. So if the market breaks above 55.50, what happens? Those that might be sitting with a short position, their position is now getting shorter as the market were to move up. So that's what a gamma level there would tell us. But on the downside, if we have what they would call, like I believe here in the S&P, let me just double check. I want to check one thing. We have it down in the ES, it's at 52.34. And what happens at 52.34, that is where what they're calling the put wall is sitting. What the put wall is saying, that should be support. 52.34 should be support. Why? Because there's a bunch of short puts sitting there. So larger traders have collectively built a position short that 53.34, and it's like 53.35 is the strike to 53.30. So again, it gets averaged out, coming in at 53.30, excuse me, yeah, well, 52.34. So if that gets broken, what happens? As every time it trades down, those positions are getting the holder of those positions long. So in other words, they've got to sell into that weakness on that break. Now, what happens is when these positions get large enough, right now, if it broke, it would clean up what I'd be looking for. So in other words, right now I'm in this market, I'm looking for, and this is again my daily screen. Now here's a wave A. So what comes after wave A is a wave B. Wave B will be 3 waves, an A, a B, and a C. But right now I'm counting this as if the B wave is going to break into its own ABC or possibly even a triangle pattern, which keeps it winding in and on itself for a while. Usually a triangle pattern is going to tell you that the market really can't make up its mind. It's waiting for more information. And that could be the case here. Otherwise, it's going to be A, B, and we're dropping in that C wave. And here are our markers for that type of a move. That the market right now is breaking below 53.50. Now, not really, but it has. And if it comes back and breaks 53.50, we'd be looking for a move down to 53.05. If it breaks that, we're looking for a move down to 52.60. Now, as far as the C wave goes, we'd be looking for actually that C is normally equal to A. That's just a Fibonacci relationship. So if it's the C wave, we have the potential for the market to come down to 51.15 or 51.14 before we could put that larger minor B wave, because remember, Elliott wave is building blocks. Now, changes that I've seen. This was a man-made rally. This rally, we were getting slammed, and this is the one where the president came out and said, I'm going to pause those tariffs for 90 days. And the market jumped. And of course, now the big question is, was there some insider information going out or whatever? And so because the massive short covering here was astounding. I've been trading in the markets for over 40 years, since 1979. And so when I saw that the Dow was up over 3,000, the NASDAQ was up over 2,000, the S&P was up over 300. Those were massive moves that I have not seen. Why? Well, first of all, because of the short covering. First of all, because they all had to get out of these puts and they had to reverse them and start getting into calls. Because what had happened on the options at this time, coming in here, we were all noticing the markets are extremely put heavy. So traders, institutions were put heavy. They were continuing to look for much stronger levels once we broke 5,000, which, by the way, in the S&P remains major strong support. Now, it already broke it once and got down to 48. That really pushed the panic button in our market. And what happens? You have traders, institutions all around who are now going to be putting on protection, because these guys, the larger banks and all these other larger traders, they have portfolios. They have hedge funds that they must hedge. So here's what we got going on every day when we come in. It isn't just a bullish and a bearish picture. It is, we can term a move bullish or bearish, but it ceases to have that same functionality as that, oh yeah, we're all bullish because we're expecting all these great numbers in from the earnings. That's all kind of been tossed to the side. Because what's interrupting that? A trade war. And so now the market's trying to attempt to understand, is it really going to be beneficial to the United States? Is it going to be beneficial to the US corporations that are getting stuck in the middle of this? Yet to be determined. So what the market is sitting sideways for as we wait these earnings reports is what are the CEOs going to tell us about forward guidance? Are they all going to say, oh yeah, we're expecting a dynamic second quarter. We should be making, several $billion. I don't think so. I think we're going to get a lot of CEOs, CFOs talking about the risk that now has entered into the market. And that risk is going to be measured by the volatility and by the puts. And so that's what I'm seeing. So that's one of the changes that's happened. And as they happen, we now need to understand that if someone is out, or a large firm is out buying puts to hedge a portfolio, that's one thing. Now we have to think about the dealers. Those are the people that sit, as I did, stand on an exchange, and I was a market maker. What does a market maker do? The market maker makes that market. And if the demand is to one side versus the other, well, you're going to see volatility move. In this case, the demand was for puts. When we dropped out of the sky and we broke 5,000, the demand and the necessity to buy large amounts of puts as protection. And what we saw is they were starting to protect down to 3,500, because the thought was, it's like, well, you better protect for a massive or just a collapse in the markets, because that's the next major support line. It's back at 3,500 in the ES and the SPX. And that may be where, if we're really calculating for this larger correction, which I'm considering to be an primary, the green color, primary fourth wave. Now, Elliott told us that I gotta go back out. What normally happens in a fourth wave is that the market, or that fourth wave, will find its terminus, its endpoint, within the fourth wave of one lesser degree. Well, if I'm coming down in a primary fourth wave, one lesser degree is intermediate. And if I go back and I look here, I'm like, that would tell me that we have the potential to drop down to 657, that low, 665, or inside, which basically tells us that we get below 1575 down to that number, 1665. That's a serious downside move. Here's one of the changes. So all of our indexes have now been adding and trying to balance between sectors. But what we're noticing is the Dow, the S&P, the NASDAQ gets them anyway because it's the tech index, but they're seeing that they're adding larger tech companies. Now, S&P, what do they have? Mag 7 for sure. And so what do we see? And the weighting in these tech stocks is heavy duty. It's high. So then you got all of the different factors of where does NVIDIA sit? NVIDIA's in the Dow, NVIDIA's in the NASDAQ, NVIDIA's in the S&P. So when NVIDIA goes, so goes the market, because it carries a heavy weighting in that index. And it'll start to pull down others. And if they're going to go try to hedge or move in that index and they sell a basket of everything, well, then everything starts to move along with the major contributor. So initially this morning, what did we see? We saw a market go up. We saw that they're stepping in and they're buying Apple. Well, here I want to toss another thing at you. It wasn't bullish. They were, if we went, we could take a look to see what was trading in the Apple options. Puts. Puts are in demand in Apple right now. Puts are in demand in NVIDIA right now. So when you have a dealer who has to sell those puts, the hedge is to buy the underlying. So if I'm in Apple and I'm a market maker and somebody's coming in looking for 1,000 puts, which happened pretty much right after the bell this morning, I sell that and I got to turn and buy all that stock. And so what happens? You just saw Apple start to go up, up, and up, and up, and they were trading it before you were like, well, wait a minute, shouldn't it start to go down because it was already heading lower prior to the opening? Yeah, and now it did. It did go back down, but it had to run up to 199 plus to fill those hedges. Not bullish. So you can kind of realize it's like, no, we're still in this very negative tone because everything else was selling around it. You saw the Dow starting to come down. You saw all the markets really starting just to sell initially. Then that brought it up. Then suddenly it changed and everybody started putting the sell orders through. So we have to kind of guide, and a market can make a bullish or take on a bullish posture because it's going up. But I associate that, I got to go back, and I know this is a lot of information to cram into one 45-minute period. But if we take a look and remember that we have what I call gamma levels. And those gamma levels is where these positions are accumulating. And that's really what is going to control things. Because when a level gets broken to the upside or to the downside, it affects what's going on. Also, I study and we place where is the volatility triggers going to be. Volatility triggers exactly what you think. Now, if a volatility trigger sits below the market and it gets broken, it's going to shove that atmosphere of what the market is doing into what we call risk-off trading. Now, the difference is on risk-on trading, which is more bullish. Risk-on trading is that the market is selling the VIX. They're taking that money and buying the volatility of the underlying components within that index. So take, for example, we're trading the SPX or we're trading the ES, and we're in risk-on type trading. They're selling the VIX, which right now, the most common area for the VIX during this long period has been 14 to 16. We get the occasional spike, but it comes right back down to 14 to 16, 17, right in there. That's its comfort zone. As long as it's in there, it's risk-on trading. They sell that, they take that money and they start buying the Apple, or they start buying all of those stocks within the NASDAQ or the S&P. They're buying usually the Max 7. They're taking and they're buying the calls. Dealers have to sell those calls and they buy the stock. So you can see how it's a self-fulfilling prophecy for risk-on trading. But the opposite is risk-off trading. And that's what we consider as a negative gamma atmosphere. So what happens then? If this volatility trigger was below the market, it gets broken. It's shifting the market back to risk-off trading. And the hedge to risk-off trading is to sell into weakness. But the hedge for risk-on trading is to buy into strength. So you can see that alone flips a market quickly, because again, I'm going to go back to what's the position that is sitting there that gets moved. And to the upside, it would be short calls. Breaking a volatility trigger or breaking a large gamma level is usually because it should be resistance on the way up. When it gets broken, it's forcing all of those trades to adjust, to either be covered or they start buying into strength. Because what the position is doing, it's getting them longer. It's a short position, but you're getting longer. So which means every tick you're losing money. And reverse of that is if you're short the put and you're sitting at a lower level and that level gets broken, well, then you're getting longer as the market drops. So what do you need to do? You need to sell into strength. That's why we're beginning to see. Now, that's one change. It's the increase in the amount of options that have traded. That increase has created where I'm seeing extensions, incredible length and extensions. See if I can find some for you on the daily. Well, that third wave's longest and the strongest, but boy, just kind of kept going and kept going. And when I have to break it down and look at it even on my hourly chart, we can look and we can see it just extended, right? Because we can count, we can break this down and Elliott wave will continue to function. In other words, if I'm looking for a third wave, I got to be counting 5. But you see that the degree, and you can see all the subsets coming in. So within the smaller third wave, actually wasn't that small, there should be an additional 5 waves. And then within that third, it's going to have 5 waves on its own. And the differences that I'm starting to see is that they subdivide, and they subdivide. So I'm seeing extensions going up and going past levels that I thought it would go to. So part of it, it's not necessarily breaking any of the rules. We're just seeing things move faster, quicker, and spread. The other difference that I see is that a lot of times, the first one is that we have what Elliott called the rule of alternation, which suggests if wave 2 is a zigzag, then wave 4 should be a flat. And what that, it just means it's going to be an ABC up, but the A and the B and the C should be pretty much equal in length. And on a zigzag, it's that wave A is going to be 5 waves, wave B is 3, and wave C is 5 waves. So it forms a zigzag. And the flat would be A, B, C. So it comes like a flat. What I'm realizing now, one of the big changes is that no, this rule of alternation, first of all, it was never a rule, it's more of a guideline, just kind of gets blown out. I'm seeing second and fourth waves being the same in terms of they're both a zigzag or they both can be flat. I'm seeing more, I got to see if I can find one, where in the second wave, I got to keep going out. Let me go out where if I can find it. In the second wave, that a wave 2 puts in an irregular B wave. So in other words, it drops down. Right now, let's see if I got it where I got a wave 2. If I had this one, for example, and this would be the start of wave 1. That wave 2, or actually here, this is better. Wave 2 would be going up, but somehow at the first move, it does an A up, the B goes down and goes to a new low below the end of wave 1, but then the C wave brings it all the way back up. I'm seeing that more. I never really saw irregular second waves. Irregular fourth, yes, putting in an irregular B wave. The biggest example that I can show you on an irregular B wave would be in the Dow. And it's going to be, let me go right one more. And it's going to be right here. So this was a long fourth wave, intermediate degree. And there's the A wave and the B wave. In the S&P came up and equaled. In the Dow, it went by itself to new all-time high at the time. And then what followed it? The great financial collapse. So it's interesting. Here we are again in getting ready to put in a primary fourth wave. Could we enter a situation where all these tariffs get resolved way before they could really cause it much damage? That could produce a B wave, and that could take our market to a new all-time high, and then we get a crushing C wave. Something else happens. And so could we get into a position where we see that type of a move again? If I had to compare fourth wave to fourth wave, could we have a devastating C wave? Yes. I can take you all the way back to 1929. It was the A wave was the crash. Then it had a B wave up, and it was the C wave that went down to those lows that during the Depression. It was the C wave that did it. We're constantly going to find where we have crushing C waves, varying degrees. I grant you that. But the larger the degree, the larger the crush. And right now, I think we're in a primary fourth wave. I think that crush could be very big. Now, what else can I be adding? But the validity in the age of quantitative trading is still there and is still strong. And primarily what Elliott measures is human emotional reactions to a market. We still have them. They've just been converted, and now they're algorithms. So trust me, an algorithm is not operating on emotions like we do as human beings. Our biggest fear, our biggest emotion in trading is fear. We're fear of missing out. We're fear of losing more. We're fear, everything comes through fear. Well, that actually has gotten programmed into these algorithms because it's a human being creating that, writing and coding that algorithm. This is my belief. But because an algorithm just does, and as a human being, you might go, okay, maybe I should sell. Oh, I don't know. And you wait. Whereas an algorithm is going like, no, that's my order. My order is to sell. Boom. And they just move in and they just do it. And whatever the number tells them, that's where they're going to go. And if they're selling or buying at the market, markets can move. So in that respect, I'm finding that the fear factor has been transferred over and it is inside of these algorithms, but not on the same basis. I mean, when we had fear selling, it was consistent and you just would see it and see it and see it. Now, when we have that fear selling, it's because they're moving a lot of options. And then that's where we start to see things get a little bit out of hand in terms of these algorithms. And the fact that they sometimes can seem to be moving in a vacuum where you'll just see the market suddenly drop. And what it usually can be is that there's one stock out of the thousands that trade within these all of these indexes that has a large sell order or a large buy order, and the market just flips and then drops, or drops and then flips higher. So those types of changes, yes. And sometimes that does not necessarily fit into Elliott. So those of you that may study Elliott or use Elliott, I want to show you a very key tool that I use when I'm trying to work my counts. Let me just start. Let me go out to this daily chart and let me put it back on the bar chart, which is what I use. You can see all these, they include the extremes. If I bring it down and I put it on a line chart, that's on a closing basis. It takes a lot of the extremes out and clears up where a market has possibly bottomed. And I'm going to go back and show you this right here. If I look at that and I put it on the bar chart shows that low there, but actually the low was here. So that was low, then it ran up, and then it came back down. And that was the low, because why? Because the line chart, that was actually the close of the bar. So watch what happens. See? That was the close of the bar. So it really comes into, oh, look, 1, 2, 3, 4. Over here we have 1, 2, 3, 4, 5. So that was the 3, that was the small 4, and that was the 5. If I take it back and put it on the bar chart, it's like, but it was so much bigger. Yes. But if we're looking at a candlestick chart, you're going to see that they're really, not that we don't count them, we do, but they're tails. See the tails? They're tails. Now we count them because if you're studying candles, you need to. Even on a bar chart, when I'm going to work my fibs, I do often include it up to that tail because it does affect where the next level is going to come in. So I need to wrap this up, and I'm going to summarize, and then I'm just going to talk about what I have available. To summarize, Elliott Wave still, in my opinion, it works. Where adjustments are going to be needed in times of when the market is just moving in extraordinary fashion, it's flipping around. I mean, it doesn't look too bad here. Put it down on a 5-minute chart, and it's going to look a lot different, right? We get a lot. Look at that overnight. Look at that. The morning. Then they brought it all the way back. So, but the market follows pattern. Like right now, if I looked at my 5-minute, I got 1, 2, 3, 4, 5. We should have 3 down. Where should it come? Probably back down to there, and then do another. So maybe this did bottom. Remember, I had an A, B. Okay, we're coming back up in the C wave, very possibly. So again, Michael Filighera, great to meet you guys. I have 2 YouTube channels, and you can find them on you go in and you search Traders Helping Traders on YouTube and my name. You will find my YouTube channels. I have memberships on one, the larger channel. Those memberships, if you purchase, include analysis on the S&P and the NASDAQ. And they are, I've got to cut out here. I'm at the bottom of my time. Check them out. Purchase a membership. Thank you very, very much. And I hope to hear from you all.
Thank you, Michael, for that eye-opening session and the incredible offer for our audience. Your insights on adapting Elliott Wave to today's data-driven environment were pure gold. Thank you so much.
You're welcome.
All right, everyone, let's keep the momentum rolling. Price Headley of Big Trends, how to strategically trade options on TSLA. Coming up next is Price Headley, the founder of Big Trends, who's going to take us deep into focused and powerful approach trading options on TSLA over the next 90 days. You'll discover how to simplify your strategy, harness moving averages, and use weekly options for leverage, all with one ticker. This is going to be a great one. Take it away, Price.
Hey, Anthony, thank you so much. Let me make sure I can share my screen here. Let's see, I think we're still on another screen. Let's see. Let me know if you can make me presenter there, Anthony. Oh, there we go. Thank you, sir. All right, fantastic. And I appreciate the opportunity to be here with each and every one of you. You know, TSLA, of course, is Tesla. And Tesla has been controversial lately, particularly because of its founder, Elon Musk, right? Everybody's got an opinion, it seems like, about Elon, obviously with his operations focused on the Department of Governmental Efficiency and the cuts that he's making, but it's been relatively quiet on the governmental level. Talk that he might even return to Tesla soon. And it's really interesting to me because I think the negativity towards Musk is at a historic level. I mean, in fact, if you look at some different elements of the news, you know, depending on which news report we look at, his favorability rating or whatever you want to look at is dropped from plus 24 to minus 19 between 2017 to 2025. Okay. All these things are kind of opinions, right? We need to trade something more than opinion. But my belief is that Tesla is a great leader because, and if you don't believe it's a leader, look at the richest people in the world. Okay, Elon is number one by a huge margin. Right now, this is pulled off the Forbes website, real time. Elon, despite Tesla stock having dropped, is still worth over $367 billion. Okay, that is basically as much as Jeff Bezos and Mark Zuckerberg, the next two combined. Okay, give or take a few billion, right? So the idea is that we're talking about one of the thought greats of our generation, right? I mean, we're talking like Thomas Edison type of impact in terms of, you know, whether you're, I mean, ironically, Tesla was a competitor to Edison, but basic going way back in the history books. But the point of all this is, okay, so, you know, you can have all the opinions you want, but we're talking about a major innovator, okay? And in fact, still very motivated, just pulling up a few other little, how much does he own of Tesla stock still? Still owns 12.8% of the shares, 410 million shares of Tesla. Tesla trading currently just under 249, okay? Multiply that out, that values his stake at over $92 billion just on that portion, not counting whatever else he's already cashed in. And of course, his SpaceX ventures and everything else. Again, okay, so I'm not going to make it all about Musk. We're going to make it about Tesla shares, okay? But that's really the driving factor, pardon the pun, but basically Tesla, of course, a lot of people talk about it's an auto company. It's a lot more. Obviously, it's a technology company. We're talking about electric vehicles being more and more the way. Now, I'm going to share with you how we trade that, okay, and how do we trade it in a short-term way, okay? I just give you that overview because I just see so much negativity, and I'm like, it's amazing to me how much, particularly on more of the left side, the leaning left side, has gotten very negative towards Elon and Tesla because of his connection with President Trump, right? So the point, and again, with the unpopularity of Trump's tariffs, et cetera, I think could be historic in terms of an opportunity on Tesla long term to be bullish, but I'm really more interested in trading the day-to-day quick action in Tesla. It's a great trading stock. So remember, of course, that everything we're sharing with you is for education purposes only. Stock and options trading have large rewards. We all know they also have large potential risk, right? You've got to be able to manage both. We're going to talk about how we manage the Tesla options trade call out. So we do it for our big trends Tesla options trader clients. Past performance of any trading system is not necessarily indicative of future results. Future results are going to vary. Could be better or worse than what we've seen in the past. But the idea is that we're going to be consistent in following our system and walk you through that today. Let's do share terms of use on our bigtrends.com homepage. Okay, kind of went a little circuitous there at the start, but just really just kind of an amazement about how much negativity is in the media towards Elon Musk. And again, we'll see how that plays out. In the meantime, we want to take advantage of options trades in a short-term basis on TSLA shares, Tesla shares. I've been trading options for over 35 years. Of course, my philosophy is that you've got to go with what the market is telling you is the right setup. The stock is telling us is the right setup, bull or bear. I could have all the kind of longer term opinions about Musk and Tesla, but if we get bearish trades, we're going to take those bearish trades. We're going to buy a put option when we're betting on the downside if we're bearish. We're going to buy a call option if we're betting on the upside. We're not going to hang around very long because, of course, these options are not cheap, right? We want to get that quick. What I say is I have a need for speed when it comes to options buying. I've got to get the quick movement, fast movement. I only trade on the days where I think I've got a nice pop coming the following day typically. Okay, so I'm going to walk you through what these trades look like when we call them out. It's only trading TSLA. Okay, so this is as focused as it gets, trading one security because I think it's such an important leading security. And we're going to talk about how you can get trades as soon as this afternoon. We put them out in the final hour of a trading day to get ready for the next day's action when we see an edge. If we don't see an edge, we don't trade. Okay, that's critical, right? You're not going to want to trade every single afternoon. Getting ready only for when we've got an edge. So I've been trading options and stocks for over 35 years. Launched BigTrends.com more than 25 years ago, November of '99. Guiding people through back when everybody said day trading was a path to wealth. I'm like, hold on, swing trading has been really good to me. We like to swing trade or quick swing trade in this example, and we'll walk you through this Tesla trading system today with a unique approach here. Now, let's talk about a recent winner actually on the downside, and then we'll talk about more examples and more of how we put this to work. So, obviously Tesla, like the rest of the market, as we looked back into February and then into March, it broken some key trend lines on the downside. We saw the momentum was heating up on the downside. We saw, of course, that we look at a lot of price action patterns. Okay, we look for price action to really be our main guide, because of course we want to make sure that we're really focused on where we have the edge. We don't want to ever fight the markets, right? One of the big lessons I think when you get started in the markets, especially if you come from the stock investment side, is you see a stock that's down and you're like, that's a great value. Tesla got up to 480, now it's 240 or whatever, 249. Well, it's almost cut in half, and you're going, or 40+%, you're going, oh, that's a value. Well, got to be careful about how you convert that into an options idea, right? Because if you end up sitting around waiting and hoping it's going to bounce back, that's not a strategy. Hope is we don't want to be buying holders or buying hopers. As one of my subscribers says, don't get caught on hopium, and basically then not diluting yourself into where your opportunity is. So this example, we said, okay, look, we want to take advantage of this play here to the downside, and we've got some setup patterns here depending on whether we're bullish or bearish. It depends on how we opened compared to the prior bar's close. It also depends how we follow through or don't follow through on the downside. And so with the downside, of course, we're looking for a close less than the open. So we're getting that breakage. We're looking for also that where prior bar's close is less than an open. So we're getting the kind of consistent downward movement happening here back-to-back days. And so we're watching that really closely and watching for, okay, of course, we've broken a key moving average that we look at as a filter, right? The moving averages are just a guide, right? But we think that the candle action here and the gap action to the downside tells us that, yeah, we've got bearish momentum and we want to participate in that bear trade to the downside. So where do we get in here? We got in here actually on that second day down here, even though it looks like a reversal back up. It's about 375. And we bought the slightly out of the money 367.5 puts. We're about maybe 2% out of the money, some 7.5 points below the current price of the stock. You say, why would you do that? That's all time risk. That is true. It's all time risk. But what we do is we will go out, if that was being called out on February the 6th, and we're going out not to that next day's expiration, which is that Friday, February 7th. We're going out to the following week's expiration, the February 14th, Valentine's Day expiration day in that case, even though we only held it for one day. And, we're targeting, the opportunity to make a quick pop. Preferably, we're looking for the opportunity to pop it for a quick double when we can get the chance. Now, as you can see in this case, didn't quite give us that. It popped the next day from an entry of 965. Now remember, we quote 9.65. You got to multiply that times 100 because each option contract controls 100 shares. So one contract would control 100 shares of Tesla stock, which was worth about $37,500. We were controlling that $37,500 for under $1,000 for just 965 bucks. All these examples before commission. So we catch it the next day and exit the next afternoon here as the stock has dropped down to about 363 in that final bit before the close. We end up making a 42.5% gain out at 1375. Your $965 investment made you 410 bucks. Commissions, of course, even on a one lot, no more than $1 per contract in, $1 per contract out, round trip $2 commission. It's never been a better time in about 35 years to trade options based on how cheap commissions are now for options traders. Remember, in all these examples too, past performance never guarantees future results. Yes, the stock kept dropping. Okay, that's okay. I don't sweat that. We're looking at how we can catch that follow through into that following day. Okay, so we're looking for quick in and then quick out, holding it one full trading day, 24 hours at most, right? Getting in one afternoon, out the next afternoon, never a day trade. Since we're getting in that final hour, you don't have to ever sweat a day trade, even if it's a small account. So there's 3 different price action patterns. A couple of them are bullish patterns, and then the one bearish one I was just talking about based on that downside momentum, but we'll look at the bullish ones too. We're going out to the next week expiration typically, although we could trade the same week if it's early in the week, right? We don't want to do it right before the expiration. We don't ever want to hold on the expiration day. But if it's like a Monday or a Tuesday, no one will be out the next day. Sure, we can take that trade. If it's later in the week, we'll go on out to the next week's expiration. So we're only using daily charts. We're not messing with intraday charts. And you think, why? Why wouldn't we want to really fine tune our timing? What you'll find is that the intraday chart is full of a lot of noise. That can be great trends on it too, but you can basically get chopped up on a bunch of other signals that kind of fake you out. So we're looking for more of the true breakout signals on the day-to-day, bigger picture action. I like to often say that there's a lot of battles fought during the trading day, but the war is won at the close, right? So that's why you want to look at especially the tone into the final hour or so of the trading day. That's why we wait to send our alerts until about 3:30 p.m. Eastern. So you've got at least a half hour to get in, and you don't have to sweat it. That's plenty of time because you're going to get both a real-time email from us when you sign up for these. We got a great try it out for 3 months special at the end of the presentation here, but also the idea being that you can get it as a mobile phone update too. I personally love the mobile phone updates even more than the emails. I get them both and recommend you get them both because it just gets me kind of that, okay, we're firing this right now, right in front of me on my phone. We all have that ubiquitous cell phone in our pockets nearby, basically, where you get that kind of pop up, boom, new trade to get in, new trade to get out. No missing of any trades that way. So we're going to get out before that end of the day. So that way we know earliest we'd be out once we get in is the next morning. So that's 2 different trading days, no day trades. So this also lets you know you're not going to sweat screen watching all day, right? Once we get in, we can put our stop, we can put our target in. We can just basically let the trade do kind of set and forget it, do what it's going to do, and let the edge play out over a larger sample of trades. I never want you to judge it off of any 1, 2, or 3 trades that we've made. That's why, like I said, I want you to try it out for several months and let the system prove it to you over time. Don't just let one trade or a few trades dictate your opinion of the methodology in the system. But it really is important to eliminate noise. And I've found that these time-based entries really are nice for maximizing your return on your time, not getting caught up like just looking at things and not necessarily getting any kind of a clear payback or getting sucked into having to watch the market all day. So really big picture opportunities using the power weekly options where there's a lot more leverage than going out, say, a month to the monthly options. And it allows us to just do that scan right before 3:30 and say, okay, do we have a signal? Do we not? And so plenty of trade frequency, plenty of profit potential. And this is interesting because you go in and say you're not having to commit that much capital. If you look at the average option contract price this past year in 2024 for Tesla, it was an entry price of $519, meaning $519 going in to control each 100 shares, right? So the idea is, okay, you see, you're not putting in that much capital at risk on any one trade. We tend to recommend have the availability to go up to $1,000 going into a trade if you can, because of course, like I showed you that prior example, we're in for 9.65, right? $965. So if you're in saying I'm only going to commit $500 or $600, that might make you miss out on a higher price Tesla trade that we might have from time to time, depending on the condition of the markets, right? Obviously, volatilities are up. So of course, that's another factor as to why that might raise some of the day-to-day pricing of the options. That doesn't worry me about the risk of that option getting affected that much when we're going to get out by the next afternoon, right? We're not holding them for the solid week. So we'll get out the next day by 3:30 at the latest if we haven't hit our profit target or our stop. More on those in a minute, but the idea is that we want to avoid slow movers, right? We need speed and we need that open window, and then we also need that window to shut 24 hours later. And again, I show you past performance, reminding you that past performance can never guarantee future results. Future results are going to vary, could be less than this or more than this in a comparable period looking forward. But looking backwards, you can see you just started with a $5,000 model portfolio. You did allocate a fixed amount per trade of $1,000 maximum, and we never compound that, right? So even as the portfolio grows, we don't try to grow that commitment per trade. We just stick with that same set dollar commitment per trade of no more than $1,000. You'd grow a $5,000 portfolio looking back over the past, what, 2 and just 2 and 2 years, 3.5 months. 5,000 grew to 21,880. That's a gross profit of 16,880 before commissions and before subscription investment. Both of those have come down dramatically, where you can really take great advantage of that, keep the vast majority of what you make. But the bottom line is that you've got to be consistent in following each trade call out on any system you implement, right? So what I always tell people is, you can, of course, you can watch from the sidelines and paper trade it and get comfortable with it, but there's nothing like having, even if it's just one contract at a time, to get the flavor of how this thing can work, both when it works for you and where it works against you, right? There's going to be winners, there's going to be losers. There is no perfect system. Anybody who tells you there is, you should probably not walk but run far away, right? There's going to be times where you have to manage losses, manage risk. That's what keeps you in the game. That's where the pros separate themselves from the amateurs, because they can manage losses better, lose less in tougher environments, make more when the wind is at your back, right? So the idea here is that you show what it grew to before commissions, before subscription investment in that period from January of 2023 through today on all closed trades, never compounding the amount invested per trade. Past performance never guaranteeing future results. So let's talk about these setups. 2 bullish ones, 1 bearish one equals 3 different price action patterns based on gaps, based on candle momentum, basically. Are we getting the momentum moving in our favor? Are we getting it moving to the upside for calls, to the downside for puts? And if we don't see those patterns, then no action is the rule, right? So you've got to get the patterns that tell you you've got an edge. If you don't know what your edge is, you shouldn't be trading or investing if you don't have a clarity on what your edge is. So the idea is that get clear about a system edge and then steadily execute it. So I can't give away the exact settings here, but when you become a subscriber, we actually do give you the exact settings. We give you the rules and a rule sheet for the system for both the bull and the bear trades. It's just required as part of our terms of service that you keep that information confidential for your own benefit and are not out there sharing it across the webosphere, right? But the idea is we want to maintain our edge. But we've got a select group that we want to share that with. Once you become a subscriber, you're part of that insider group. But the idea is that, look, we're using a simple 20-bar average as a filter, okay? So that will give you that, right? That's on a daily chart. What's a 20-bar, 20-day average basically mean? It's about the last month's worth of activity. It could be 20 or 21 days that we've had, looking back that we've been trading, not counting holidays and weekends. But the idea is that then we're kind of factoring in, okay, if we've been in a bull mode, if we've been in a bear mode, then factor the price action against that past month's trend to determine if we're getting confirmation either bullishly or bearishly. We do put a little hint out there that bearish trades require some extra confirmation. Bearish trades can be a little trickier. As the old saying goes, stocks take the escalator on the way up and they take the elevator on the way down, right? So bearish trades can actually see even greater speed of movement sometimes on the downside, which can be really fun when you catch them right. but you know also that history says that generally speaking, especially with Tesla having been such a good stock over the long haul, that yeah, you're not going to want to be hanging around bearish trades very long. This is part of why we have such a short time window from one afternoon to the next afternoon. We're not giving ourselves that much room to either be proven right or wrong before we just say pull the plug on that particular trade example. So let's look at some more trade examples. You can see here's one back in mid-December. We did get our 100% profit target. So, and you can see, one of the beauties of these quick option trades is that you don't have to catch an exact bottom or an exact top. You're trying to catch a sweet spot. You're trying to catch where speed continues to be your friend and can keep on accelerating in your favor, right? So in this example, you can see that Tesla is getting lots of higher closes versus where we open. That's what those white open bodies show, is that you got upside momentum building, at least for a couple of bars there. And you can see here that as we get in on that second one before the close, stock trading in the neighborhood of about 464 or something like that. And of course, that was a lot higher than where it is now in the 250-ish range, right? But the idea is that we're just trying to catch that next day's action, right? So when we go in and buy an option, we recommended the 477.5 calls. We said get in for 750. And so right away, when you get in for 750, that means even just trading one contract for $750, your first goal and your first and only upside target is sell your whole position at 100% gain. So whatever you get in at, multiply times 2, there's your target profit. And so for us, we were putting it out there to exit at 15. Look what the stock did. The stock went from about 464 to about 484 minus a penny here at that high, right? So it went up 20 points the next day. Our 477.5 calls, you say, well, those things didn't go 20 point or 15 points in the money. So how did you get your profit? Well, guess what? There's still a lot of time premium with these, right? So the idea being that, hey, we get up on a 20-point move. Generally speaking, for a near the money option, I might expect to have a delta approaching 50%. What does that mean? It means that when the stock moves a point, I get about half of that in my option premium. Stock moves up 10 points, I get about 5 points of that in my option premium. In this case, stock moves up 20 points, I get about 10 points of that in my option premium. Give or take, could be a little bit less in this example because we were slightly out of the money when we recommended it. Even if it was 40%, do your math, you can see, get a 20% move, you got 40% delta, that would be 8 points. We got 7.5. We went from 7.5 to 15, right? We made $750 on every contract that you purchased on that trade. Even if you bought one, you made $750 before commission, which, like I said, on one contract would at most be $2 round trip. So the point of all this is that speed. We're getting that speed, and you don't have to be perfect. You can throw your perfection Jones and put it on the sidelines and say, look, our objective is catch the continuation that we expect in momentum. Here's a downside momentum examples where you see that previously the stock moving down had already broken our moving average filter, right? So we're only going to be looking for downside trades through that. And you see that we're getting that steady downward momentum. Stock finishes about 227. We're buying the near the money 226 and 2/3 split adjusted puts. We paid just 405. So if you're putting $1,000 in, that means you get 2 contracts and you'd pay $810. Now, we don't sell one at one target and then the other at a different target. We say when you can get a double or better, take your whole position off the table at 100% gain or better. You see it gap down big the next day, went from 227, opened here about 220. And we're just saying, okay, well, that right away, right off the open, we're like 3.5% to the good. Well, that's good for a 100% gain, 109% and change for us that next morning. So we don't try to hold and hope that it will keep on going. We say, look, when you get that bird in the hand of the double, you take it and you run. Now, some trades will not get to the 100% by the next afternoon and may not get to the stop either. This one was working higher after initially opening lower. And so it's important that you've got enough wiggle room to not get whipsawed out of a trade. And so that's why we give ourselves typically a stop level of 50% against us, right? We're targeting a double, so we want to target about half that for our stop. So if we hit down 50%, we'll go ahead and hop out. But in this case, you see we're buying, we got the big, huge breakout, right? We got that really powerful breakout. We've now moved above that average, and you can see that stock's finishing here near 260, So you can see in most of these cases, we're buying a little bit out of the money, buying the 267.5 calls. We paid 585. So if you're investing $1,000, you only get one contract for 585 bucks. The second one would push you past your cap, so you can't do that. And while it opens against us by a few points, and then quickly flips back up, trades on up near the strike price, right? Even a little bit above our 267.5 strike. And so we're getting about a 7-point move. We're making about $2.50. $2.35 officially, 235 bucks on the one contract for the next day. It's not by any means gonna be something that's dramatic in any one trade like that, but it's saying, hey, it still knocks out a 40% gain the next day. Would you take 40% in a day? I hope so. The idea being that that compounds still very nicely, and we're controlling the risk in case something flips on us. We've got a plan for that. Now, on this example here, you see that we're breaking down again. So you can see that we picked it up as we got that breakage the prior day and then the breakage again here. So that filtering that, getting that 2 days in a row, stock trading back here around 162. We were buying the 162.5 puts, $3.80. So that would again get us 2 contracts on $1,000 invested, 760 bucks, and we get out at 765 for 101% gain when it does gap down the following morning. Goes from 162, opens here around 157. So it's down about 5 points, which again is about a 3% move in your favor, good for 101%. You see that's like a 33-to-1 leverage ratio. Regardless of what happens in future days, I don't care. I just want to get that double where we get the double and then control our risks the rest of the way when we don't, right? Here's another one where we called it out again for a smaller gain, right? It had the gap down. We had 2 red candles in a row, meaning we closed below where we opened 2 days in a row. So we're now about 150. Volatility starting to heat up here, so we're having to go out of the money and buy the 143 puts. That same of just under $4, 395 bucks to get 2 contracts in. By the end of the next afternoon, you make $1 or $100 a contract. In 2 contracts, you make $200, 25% gained for 24 hours of work. Stock had worked from 150 down towards 146. So you say, okay, well, at most it was maybe 3% move in your favor. Still made 25%, nothing to complain about. We like to get 1 to 2 new trades a week, or maybe about 7 new trades a month has been our historical average. And the nice thing is you can see some back-to-back opportunities. What was interesting is into the election, you actually saw that we were starting to pick it up as an opportunity right before the afternoon when the election results are going to come out that night. All the everybody's voting and the precincts are going to be reporting that night around the country. We said it's worth the risk, and it's kind of like an earnings situation, right? I mean, it's one of those that if things go the right way, and this is setting up like that they indeed are getting reaccumulated. We got the retracement back towards the moving average, but essentially we held it. Then we got the nice reversal back up. We said, look, this is something that just over 250 we think is worth trading. We bought the 262.5 calls for 4.75. So on $1,000, you'd get 2 contracts in for 950 bucks total. We're looking for a double. Guess what? You do get the gap here. And of course, you could have made even more afterwards, but we were happy with our gap result because look, we finished there just over 250. We bought 262.5, and look what happens. It opens here at like 285, right? It's about 20 points in the money plus, and we're getting out of 23.65 and taking down a 397% gain. That's an outlier. That's not going to happen that often, obviously. But that's one of the benefits of buying options, is that there will occasionally be bigger gaps than your 100% target to where you can even exceed that. And so that's something that's kind of worth from time to time taking advantage of where appropriate, right? We would never force a trade, but the trade was the right setup. And then we hopped back in the following day. You see that we're getting another positive setup here where now the stock's trading about 295. We're buying the actually we got in right after the earnings gap actually, so now we're about 290. We bought the at the money 290 calls. It goes to about almost 300 that next day, about 10 points in the money. We close it down for 1050 for the 100% gain on that second follow through bar there. If that wasn't enough, the bars keep on triggering, right? So this is more than 2 examples. Here's another one where we got in then on the 7th, 570 in the 307.5 calls. You can see the stock was trading about maybe 295. So now we're getting more out of the money. We're still paying a little more than $5. That would get you just one contract, but still, even one contract here made you 101%. In this case, about $580 the next day. And then if that wasn't enough, one last time on that chart, closer to 320. Now we're stretching out to the 337.5 calls. Obviously, volatility as it keeps increasing, right? We're going a little bit more out of the money. We're even paying a little bit more. So even if you just got one contract, look what happened. It went from 320 the next morning. It gaps open 347 or so, right? So that was a huge gap up, 248% gain. So that was particularly important because, of course, that was the evolution of the post-Trump victory, where the market was just continuing to evolve in Tesla's favor based on Musk's proximity and influence potentially on our new president. So let's face it, though, not every trade is going to be a winner. Let's look at an example and a loser. So like I said, 50% loss, right? So this is kind of a retracement strategy. This is the other kind of bullish setup that we look for, which is that the trend is up, but we do get a pullback. You can see that as we retrace that day, we then show kind of a nice intraday reversal where we end up closing back up on the day, still above the average. Our data says that still suggests that you can get some follow through upside reversal. Didn't happen in this case. It went from 249 and then popped down the next morning to 244, kept trending down just under 240, and we're getting filled at our 50% stop loss, right? So in at 570, out at 280, you lost, in this case, 290 bucks per contract. On a $1,000 invested, you just have one contract, so you'd be down 290 versus a number of examples I showed you where you're up a lot more. But still, the idea is that, okay, almost 51% loss, it's going to happen, right? But I'd rather keep a stop in there around 50% loss versus the potential for doubles or more that we can make when it's moving in our favor. Another trade we want to show you, the gap past our target for a larger than expected winner. Here is kind of that retracement pattern I was just telling you about, bullish setup. It's had this several days down, but look, now it's getting the retracement. You're above the moving average here as a filter. So we're hopping in there, saying that now the momentum is turned in our favor. We want to be on the calls. Stock's near 320. We buy the 330 straight calls out to the following Friday's expiration. And you can see that we paid $710. They turn into $1,765 for more than $1,000 gained, $1,055 profit, 148% profit. When it opens up the next day, well beyond our 33.30 strike price, opens close to 340, about 10 points in the money, and it still has a good chunk of time premium in it as well. So like we said before, if you started at the beginning of 23, you just invested $1,000 a trade maximum. You didn't get greedy, didn't overcommit your capital. You also didn't undercommit your capital. You stuck with the system through the invariable ups and downs. You can see that a $5,000 portfolio would have grown to $21,880 for a 337% gross return. That's a gross profit before commissions, before subscription investment of $16,880. So again, the future is going to vary. Remember, past performance can never guarantee future results. But you can see the idea is, how do you get that kind of growth into your portfolio? That's our objective, is to make sure that we're growing. And so what we set up for you is a special Traders Corner special flash sale. It's available until midnight tonight for Traders Corner viewers here. And so what we do is we call it these real-time trade alerts. Obviously, it'd be wise to get signed up for it before about 3 o'clock today. So you still got others you can watch here beforehand, but saying, you know what, if you want to get set up for brand new trades, as soon as they signal, like I said, our signals come out around 3:30, give or take. So what we've got for you is, if you were buying the Tesla options trader off of my website at bigtrends.com, you would pay a lot more than what I'm going to show you here. You'd be paying basically almost $300 a month, $297 a month times 3 months would be an $891 value. That would get you access to our settings and rule sheets. You know exactly the settings. You can follow along as a home gamer and fellow trader on your screen. You get the ability to plug that in. Also give you weekly video coaching, guiding you through what we traded in Tesla the past week, what we're looking for the next week. And then you also get access to me and my analyst team via dedicated special email that reaches us during the trading day anytime you got a question. It'd be $891 in value. You can see I'm slashing it here today for you, down from $891 to just $177 for 3 months. That's not a month, that's a 3 month, next 90 days, super special value. So think about it that way, and you say, well, getting 90 days of access for under $180, that's less than $2 a day. Of course, you're going to get the ongoing resources, ongoing support. You can see the link that we've got here on the bottom is not a www link. So make a note of that as you note it on your particular, typing it in to your particular browser window, that it's members.bigtrends.com/corner. And so thank you, Traders Corner, for having me as part of this great Easter special, and an early happy Easter to everybody, however you like to celebrate. Hope it's a great weekend. Looking forward to it. Remember, the markets are closed on Friday for the Good Friday holiday in advance of Easter. So point of this is that, okay, let's look at that order page for a second so you can see exactly what you're getting here. You go to that order page, it should pop up to a nice, simple, clean page like this. Remember, they're talking about 3 months of trade alerts here. If we're doing about 7 trades a month, it's be over 20 trades in the next 90 days, right? And the key is quality. I want to make sure I've got the quality. I want to make sure that I'm not forcing trades. I want to make sure that the edge is always maintained. Just because you have an edge does not mean you're going to win every time, okay? But if you have an edge and you execute your edge properly, any system with a positive edge executed consistently is something that you can gradually and eventually take money out of the markets, even if you have to go through some occasional bumps in the road along the way. So the idea here is that, okay, let's really focus on how you can, put this to work. And more importantly, let's focus on how you can keep educating yourself, because it's not just about calling out trades for subscribers for me. It's about making sure you really understand the rationale, what's going on underneath the surface, what's the structure setting up like for Tesla here in the next 24 hours, up, down, or sideways, right? We're not going to try to trade sideways. We're only going to trade when we think we've got a positive, meaningful up advantage for calls or a meaningful downwards advantage for puts. So when you get signed up, as you can see, you can agree to the terms and conditions, which are hyperlinked there to show you how we've been doing business for over 25 years and counting. You can see that you've got a PayPal choice down here as well. So that's how I do a lot of my online purchases. Click through the PayPal if you've got a PayPal account. You can sign in and then choose how you want to fund your purchase, and then boom, 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 a few clicks later, you've locked in a full 3 months of value for only $177. That's less than $2 per calendar day. So the idea being that, hey, whether you put your payment info in on this page, which is secure, or if you do that, of course, you got to get your billing information address to match up. Make sure you get your email information in correctly. Double check that email before you submit it, because that's the big way we're going to communicate with you at first. And then over time, we of course can assist with any other things you want to add, like for example, the mobile messaging to your smartphone is an extra backup delivery vehicle, which I really like, that mobile messaging. So you know exactly when to get in, exactly when to get out, and never miss an email, never miss a message. You're up to date when it's time to act, typically in that 3:30 window on a given trading day. Now, we also show you our special customer service email here, clientcare@bigtrends.com, as well as our 800 Big Trends number. So if you can't remember this 800-244-8736 toll-free number, just remember 1-800-BIG-TRENDS. That'll get you to me and my customer service team. And that is really clean and easy and spelled out. Now, this is just for the next 90 days. This is not an auto bill. You will not be charged again automatically. I'm counting on that you'll like it enough that you'll want to keep going. You'll want to call back and say, how do I get a longer term subscription? Obviously, we're committed to giving you great value for your investment in Big Trends programs. Like I said, on our 26th year serving our Big Trends community. So we're all about making sure that you keep the vast majority of your portfolio working hard for you, and that these subscription elements are relatively manageable, minor costs, relative, of course, to the size of what a winner can do, right? If you're investing $1,000, you You get a doubler, that's $1,000 profit off of one trade. Even if you only get it for $500 or $600, $500 or $600 profit, you can easily pay for that 177 off of one winning trade. A few of the frequently asked questions that we get on the FAQs, and I'll see if we've got other questions as well here in just a moment. But basically, you look at this and say, okay, so like I said, after 3 months, Jonathan, yeah, you can just reach out to us and will not be an auto charge. Okay, I'm a big believer in making sure it's really clean and easy for you. So basic principle here is just a lot of people say, oh, buying calls or buying puts, that's risky. And let's face it, every trading strategy you do involves some element of risk, right? If there were no risk, you would probably get the cash-free substitute reward of about a 4% money market rate right now, right? And so the idea is that, okay, we're looking for a lot more than that. We're looking for something that's got major growth while managing the risk. Okay, that's a big part of it. So that's why people come to us here at Big Trends, to help guide you through the day-to-day volatility and not get like a deer in headlights, that you can always take proactive action. When to get in, when to get out. We'll guide you every step of the way. We never leave you hanging. We never just throw stuff out and then don't talk about it again. I see a lot of services, surprisingly, that do that. That's never been my approach, and my philosophy is, we want to clean it up, move it on. Whether it's a winner or a loser, we'll let you know, and then move on to the next opportunity. How will I receive the trade alerts? Real time via email, and then we also have the WhatsApp technology for mobile messaging that we use there. When do we send these test options trades? At 3:30 p.m. Eastern on any trading day where we have a valid signal, right? If we don't have a signal, there will be no trade. So it's only going to be, like I said, maybe 7 or 8 times a month is kind of our objective here out of the 20 or 21 trading days that we have. When are these trades closed? Using the time stop the following trading day at 3:30 p.m. Eastern. That's New York time, Wall Street time there. How many trades will you get? We've been averaging 7, so it could be a little more or less, but 7's a pretty good average number. There will never be a day trade. This is a really nice thing where you say, okay, we know that our objective is to get in late so that whatever follow through we have or don't have, it's not something that we have to ever sweat any kind of day trade being marked as a day trader, right? That's not really our objective here. You saw our recommended average entry price on a Tesla options trade in 2024, just $5.19, meaning $519 for each option contract controlling each 100 shares of Tesla stock. You also get these bonus educational resources, the weekly video coaching I do to recap what we did in Tesla, call outs this past week and what we're expecting for the week ahead. You also get my settings and rule sheet for the Tesla options trader service, so you know exactly how you can follow along at home. And then you also get a dedicated email that we'll send out to you once you get signed up that gets to me and my research analyst team. Anytime you got a question on a Tesla options trader signal and what we're looking at, what our expectations are, we'll reinforce typically that to our entire list anytime we've got a change in what we're going to do to an existing position. But the idea is that, hey, we're always there for you anytime you've got a question. Like we said, what just one trade can accomplish for you, like the example here where we made over $1,000 on a gap beyond our 100% profit target, made 148%. That trade, even on just one contract entered, was good for more than $1,000 in profit on that Tesla 330 call that we called out for subscribers. So the idea of this is that, whichever way you're trading, bull or bear, there's going to be opportunities, times where you should be in and times we should then be out and waiting for the next opportunity, right? So that's a big part of it from where I sit, is that we've got to align ourselves with where the market wants to go, where the stock is being taken to the upside or to the downside. So in this perspective, you see that a $5,000 model portfolio grew to over $21,880. That's gross before commissions, before subscription investment. Past performance doesn't guarantee future results, but as you know, it's all about following the system. So like I said, I'm out of time, so I'm going to go ahead and just remind you, here's the special. We're taking $700+ off of the retail value of $891, get you down to $177 today before midnight when you go ahead and pull the trigger and lock in 90 days of access, less than $2 a day over the next 90 days. And we're going to be committed to guiding you through every Tesla trade, win, lose, or draw, bull trades, buying calls, bear trades, buying puts. We're not going to be biased. We're just going to follow the system and guide you through. One of the great trading stocks in my trading career, I've been trading for 35 years in options plus, and Tesla has become my favorite, right? It's just one of those that just moves so quickly, and now you just have to harness that. So I'm gonna hand it back to Anthony so you can get on to introduce our next fellow trader and speaker. Thanks for having me, Anthony, and everybody. Great to be with you. Keep trading well and staying well. See you in the Tesla Options Trader Service.
Thank you, Price. We truly appreciate the generous resources you've offered to our community. What a valuable gift. Your laser-focused strategy makes scanning and execution so much simpler. We really appreciate it.
Thanks, Anthony.
Next, we're thrilled to welcome Jeff Tompkins, professional hedge fund manager and founder of Altos Trading. If you've ever been frustrated by inconsistent options results, Jeff is here to change that with a strategy designed to profit in one day, no matter the market direction. Let's hear how it works. How you doing, Jeff?
Hi, Anthony. I'm doing well. How are you?
Good, good. I need to make you a presenter here, sorry. All right.
All right,
you.
you should have my screen. Everything look okay on your end?
Yes, everything looks good. Thank you.
Assuming you can see the screen okay. All right. Well, thanks again for having me. Great to be here. We will be discussing the golden one-day options trade. These are power play trades for volatile markets. This is a timely topic and a relevant strategy for current market conditions. So we're going to go ahead and dive in. I will do my best to leave time for questions at the end. So please get your questions ready and get a pen and paper handy. We have a lot of great stuff to cover. Before we do, I'll read a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Of course, need a broker to trade securities and options and must meet suitability requirements. We'll be going over some various results in our session today, and I will be sharing real world, real money results right out of my personal trading account. But just know that anything I share due to the time critical nature of trading, brokerage fees, activity of other traders, I don't guarantee anyone will mirror that performance. And of course, this isn't intended to be considered as individual investment or trade advice. So by the end of our session, you're going to discover one trade setup that has the potential to profit regardless of whether the market goes up or down. Now, these are opportunities that occur on a regular basis with astounding reliability. You just need to know how to spot them, and I'm going to demonstrate that for you. So you're going to walk away with a lot of knowledge, an actionable strategy. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. So let's start out by talking about some of the difficulties that we encounter as traders. There are a host of difficulties that we face in the markets. One of those, when it comes to directional trading, is accurately and consistently forecasting and timing market direction. So that's obviously a big challenge that we face. Obviously, if we had a crystal ball and we knew exactly where the market was going to go and when, that would make things a whole lot easier, right? It wouldn't guarantee our success, but it would be a lot more difficult to fail if you had that crystal ball. The reality is we don't. And again, markets are, we're going to talk about volatility on the session, but markets are becoming more and more volatile and more erratic, and this creates challenges for the directional trader. This was recently put out by the St. Louis Fed, and it's an interesting graph that's looking at equity market volatility over the course of about a year. So I'll point a couple things out here. One thing that we notice is that volatility fluctuates significantly. So we call this volatility contraction and expansion. We'll talk more about that as well. But I just want to point out that volatility is increasing dramatically and then subsiding dramatically, and this is where the challenge comes in as it relates to directional trading. The other thing is that over time, volatility is increasing. Okay, so this is from about October 23 to September 24. We see that equity market volatility is trending upward. Okay, so again, this creates some challenges for us. This can result in situations that we call whipsaws, right? You get into a directional trade, it may move in your favor for a period of time and then it reverses on you. So what if you don't need to know whether a stock will go up or down or even when? Okay, we're going to eliminate this difficulty using the golden one-day options trade. So what I'm going to give you today to make this all easier for you is, number one, you'll discover the golden one-day options trade. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to apply the setup to any optionable security. So this strategy can be applied to any asset that has options that trade on that asset. I'll give you some real world, real money trade examples. So as I mentioned, I do my very best to use real world and real money examples to back up what I teach. And then I'll show you how you can get expert guidance to do this for yourself in the live markets. All right, so before we dive in, I'll give you just a brief background on myself. Again, I'm Jeff Tompkins. Welcome everybody, great to have you all here today. I have over 2 decades of experience trading the stock, options, and futures markets. Received my professional training as an intern at the trade desk back in the early 2000s at Morgan Stanley. And about 10 years ago, founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, as Anthony mentioned. I do manage money for my clients at Altos Capital. And the Golden Monday options trade is one of the strategies that so one of my core strategies and one that I deploy in my hedge fund. And a lot of the methodologies and kind of tips and tricks I'm going to give you on the session today are those that I, again, use in the hedge fund and really credit for the long-term success that we've had. We've never had a negative year, and we've traded through some really challenging market environments, including the COVID crash of 2020, the bear market of 2022. And we've always come out in the green at the end of the year. So I'll walk you through kind of some of the background of how we achieved these results. And as you can see, I'm also a keynote speaker and educator. This is me at one of the recent International Traders Expos, giving a talk to a large crowd down there. And I really love doing this. I love educating. Trading can be, a lonely endeavor. And one of the things I love to do is to watch struggling traders transition into consistent, successful, profitable traders. So that's why I'm here today and hope to help you achieve. All right, so what if we could profit if the market goes up or down? Okay, we're gonna throw that difficulty we talked about in terms of trying to forecast or predict directional movement and time the market out the window, okay? And so this is what we call a market neutral strategy. There are no special indicators needed, okay? You can throw your MACD, your RSI, your Fibonacci's out the window. We don't need any lagging indicators, okay? This is all going to be done with a very basic statistical model, okay? And there's no complicated chart analysis needed either. In fact, you can do this trade without even referencing a price chart, okay? We are going to incorporate a little bit of chart analysis to kind of build in an extra edge, but it's not required. There's no guessing trend direction, so we don't care which way the market goes. And think about the current market environment, right? What a weight off the shoulders that is, right? We've seen dramatic whipsaws over the past couple of weeks. Markets are reversing on a dime. There's no need to time the market, okay? We're not using any seasonality or trying to figure out when the market's going to go up or sell off. Okay, there's no uncertainty when to take profits. So anytime you get into the Golden Monday options trade, you're always going to know up front what your profit target is. Okay, and this is all a proven strategy based on statistics. So we're going to be using a very simple and basic statistic that is highly underutilized amongst the retail trading crowd. Okay, so just having this one piece of information can make a dramatic difference in your understanding of the market and your trading results. Okay, so you're going to discover why volatility is one of the only leading indicators of impending trends. I'll show you how to identify when markets may be primed for a big move, how to build a trade that can profit regardless of which way the market goes. And we don't care if the market, takes off to the upside or, if it crashes. Either way is fine. We don't care. Okay, I'll show you how to set accurate profit targets with limited defined risk. So the Golden Monday options trade is a limited defined risk strategy. We always know our risk up front. If we adhere to the strategy, it can't be exceeded. All right, and that's really important because it helps kind of address the fear and uncertainty that we all face when we enter a trade. I'll show you how to play smart money trade. So when I say smart money, this is information and strategy and methodology that is utilized by your institutional, traders and investors, your hedge funds. And again, I think it's highly underutilized amongst the retail trading crowd. And there's a whole lot more that we're going to cover. So again, get your pen and paper handy, get ready to take some notes. Let's start to dive in. We're going to start out by talking about volatility. All right, so there are different types of volatility. Mainly there are, we talk about volatility in terms of historical volatility and implied volatility. So we're going to specifically focus on implied volatility, which is a forward-looking predictive indicator. So it's basically the option market's forecast of future price movement, and it tells us with a high degree of accuracy how much an underlying asset's share price is expected to change by a future date. So you can imagine how valuable that information could be in terms of defining risk, right? Setting realistic profit target goals, choosing an appropriate strategy to trade, okay? All these things. Now, this data is readily available for any optionable security. So the options chain is going to actually tell us the exact number of points the market is forecasting the asset to move up or down, right? And again, this is just, it's surprising to me how few traders are aware of this. And the ones that are often don't utilize it. And so even if you don't trade options, this is extremely valuable, useful information to have when making trading decisions. So let's start out by diving deeper into implied volatility and using it to forecast or predict a move. All right, so if you're not familiar with implied volatility, I'll kind of give you a high-level overview. It's basically a measure of how much the market expects the price of an asset to fluctuate in the future, and it's a key factor in determining the price of an options contract. So traders typically use IV or implied volatility to gauge whether options are cheap or expensive and to determine the possible outcome of an options trade. So IV is influenced by supply and demand, right? And the market's expectation of the amount a stock will move. IV tends to increase ahead of a major announcement or event and decrease after the event has passed. And the example I like to use is a company's quarterly earnings release. So as you're leading up to that quarterly earnings, right, it's a binary, unknown binary event. You're going to see implied volatility increase because there's uncertainty about the outcome. Once that binary event has passed, or once the quarterly earnings release has been made public, you'll see implied volatility rapidly decrease. We call this volatility crush. Okay, so that's kind of an important concept to understand as we get into the golden one-day options trade. Now, there are different ways to measure implied volatility. When we look at implied volatility percentile, right, we measure it on a scale from 0 to 100. And so this is kind of my interpretation of implied volatility levels. And I consider an IV of 0 to 20 to be extremely low. 20 to 40 is quite low. 40 to 50 is more in the medium range. 50 to 80 moderately high. And anything above 80 I consider to be extremely high. Now, IV forecasts the expected move up or down of the underlying asset. And it does so with remarkable accuracy, but it's not perfect. And that's okay. We don't need it to be perfect. But we want to have some idea of what the expected move in the underlying is for a number of reasons. And those are going to become clear to you here momentarily. So it's important to know that IV doesn't tell us which direction the underlying stock will move. Okay, it just gives us an expected move, and it could go in either direction. And that's perfectly fine. With the golden one-day options trade and market neutral strategies, we don't care where the directional movement is. Again, the stock could sell off or it could skyrocket. It doesn't matter. All right, so let's start to dig into an options chain and see how we can apply this basic statistic, okay, and use implied volatility to predict the move. So this isn't a current chain. This is from back on October 6th. It's in options chain of the SPY, the S&P 500 ETF. Okay, so what we're going to do is we're going to go out to the next expiration cycle, okay, the October 7th expiration. And I'm doing this out of the Thinkorswim platform. This information might be found in a different location on your respective platform, but you should be able to find this, okay? Over to the right of the expiration cycle, we're going to see a percentage and a number. We'll ignore the percentage. It's basically an annualized volatility percent. What we want to pay attention to here is the number to the right of that percent, okay? And that says plus or minus 3.982. Okay, we'll round up here. So we can just round up to the nearest whole number, 4. So what is this number telling us? It's telling us that back on October 6th, okay, the option market is expecting the SPY to move up or down by roughly 4 points over the next roughly 24 hours by October 7th. Okay, so that's the expected move in the SPY. Good to know, right? That's could be very valuable information. If we're going to trade the SPY or trade options on the SPY, right? It can help us select an appropriate strategy. As you'll see here, it can help shortly. It can help us select strike prices for our option strategy. It can help us set realistic profit target goals. It can help us gauge the level of expected volatility. All of these things. If for some reason you're not able to find this statistic in your option platform, there's kind of a quick and dirty way to estimate it, and that is simply to add up the at-the-money straddle. Okay, what that means is if you just take the underlying share price at this point in time, the SPY was trading at 572.98. Again, we'll round up to the nearest whole number, 573. So we'll go to the 573 strike, and we'll just add up the offer on both the call and the put side. And that's going to give us a pretty rough estimate of the expected move by that expiration date. Now, let's start to build in some market neutral strategy into this this basic statistic. Okay, so there are a number of market neutral strategies out there. We'll go through some of the common ones, some of the drawbacks, and then we'll start to get into the golden Monday options trade. So one common market neutral strategy is an iron condor. So an iron condor is simply the combination of a bull put and bear call credit spread. And it has the potential for consistent gains, but it carries high risk relative to reward. So there's an unfavorable risk reward skew. And that means that you might risk $5 to make $1. And you may have a series of consecutive winners, but one bad trade can wipe out those winners. So there's nothing wrong with iron condors, and they might be right for the very specific market environments. But there's challenges behind this strategy, and that's mainly the unfavorable risk reward skew. So we're not going to be using iron condors for the golden Monday options trade. Another common market neutral strategy is an iron butterfly. An iron butterfly has limited risk and limited reward, and it basically profits when the underlying asset stays within a narrow range. Okay, so this again introduces a challenge, right? We have to be pretty precise and be able to predict where the underlying asset is going to finish by expiration. So we're not going to be using iron butterflies. Another common one is a short strangle. Okay, so a short strangle is simply selling out of the money call and put premium. It has limited profit potential. That's limited to the credit you receive for putting the trade on, but it has unlimited directional risk. So if you do get a significant directional move, this strategy can experience heavy losses. Okay, so we're not going to be using short strangles. What we are going to build into the golden Monday options trade is a long strangle. So a long strangle has limited risk. It's always capped and defined at the investment you make in the trade, and it has unlimited profit potential. On top of that, you don't need to guess the trend direction. Okay, this is market neutral. The underlying asset could skyrocket to the upside or it could tank to the downside. Either way, it doesn't matter. We can hit a big winner in either of those scenarios. So the long strangle is what we're going to incorporate in the golden Monday options trade. So I'm going to kind of walk you through what this strategy entails if you're not familiar with it. Okay, so a long strangle is an option strategy where the trader buys a call at a higher strike price than the underlying share price, and I put at a lower strike price, same expiration date, same underlying asset. And it's used when the trader believes the underlying asset will make a large price movement, but is unsure of the direction. So again, we don't care which way the underlying asset goes. It could trend up, it could trend down. The strategy has limited defined risk, as I mentioned. Okay, so it's limited to the investment we make into the strangle. And it has unlimited profit potential to the upside and it's substantial profit potential to the downside. It's not unlimited to the downside because, of course, the stock can't go below zero, right? Theoretically, a stock could go up indefinitely. So, okay, this is good news for us. What's also exciting is we don't need to predict the trend direction. Okay, so this is not like buying a call where you have to be exactly right on your timing. Okay, you also have to be right on a lot of other things, right? This is where your Greeks, your delta, gamma, theta, vega, rho come in. There's a whole lot of things that have to line up if you're just a call buyer or a put buyer to be profitable. Okay, we're going to eliminate that. The trader can profit on a significant move up or down in the underlying asset, okay, either direction. Now, if a strong directional move does not occur by expiration of the option contracts, the strategy can also be adjusted to mitigate risk and even generate a net profitable outcome. I'm going to show you how we achieve that as well. So there will be occasions where you just don't get a directional move. So it's important to always have a backup plan and know how to adjust the trade to either, again, mitigate risk or in some cases, even turn it into a net profitable outcome. And I'll talk to you about ways that we've actually done that recently. Now we're going to incorporate one additional thing into the golden Monday options trade, and that is 0 DTE or 0 days to expiration. Okay, these are relatively new to the options world. In fact, in 2022, the CBOE or Chicago Board of Options Exchange announced that it would issue weekly options with expiration days on each day of the week. Okay, this isn't available for all optionable securities, but they've rolled these out for your index products, your S&Ps, your SPY, your SPX, NASDAQ, your QQQ, and are gradually rolling these out to other asset classes. So this is really exciting. Okay. And I'll kind of talk to you about why that is. But we need to understand a few things about 0 DTE and why we're incorporating this into the golden Monday options trade. So these are option contracts that exist for a single trading session and then expire on the same day that they're traded. what's interesting is that, and this was put out recently by the NYSE, a lot of the volume now is centered on short-dated contracts. So the NYSE put out a stat recently that showed 56% of retail options volume is in contracts with 5 or fewer days to expiration. Okay, so interestingly, a lot of this volatility that we just recently experienced in the market has in large part been driven by short duration 0 DTE options trading. Okay, so if you're an option seller, that may not be a good thing. Okay, if you're selling short dated premium, you're going to get exposed to a lot of gamma risk, and we're going to be talking a little bit about gamma here. Okay, but this is the reason that we're using 0 DTE, because as an option buyer, we can use this to our benefit. Okay, and that's because 0 DTE option prices are significantly impacted by short-term moves in the underlying security. So I like to use the example, you have trader A who buys a call on, just pick your stock, right? Let's say buys a call on Apple, right? At a short, short duration. So let's say a week out in expiration. Then you have trader B who buys that same call, same strike price, okay? Same underlying asset on Apple, but buys it out at a 30 or 60-day expiration cycle, okay? An equivalent underlying move in Apple is going to have a drastically different outcome on those two positions, okay? So the expiration cycle has a big impact on the movement of the underlying. What that means for us is significant profit potential if you know how to take advantage of it, and you will know how to take advantage of it. So we're going to harness this to our benefit. And the reason is, as I mentioned, related to gamma. Okay, so I want to give you just a basic understanding of gamma in 0 DTE options. This isn't something you're going to have to calculate or really concern yourself with once you know the golden one-day options trade, but I think it's important for basic understanding. So gamma is basically the rate of change for an options delta based on a single point move in the delta's price. It's a risk metric that measures how quickly an options delta changes in response to a $1 change in the price of the underlying asset. So for 0 DTE at the money options, gamma is at its peak, which means that small changes in the underlying asset price can lead to large changes in the options delta. So this is why I was kind of giving that example of trader A and trader B. Now this can benefit the savvy short-term trader who understands how to harness its power. So gamma risk is what a short duration option premium seller faces. Okay, it's working against them. We're going to harness this to work for us as an option buyer with a long strangle on the golden one-day options trade. So let's get back over into this option chain of the SPY. All right, we're going to start to kind of understand how to use this basic statistic to build a golden one-day options trade. Okay, so at this point in time, the SPY is trading 572.98. Again, we'll just round that up to 573. We're going to go 1 day out in expiration to October 7th. Okay, so this trade can be done 0 DTE within the same day, or you can go out to the next expiration cycle the next day. So in this example, we'll go out to October 7th. Okay, we've identified that the option market is expecting a move up or down of roughly 4 points. So what are we going to do with that information? We're going to use it to select the strike prices in our long strangle. So we're simply going to, again, we'll round here, we're simply going to add and subtract 4 from the current underlying share price. All right, so we'll start by adding, right, 4 to the underlying share price. And this is step 1, to select our strikes and buy a call and a put near the outer edge of the implied move. So if we add 4 to the underlying share price, that's going to tell us to buy a 577 strike call. We then subtract it, and it's going to tell us to buy a 569 strike put. Okay, we know with a very high degree of accuracy, certainty, that this expected move is going to be at least reached and often exceeded. It's a small percentage of the time that it's not. So once we've selected our strike prices for the golden one-day options trade, right, we need to focus on trade management. This is arguably the most important aspect of any trading strategy. So we want to define our risk and our reward. Okay, we'll start with risk, right? Now, as I discussed, the maximum potential loss in a long strangle is simply the premium you pay for the contracts. Okay, so this is how I define my risk. I don't use stop losses. I don't try to guess where I should get out of the trade in the event of an adverse move. I'm not using lagging technical indicators to try to identify an area on the chart where I might get stopped out. I'm simply defining my risk by the investment I make in the trade. Now the fun part, defining the reward. Okay, we're going to target a 50 to 100% return on capital. And then this is actually a conservative ROI for 0 DTE options. Just recently, right, with the market volatility that we've seen, we're seeing 500, 600, 700, even quadruple digit percentage increases in 0 DTE premium within a single day. Okay, so this is actually fairly conservative. So we're simply going to add up the premium paid for the put and call contracts and then predefine our exit price. So there's no need to identify profit target levels on our chart. Again, we don't even need to look at a stock chart to do this strategy. We're just using basic statistics. Okay, we are going to build that in a little bit here to kind of give us an extra edge, and I'll get to that momentarily. But let's get back over to the chain now. Okay, so step 2 is going to be to add the put and call premium to determine our total risk. Okay, so we've identified our strike prices, a 577 strike call, a 569 strike put. The calls are offered at 27 a contract. The puts are offered at 66 a contract. So we simply add up the premium, 93 cents. We can literally put this trade on for 93 bucks. Okay, because of course each option contract represents 100 shares of the underlying. Okay, so this can be done inside a small account, and it's completely scalable, right? You can trade however many contracts your account size and risk tolerance allows. Okay. For example purposes, we'll use a 10 lot, 10 contracts, but you can literally do this trade on a 1 lot for 93 bucks. Okay. So step 3, okay, we've identified our risk. We now need to set our profit target goal. So we're going to add to the total premium paid for the strangle. Okay, and I'm going to walk you through, there's really kind of 2 approaches we can use here, and I'll give you my preferred approach. Okay, so the cost of our spread is 93 cents. Okay, we're going to target 100% return on our investment for this trade. So we're looking for 100% ROI in 1 trading day. Okay, so we're going to use a profit target of $1.86. Now, there's 2 approaches, as I mentioned. You can use 1 limit order, and if you hit the profit target on either the call or the put side, you'll be taken out of the trade, right? You'll sell to close both your call and your put. The other approach, and the one that I prefer, and I'll explain why, is to use separate orders on both the call and the put side. So I'll place a limit order at $1.86 on the call side, then I'll place a separate limit order at $1.86 on the put side. And the reason for this is, and again, current market environment has been a great example. When you're in volatile market conditions, and specifically when you're getting whipsaw conditions where markets are reversing, there are occasions where you can hit the profit target on both the call and the put side. So then we're looking at a 200% ROI. So this doesn't happen all the time, but it does occasionally happen. And you're basically just giving the trade a chance, right, for an even greater ROI. Okay, so I do 2 separate orders. That's going to be step 4, is to submit a GTC, that's a good till cancel limit order. If you're doing a 1 DTE, so if you're going out to the next day's expiration, you want to make sure that you use a GTC, right? So your order doesn't get canceled out the day that you place the trade. If you're doing the trade 0 DTE within the same trading session, right, you can use a day order, that's fine. But I'm just in the habit of using GTC orders. We're going to use that limit order for both the call and the put side of the strangle at $1.86. So let's see what happened in this particular circumstance. All right, so we'll go out to October 7th. Okay, this is the next trading day. And what happened? Well, remember, we didn't care whether the SPY went up or down. Okay, it could have gone either direction. In this case, it went down, and it wasn't anything crazy. It was trading lower by 0.95%. Okay, so it was down $5.44. Okay, that actually exceeded the implied move. Remember, our expected move was roughly 4 points. So in this case, we exceeded it. That's great. Okay, that is fantastic. What happened to our puts in the long strangle? Those 569 strike puts, which again, were originally offered on October 6th at 66 a contract, traded up to a high of 254 a contract. okay, within a single trading session. That's incredible. Okay, that's a huge percentage increase. Okay, so we easily hit that $1.86 profit target. Okay, so on a 10 lot, a $930 investment would result in a $930 profit potential within a single day. Okay, just using a simple strategy and a simple statistic. Here's an example of one we did with our members at Altos not all that long ago on the QQQ. So we got into a long strangle, 1 DTE at $1.38 debit. Okay, so again, this can be, if you're just doing a one lot, that's perfectly fine. You can put this trade on for 138 bucks. Okay, in this case, I did a 10 lot. Okay, so I had invested $1,380 into this trade. We put this on right towards the close of the U.S. equity session on February 11th. So I think it was within like 10 minutes of the closing bell. Okay, paid at $1.38. Now I'm in the Mountain Time Zone, so you can see by my order screenshot here, I got out of this trade 1 minute and 6 seconds into the open the next morning on February 12th. So my market exposure here was less than 15 minutes. I was literally in this trade for about 15 minutes of market exposure. Okay, got out of this one, again, a minute and 6 seconds into the open on February 12th at a 248 credit. Okay, on a 10 lot, that's a $1,100 profit. Okay, and all I did was use the expected move. Okay, but there was a few other things that I did as well. So I'm going to give you some tips here that are important to understand this. We're going to kind of tie this back into implied volatility. So we want to avoid volatility crush with the golden one-day options trade. So this is the example I gave you about the a company's quarterly earnings release. Okay, after that release comes out, right, implied volatility drops off a cliff. So volatility crush occurs after an anticipated event that results in contraction of price movement. And because it's a major component of option pricing, it can cause the options premium to decrease rapidly. Okay, this is what we don't want to have happen as an option buyer, because it can negatively impact the value of the calls and puts in the strangle. So long strangles benefit from an increase in volatility. So we want to place these trades when we expect volatility to increase or remain high. Okay, so we want to avoid volatility crush. Okay, this is where we're going to build in just a little bit of chart analysis. Again, this isn't required. You can just simply use the implied volatility percentile. You can use the expected move statistic, but there's a way to kind of visualize this on a price chart. Now, volatility always alternates between contraction and expansion. Okay, and I'll explain what that means. But we can visualize this by simply looking at the high-low range of a candle. So a narrow high-low range is going to indicate volatility contraction. A wide high-low range is going to indicate volatility expansion. Okay, so we simply take the high and the low of the candle, but we want to look at this or reference it relative to the surrounding candles. So I'll kind of demonstrate this on the price chart here. So if you look at that far left candle, right, the high-low range is relatively narrow compared to the candle to the right, where we get a transition from volatility contraction to volatility expansion. Now, as I mentioned, this is always alternating. So if we're in volatility contraction, we know with certainty that we're going to transition to volatility expansion. And you can see that here in the price chart, right? The high-low range of the candles widens, and we get a significant downtrend. Okay. Then the high-low range narrows, and we transition back into volatility contraction. Then the volatility expansion, back to volatility contraction, volatility expansion, volatility contraction, expansion, contraction, so on and so forth. Okay, so we want to enter the golden one-day options trade again when implied volatility is low and we expect it to increase, or it could be high and we expect it to remain high. Now, there will be occasions where we don't get a significant directional move. Again, it's a relatively small percentage of the time, but there are occasions where that expected move is not reached. Okay, so what do we do in those cases? Well, we can actually adjust this strategy. There are ways to adjust long strangles. So I kind of have two preferred approaches, and they involve selling premium on both the call and the put side when the market doesn't move as expected. So my two kind of go-tos to adjust a long strangle is to convert it to either an iron condor or an iron butterfly to bring in premium to cover loss on the long call and long put when the market's flat and in volatility contraction. So depending on the level of implied volatility, the time left until expiration, some other kind of variables and factors, I may convert it to an iron condor if there's adequate premium to do so, or I may sell an at the money straddle. I leave my long strangle in place, I don't touch it. Okay, add an at the money straddle, that's basically converting it to an iron butterfly. Okay, that can bring in premium and mitigate risk, and even in some cases transition what would otherwise be a losing trade into a net profitable outcome. Okay, so these are a couple ways to adjust strategies if you get caught in volatility contraction. So I'm now gonna kind of back up what I've taught so far with real world, real money examples. So I do trade the strategy inside my my personal trading account. This is a snapshot over the course of a week from my personal trading account where I actually did a golden 1-day options trade each day of the week. So I just put on one trade each day. I did this on the S&Ps, okay, and I did this with a relatively small position size. I was only trading 2 contracts, except for August 4th, I just did 1 contract, okay. I only had to adjust 1 position on August 5th. The others I just left alone. And I did this all using the statistic and information that I've given you so far, okay? And profited $3,900 in a single week on relatively small position sizing, okay? So you don't have to go crazy here and trade 20, 50, 100 contracts, right? To make potentially significant income. And these can be done within small accounts. So as we looked at in the SPY example, right, you could literally put that trade on for $93. So if you have a small account, you're just getting started out, this is a viable strategy for you. Even if you're experienced and you've been trading for a long time and you've hopefully grown your account over time, right, and you have a large account, that's, this is all scalable. So this is one of the strategies that we do in our Altos live trade room. So I'm going to introduce you to our trade room and talk to you a little bit about what we do in there. The golden 1-day options trade is one of our core strategies. We've had a lot of success with the strategy, but we do a whole lot more inside our trade room. We meet twice a week on Tuesdays and Thursdays from 2 to 4 p.m. Eastern. So we trade the last 2 hours of the US session. And we have probably somewhere around a couple dozen highly effective trading strategies in our toolbox, in addition to the golden 1-day options trade. We do equities, we do ETFs, we do a variety of other option strategies, futures, currencies. So we don't, we're not a one-trick pony. We don't just focus on one strategy. One of the most, I think, critical aspects of successful trading is, number one, having an effective, proven arsenal of trading strategies, but knowing when to utilize that strategy based on the current market conditions. Okay, so this is what we do inside our Altos live trade room. And again, we have a lot of highly effective strategies, and we match that strategy to the current market environment. Okay, and this is what I think really attribute our long-term success to. We do a lot of effective future strategies. We've had some incredible futures trades inside the live trade room. This is, again, right out of my personal Thinkorswim account using one of the strategies that we deploy inside the Altos live trade room. This is real world, real money results. This is just trading one futures ticker, the ES. Okay, I was just trading, I think, a couple contracts here, okay? So again, I can't guarantee anyone will replicate this, but I'm gonna show you how you can actually get access to these strategies and not just trade them alongside me, but learn the strategies so you can do this on your own. We do a lot of highly effective equity strategies. So maybe you're not an options trader, maybe you trade, or maybe you're not a futures trader, maybe you just trade stocks, that's fine. We do a lot of stock trading as well. This again is a snapshot over the course of a week, right out of my personal trading account. This is real world, real money. It's not cherry picked. These are consecutive trades, okay? And yeah, by the way, I do have losing trades, right? And every strategy does. I keep those limited and contained, okay? My strategies have long-term positive expectancy, and we have some highly effective equity strategies in our trading arsenal as well. In this case, did over $4,500 over the course of the week. and trading relatively small position sizing. Again, you know, you don't have to go crazy here. I've been, again, trading over 2 decades. I've built up my account over the, you know, the course of many years, and people I think are often surprised that I don't place huge trades, right? I trade relatively small, but I let the edge work for me and I put on more trades, right? So I'll kind of talk to you more about that. This is something we focus on inside our live trade room, right? So money management, you know, risk management, all these things are very, very critical. So now I want to make a promise to you guys. I want to help you have days just like these, and I'm going to give you access to trade alongside me in our Altos live trade room. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. So I don't give you a redacted version of any of the tools or strategies that I trade. My goal is to teach you how to do this for yourself. So I'm sure there are people out there that want to just look over my shoulder and copy the trades, and that's perfectly fine. And then others who want to actually learn to do this for themselves. So whichever kind of basket you fall under, that it's up to you, right? I'm here to help you do either one. So I'm going to walk you through what you get with our Altos Live Trade Room package. This comes with a membership to our trade room, of course. You get exact entry and exit signals. You get live interactive sessions. So again, we meet twice a week, 2 to 4 p.m. Eastern time. We trade the last 2 hours of the session. Okay, these are recorded. Okay, so you do get access to the recordings if you're not able to attend the sessions. We have a lot of members who have day jobs or are retired and want to be out on the golf course or doing something else, and that's fine. We do some intraday trades inside the trade room, but a lot of our trades we do outside of the trade room. So even if you're not able to attend, there's a lot of education and learning experience just by watching the recordings, and you get full support and coaching from me on these sessions. Only limitation is I can't give you individual trade advice, but I'm there to help coach you and teach you and help you learn strategies that have actually been proven to work over time. So these aren't fly-by-nights. They're not going to work today and fail tomorrow, right? These are strategies that have been proven over many, many years in a variety of market environments. So you get proven strategies, you get proven tools and proven education, and the opportunity to trade alongside a professional hedge fund manager. And I think that's alone very exciting, because I don't know of any other hedge fund manager that will let you look over their shoulder and watch how they trade, watch them place trades in their personal trading account. Okay, so this is all designed to cut the learning curve and trade like a pro, and you can literally start now. Okay, we're going to be having our second trade session, live trade room session tomorrow. So I want to give you information so that you can access the trade room starting tomorrow. Okay, now there's even more that comes in this package. So I'm going to walk you through everything, and then I'll show you how you can get one of the exclusive memberships to our live trade room, which we normally retail for $4,764 a year. Okay, we're going to be slashing this significantly, but we're also going to throw a whole lot more in. You're going to get real-time option alerts outside of the trade room. Okay, that normally retails for $997. You're also going to get weekly coaching sessions with me every Tuesday at 7 p.m. Eastern. So kind of like we did today on our session with the Golden One Day options trade, I host a session every Tuesday. We meet, we do a market analysis and overview, map out key levels, and we cover a different strategy each week. All right, you're going to get access to that as well. So really, you're getting 3 sessions with me a week. Okay, you're going to get exclusive invitation-only Facebook group to our private Facebook group of over 900 members, where you can bounce ideas off each other, share success stories, and that normally retails for $199. You're also going to get additional online training. So we have an online course called a Professional Trading Series. It's over 10 hours of content, and it goes through our top most effective options, equity, ETF strategies. We normally retail this course for $697. You're going to get this as well, because again, we want to give you the education, not just the opportunity to look over my shoulder as I trade, and ultimately learn to trade stocks, futures, forex, and options with consistency. Okay, I'm going to throw a couple bonuses in here as well. So you're going to get my latest indicator, the price action pivot indicator, which I'll show you what this looks like on a chart here momentarily. We normally retail this for $997. For your directional trade strategies, this is a must-have indicator. Okay, it identifies accurately key turning points in a trend. Okay, without lag, zero lag. Okay, Again, I'll show you what this looks like. You're also going to get my second bonus, how to win 97% of your options trade. This is one of our highly effective, proven option premium selling strategies. This is an online course. Okay, I launched this when we started Altos back in 2015, and it's still running strong. In fact, 97% is below what we've actually achieved. Okay, we're just over a 99% success rate with this strategy, going over hundreds and hundreds of trades back 10 years. Okay, we've closed over 99% of our premium selling campaigns out with a net profitable outcome. Okay, and so in this course, we also teach trade adjustment strategy, and that's one of the ways that we've been able to be so successful with this strategy. So you're getting additional training there. The total retail value on this package is over $10,000. We are knocking 88% off for today. You can literally get everything here, including access to my live trade room, for just $297 a quarter. It's an incredible steal. Obviously, as you've seen the results that we've achieved using these highly effective strategies like the Golden Monday options trade. This is limited to 25 seats. Okay, you'll still be able to get any of these things once those seats are scooped up. It will be back at the full retail price. So if you want that 88% discount, all you need to do is go to altostrading.com/LTR for live trade room. That's the link, and I think Anthony will also put that in the chat for you guys, so you can just click right out of there and hop on over and claim one of those 25 seats at the 88% discount. You're also going to get the two bonuses that I mentioned. Okay, this is the price action pivot indicator. This is what it looks like on the chart. You can see the incredible accuracy of identifying key pivot points in an asset. So again, this is a must-have indicator for your directional trading strategies. It identifies key turning points in the asset or trend shifts using a unique pivot point analysis that can help you confirm a valid pivot. It also forecasts short-term and long-term trends with astounding accuracy. You can use it with equities, ETFs, futures, Forex. It also comes with a scanner so you can screen for trades. It works on any time frame. We are giving you access to the pro version. We have two versions, a basic and a pro version. The pro version allows you to define your own parameters, so you can set your own kind of risk parameters, your risk reward levels, etc. It's more customizable. This is a great indicator to use alongside your directional option strategies I mentioned, and you can ultimately trade without guesswork. Okay, this is an indicator that doesn't lag, it doesn't repaint. Okay, and it helps you make more accurate and informed trading decisions. So this is bonus number one. This is currently available on Wealth Charts and TradingView. Okay, we will be rolling this out for additional platforms as well, but you'll get to select what platform you want this indicator on. Okay, you also get bonus number two, my online course, How to Win 97% of Your Options Trade. This is a $397 retail value. This is going to be yours as bonus number two, part of the Altos Live Trade Room package. We get hundreds, if not thousands, of testimonials from our members on a regular basis. Okay, and I want you to be my next success story. I won't go through all these. I'll just read you one from one of our dear members, Himanshu, who wrote into me recently saying, Jeff was so on the money about SPX expectation today that he placed a 0 DTE put trade at 10 a.m. California time and was out at 1 California time when the market closed. The option expired at 1 p.m. and it was successful. So again, I want you to be my next success story and write into me and tell me the success you're having with our strategies. And really, it only takes one winning trade to potentially pay for your membership to my live trade room. So go ahead and secure your spot now. Again, that link is altostrading.com/LTR at that 88% discount. I also have a guarantee, okay? I want to give you ample time to be successful. Everyone has kind of different learning curves, different lifestyles and ability to, focus or dedicate to a new endeavor like this. So if you don't make at least your membership fee back in the first 90 days, I'm going to give you an extra year of the live trade room access on the house. Again, that's a $4,764 value. No questions asked, just shoot us an email and I'll give you our contact information here momentarily. And I'd be happy just to comp you an extra year. Okay, no problem. So here is our contact information. Support@altostrading.com is our email. You can also call us toll free 800-895-9348. Again, that link is altostrading.com/LTR. I'm going to go ahead and open it up to questions. So if you guys have any questions that I can answer, feel free to put those in the Q&A. And let me just get this opened up so I can kind of scroll through here and see what we have. And yeah, and I will throw up the all the details in the offer here. I want to just leave the contact info up for just a minute so you guys can get that.
Hey, Jeff, I think we're at time.
Oh, are we? Okay.
Yeah.
Okay, no problem. Let me.
You could answer those questions in the chat though.
Okay. Yeah. So I will get these
just-
questions answered to you guys, and then if you have any others, please do reach out to us. Well, thank you so much. I appreciate being here. Thanks, Anthony, and thanks to all of you, and welcome to all of our new members.
Thank you so much, Jeff. That was phenomenal. And your offer today is going to help so many traders finally find consistency. We appreciate you sharing such a powerful strategy with us.
Thanks so much.
Thank you. Our next speaker is Alla Plocher of the Fibonacci Trading Institute. Her work has been recognized by simplifying powerful strategies, and today she'll walk us through the simplicity and predictive power of alpha Fibonacci, backed by data and even Harvard research. Get ready to see trading from a different angle. Alla, it's all yours.
Yes, please allow me to present. Good morning, Anthony.
Good morning.
I just would like to present. Thank you so much. Since I have many monitors, please confirm. Does that look good?
We don't see it yet. We see, there you go. Yep.
You see it? All good? Yes, everybody can hear me well? Checking in for a sound. Sound is good? Anthony, checking in. No response. Hello, hello? Can everybody hear me? Traders, checking in, please respond. Anthony, please allow me to post to everyone. Hello,
Sorry,
hello?
what do you need?
Yeah, right now your sound coming through, but I only allowed to send chat to you, not to everyone. Can you please allow me to post links?
You mean in the chat?
Yeah. If I can post.
Yeah,
please.
you should.
Yeah. Thank you so much.
Yep. You're welcome.
Still can only post links to you. For some reason, your sound is not coming back and I cannot post links to anyone.
Alla, I think maybe send to entire audience. Maybe you're just sending to me. Is that possible?
I can only send to you. I cannot send to entire audience. Only to you.
I don't know. I'm sorry. I don't know what that issue is.
Okay, I'm sending it to you. If you could please forward it to everyone else. And I will start, okay?
Okay. You go until about 1:30?
Hello, everyone. It's my joy and honor presenting to you today on April 16th how Alpha Fibonacci Precise Simplicity will improve your trading across all instruments, all time frames, all platforms. First, I would like to remind you extremely important disclaimer. Please understand that I'm not giving you any investment advice in this webinar. I'm here to empower, to educate you, and to share how traders globally trading Alpha Fibonacci system. I never pay to anyone for testimonials, and I never make any guarantees. No software, no system, all the guarantees in your hands, in your spectacular effort. And I hope and pray you trade with risks you can afford to trade. In this webinar, I will cover how Alpha Fibonacci Precise Simplicity has been traded by traders of all levels in US and globally since 2011. You will witness how Alpha Fibonacci system and software identifies precise entries, stops, and targets across all instruments. You will witness how you can remove pain and speculation from trading with precise Alpha Fibonacci Simplicity. And during this Easter and Passover holiday week, you will see a very special bootcamp offer with savings up to $10,000, and what students all over the world saying about this extremely special and very powerful historical event. Briefly about myself. 1989, I arrived to US from USSR as a refugee as a classical pianist. Of course, I had phenomenal, incredible American dream, but unfortunately, I barely spoke any English. But becoming RN, finishing my degree opens the doors at top medical institution on the planet, where I worked at Johns Hopkins with top psychiatrists on the planet. I worked with celebrities. I learned and witnessed the power of human brain that I bring today to my students. 2004, I discovered Fibonacci, and it was my absolute hobby, but 2008 financial crisis changed everything. As I witnessed, the power of the system I was developing was identifying crashes despite phenomenal fundamentals of the stocks. So 2011, I refused to work for top financial institutions, as you will see offers next. I chose to launch my website. Overnight, I had hundreds of students all over the world. I launched Fibonacci Trading YouTube channel, where you can witness the power of the system in the live markets. And I founded Fibonacci Trading podcast channel, where you can listen to students all over the world and how they trading. Proprietary system I developed. All of the systems I built based on pure price, zero indicators whatsoever, and traders from complete beginner traders, trading alpha Fibonacci system across all instruments, all time frames, all platforms, as I was just teaching my incredible traders all over the world, and you will witness what they say. Since 2011 in US and globally, proprietary alpha Fibonacci system traded by complete beginner traders, children of students as young as 12, hedge fund managers, prop firm traders, JP Morgan traders, trading alpha Fibonacci system. So let's go straight to the test I would like to present to you and what I discovered in 2004. When I was looking on one chart, I didn't know what it was. And then it occurred to me that every single instrument on the planet looks exactly the same. It doesn't matter what you trade. And that's what every single one of the systems I built are based on pure price. So take a look at this. No one knows what this is. And here's the shocking truth. This is Bitcoin. I spelled out 10 months in advance where Bitcoin would crash from. This is Euro. I spelled out where Euro would rally from, as you will see next. This is Apple Weekly. This is S&P hourly chart. This is how traders all over the world trading alpha Fibonacci system across all time frames, all instruments, all platforms. So when you come to the website, since I cannot post the link in the chat, you can simply request invitation to the trading room, which I will open on Tuesday, April 22nd again. And you will witness the power of the system in the live markets. So please simply register on the website and you will see why fathers bring in their children, why husbands bring in their wives, brothers bring in their brothers, friends bring in their friends, to Fibonacci Trading Institute and trade proprietary alpha Fibonacci system across all instruments, all time frames, all platforms. As I will walk you through later on through all the details. I travel the world meeting with students. I'm invited to students' weddings, to the biggest family celebrations, as those who make an effort, showing how alpha Fibonacci system changing lives all over the world. One of my favorite examples, how Sam brought his daughter who finished Harvard trading alpha Fibonacci system, how Manuel brought his wife to the course, they became full-time traders. how Richard retired trading system after struggling for many, many years. And William was sending me text this morning, legend, this never gets old. He could not come to class and he sent me this. That's it. That's the reason I wake up at 4 a.m. And that's the reason I refuse offers from Goldman, from top institutions on the planet, because I will not sell out my systems. I will not give up my independence. But the day Goldman, or especially Renaissance Fund, would allow me to work from home, everything may change. Until then, I work from home, I build my own systems. I have no marketing department, none. I'm very proud of my students. Matthias, why is this so powerful? Pay attention to this, because his emails make me cry. He lost 80,000 euros. He lost 20,000 for indicators for 8 years. He was in the class this morning and he asked me to please share my story, share how it changed. This is what he said before, only first week in the course, as he said. First of all, thank you for the next absolutely amazing second day of bootcamp, best investment of the last 10 years to take your course. This is the perfect reward system for me to apply rules correctly. And this is what traders have done after only 4 weeks in the course. This is a picture perfect story of those who have tried for many, many years. And it's not because of fault of your own. It's because your brain is congested. As I was teaching in Fibonacci trading bootcamp to show you, when you trade pure, when you make simple effort, the sky's as a limit. All you have to do is identify the instrument you want to trade. Markets are simple. Markets are not a chaos. I promise you. You get rid of speculation and you start trading with precise entry, stop, and target, as traders do all over the world, giving up the thought that trading is complex, trading is difficult. Only way this can be done by loading more and more indicators. Bunch of crocodiles, it's noise, it's nonsense. When reality is, when you trade pure, the sky's is the limit, because every single instrument, price action is identical. Only thing that changes is volatility. Only thing that changes is liquidity. So here's historical crash on S&P in US financial markets. Here's how simply you can test the system. If I take you back 6 months ago, this is how this chart looked. Absolutely no software on this chart, none is present. Right now in private mentoring, I work with cancer surgeon who's been successful trader for 20 years. He's blown away, as all of my traders were extremely well prepared, knowing quite well. This is a historical event. This is where we expect market crash. Well before the election, well before. Here comes a very powerful reminder. When you apply proprietary system with Fibonacci retracement setting, you can trade on Thinkorswim, TradeStation, Interactive Brokers, MT4, MT5, TradingView, as long as platform has Fibonacci retracement and you identify alpha Fibonacci rules, you've been extremely well prepared. You're not losing your mind, you're sleeping very well at night, as you're recognizing quite well. Right now, historical event playing out in front of you. Buyers are weak in financial markets. Do you know what to do next? Are you prepared extremely well? I'm teaching historical class this Thursday. Again, catastrophic historical crash spelled out months and years in advance. And that's the reason why my traders are extremely grateful and very happy and not crying themselves to sleep, as you will see identical event across multiple instruments, multiple timeframes, multiple platforms. So here we go, Matthias, who just joined the course 4 weeks ago. Remember his story and losses of $80,000? This is his morning. This is this morning. I will cut to this man. What did he say? Oh, he's up 10% in one day. This is his account statement. The guy who struggled for 8 years and lost over 100,000 euros can do this? Of course, when you remove all the noise from your charts, when you're focusing on trading pure, the sky's the limit. And that's the reason I live and breathe what I do. And when you come to the website, it's all self-explanatory. It's all on my home page. On top of the website where you see students' performance. This is less than 1% of the emails I receive. Boxes and boxes of tens of thousands of emails from traders all over the world who struggled for many, many, many years. Not anymore. So we will dive much, much deeper about bootcamp as traders all over the world sharing this phenomenal success rate, breathtaking, no more struggles, no more pain, complete beginner trader, closed low practice, now trading for top step, of course. And when students come in the middle of the night to share journeys, to share stories, this is the reason I say no to Goldman. This is the reason I wake up at 4 a.m. I live and breathe what I do. And this is our global community of traders. As you can not just see on performance, but you can listen to thousands and thousands of podcasts, to fathers who bring their children, to husbands and wives, to friends and friends, waiting lists of traders to share their journeys from all over the world, non-stop. Absolutely no marketing department, just me and my students. So if Matthias can do it after 4 weeks in the course, week number 4, after struggling for 8 years, is because Matthias understands the power of simplicity. This is what I was working with traders this morning. This is what it starts with. Retail jump, retail correction, retail chop. But when spectacular trades play out at this level, intelligent trader prepared and understands how to trade day one when you make an effort. So again, since 2004, I saw clearly pure price is the answer. It's exactly the same across all instruments. And Fibonacci forms all markets into precise puzzle, as we already done tests. So take a look at your fingerprint and ask yourself, how come no one else in the world has that fingerprint? Shock or not, when Harvard scientist comes out and says this, wow, are you blown away yet? After a single class, you will be. You will see quite clearly. Market is formed as alpha Fibonacci puzzle. And the sky's the limit if you remove all the noise from your charts. But start looking at your fingerprint and start asking questions. And when you understand that, you stop chasing noise, you start focusing on what matters. You trade markets with consistency, confidence, precision, and clarity. And if you decide to day trade, you have opportunity to day trade with multi-market scanner and trade recognition software for NinjaTrader 8. This is how scanner looks like. Right now running on 2 instruments, but with a single click, you can add the instrument of your choice. This is what traders all over the world trade. This is the traders I work with. Crypto, of course, Forex, of course, Vanguard. Absolutely, Forex, all pairs, of course. Choice is yours, what you want to trade. But if you decide to day trade futures for NinjaTrader 8, simply click below and load the future you want to trade. As always, I encourage my students to stay on demo account first. If JP Morgan traders do that, if JP Morgan traders not allowed to trade live until they prove themselves, or at least practice and trade on micro accounts, zero rush here, zero. As in single class, you see life-changing event, and you say goodbye to all the delayed noise, because you see that you have opportunity to trade finally with consistency, confidence, and precision. Alpha Fibonacci trading system removes complexities, noise, and allows trader to focus on simplicity and precision across all instruments, all time frames, all platforms. Let's go straight to Euro, shall we? Please tell me, has anyone seen good news in Europe? Do we have the world peace? Do we have incredible leaders? Wow, how is it possible Euro skyrocketed? And with the power of the system, you knew this many, many months in advance. So if I take you back all the way 6 months ago, number one, you never shorted near this level. You knew world can collapse, but you are monitoring for long. This was a bullish rally when Middle East crisis started. This is the bullish rally when war getting worse and worse. You are using your limitless brain and you are very well prepared months in advance where to buy from. Here's Alpha Fibonacci system that you can trade on MT4, MT5, interactive brokers, or any other forex platform. Bullish rally starts with vengeance. Doesn't matter that what it starts in the Middle East, doesn't matter how many schools are being bombed and children being killed, euro skyrocketing while tariffs getting worse and worse, euro doubled in value. Wow, look at that. You're not shorting the market, you're buying the bottom. It's pure and simple. Euro rallied from 102 and keeps rallying to 114. Wow, 15%. Boom. That you can trade on 5-minute, 15-minute, hourly, for our chart, any chart you choose. Here's US dollar. You knew many months and years in advance that US dollar would crash from this level. Well before the election, let me take you back all the way. Let's go back by a year, shall we? Shock or not? Here we are, May 1st, 2024. This is how you can backtest the system. USD CAD testing, first critical level. When I worked in Johns Hopkins research, when I worked in brain scanning, I witnessed the power of colors in human brain. This is the most important level in financial markets. If trend is weak, price will collapse from this level. And you also know many months in advance where price would head to next and where US dollar would crash from. Well, a year before current events. So here we go. Here's US dollar on January 1st. Watch what's playing out and how you can test the system going back years. You know quite well, many months in advance, that this is key level to the downside. Market not selling off, market continuing higher until it's not. Here comes the crash, correct? Are you ready? That's it. This is lifeline for US dollar. If US dollar breaks through this level, we'll see catastrophic sell-off. This is where US dollar is right now. US dollar collapsed significantly. Again, independently of global events. Again, well before the tariffs Well before the global catastrophe, you knew market reset by alpha Fibonacci puzzle, and this is where market would crash from. That's the reason Goldman's sending me emails. Are you clear on that? Here's another example, NVIDIA. When you're using your limitless brain, you know where to buy NVIDIA. Why was this such a spectacular event? Because top fund managers on the planet getting out of positions. We're laughing with my students. Here we go. ARK Fund. Let me open up new section. ARK Fund, NVIDIA losses. You are absolutely clear where to enter, where to exit your position. ARK Fund, exiting NVIDIA. ARK Fund, total losses. Wow, look at that. Non-stop. Why? Because she's exiting position here where intelligent trader monitoring for long. Would you like to buy NVIDIA at 10, 12, 14, 15? All depends on the chart you trade. Do you understand where NVIDIA crashed from? Do you know if sell-off is done or not? We're discussing all of that in classes. I'm bringing this chart to you back again to a year ago. How did you know where the most important level on your chart is present? And why is this so powerful? May 1, 2024. You know where price is heading to. You are not a gambler. You understand many months in advance this will be key event on NVIDIA, and this level would follow. Took NVIDIA 8 months to break through this level. Did you know that? Here's NVIDIA on January 1st. Finally broke through this level, reached next level. This level is a lifeline on NVIDIA. This level is out, NVIDIA in free fall. Did you know to exit your position at this level? Or you crying yourself to sleep? When you're trading markets, a strategic alpha Fibonacci puzzle, everything changes completely. And when I am with my students in the live markets, you will witness next what playing out on S&P. Because if 14-year-old can do it, anyone can. When a hedge fund manager manages multi-million-dollar accounts with Alpha Fibonacci system and bring his son to the course, it's an ultimate honor. If 14-year-old beginner trader can do it because he's simply bored during COVID, anyone can. My other student brought his 12-year-old daughter. So if you understand the power of this and simplicity, the sky's is the limit, and you can listen to Dominic in the podcast. Again, when you come to the website and you click on the podcast section, there we go. Dominic podcast can easily be found at the top. Father and son trading completely different instruments on completely different platforms. But if 14-year-old can do this, anyone can. Alpha Fibonacci trading system consists only pure price for entry with proprietary Alpha Fibonacci retracements. So if I bring to you my chart, this is just a glimpse of my systems. Right click. These are the strategies I work on currently, all my own. No one else in the world does what I do. No one else. These are my systems, all built on pure price for entry and Alpha Fibonacci for exits. So if you know where S&P sold off from on key institutional charts, then you know extremely well what's happening on S&P right now and where S&P collapsed from this week. So pay attention, please. I'm taking you to last Friday. And watch what happens if you day trading the system. This is last Friday, April 11th, correct? Price crawling up. Shock or not? Exact same thing as US dollar. Exact same thing as NVIDIA. Exact same thing as every instrument. price moves one step at a time. But what else is important to recognize? Doesn't matter if you trade in 5 or 10 or 15. It's all the same. Only difference, if you day trade, is a risk management and trade duration time is brief. But if you know hours in advance where price heading to, and you know your trading range, and you separate serious selling pressure from junky retail markets that are playing out today, you are not surprised at sell-off on Monday. No matter how much good news comes out that tariffs are cancelled and phones are not subjected to it, you are not buying at this level. You are not a gambler. You're using your limitless brain. You understand if trading on the news worked, every single person on the planet would be Bill Gates. In the course, I uncover all of this, and it absolutely will blow you away. I especially love working with incredibly successful traders, because those are the traders who are blown away the most. As again, I work with number right now, from complete beginner to incredibly solid and powerful trader. So that's what played out in overnight session, correct? Identical event, identical level as played out on NVIDIA. Wow. Only difference if you're holding NVIDIA long term, this is multi-months advance. But if you're trading S&P, you're not buying at this level. You're shorting from this level no matter what chart you trade. Rules are met, enjoy the ride. But again, as always, higher you short, better your trade will be. And do not ever forget the power of the bold pink line that continue being a problem for shorts and will be a problem to the upside next. That's it. And you see it on every single chart, and you see it on every single instrument. So this is identical event that playing out right now on S&P, no matter what chart you trade. Is it 3, is it 5, is it 10, whatever chart, that played out on Apple. When you can trade them one, you can trade them all with Alpha Fibonacci system. Day trading is not for everyone. When I work with you in private mentoring, I open your eyes if day trading is your cup of tea. If not, use system long term. Enjoy and remember. If it's Apple, or if it's NASDAQ, or if it's Bitcoin, or if it's gold, or if it's oil, no matter what instrument you trade, do not ever ignore the power of the bold pink line. Bullish weakness across the board on Apple, on NASDAQ. Bullish weakness will be tested next on S&P, potentially by the end of the day. That's it. So you make a personal decision on the instrument and time frame you want to trade. Because a father and son trading different instruments, different time frames, different platforms, anyone can. There is no more pain, stress, confusion, chasing markets, losing money. All you have to do, make an effort, and the sky has a limit. This is a very important chart. Why is this? Because this shows critical key, alpha Fibonacci buy points. Despite catastrophic global events, you are buying the markets, you're not shorting near, you are buying the bottom. And if you're day trading with trillions of dollars in US markets, you are scaling out with phenomenal profits. But if you're using S&P index fund or you're using options, it's a phenomenal leverage to be able to ride institutional power from the very inception of spectacular institutional rally, despite inflation, despite global wars, despite Middle East crisis. S&P skyrocketed until it did not. Do we agree on that? Are you ready for much more extreme and volatile events to come? You see it in a single class. Historical event tomorrow, where I show you key institutional class, key institutional chart. Here's Sue. She spoke in a boot camp, legend. Lost a fortune for years and years and years and years. Oh, I'm sorry, this is Pablo. This is not Sue. I thought it was Sue the male, probably gonna be next. Pablo came to the boot camp and he spoke, as he said. He was an attorney, he closed law practice, he hated his stressful work. Do you know what happened to Pablo? He simply made an effort. And as he's sharing, he just became a top step trader. He's trading S&P, NASDAQ, Dow, gold, oil. He closed his law practice. Complete beginner trader. Now, top step trader. Boom. It's a very happy Easter for Pablo. If complete beginner trader can do it, if Pablo can do it, anyone can. You're focusing on simplicity. If you decide to use the software to day trade futures for Ninja Trader 8, an institution short, you short with them. Software comes with trade recognition software for Ninja Trader 8. And you buy the bottom of institutions buy, you buy green zone. And you remember where to exit your long. You start trading all markets as strategic, intelligent chess. All the stress, all the pain is gone. You're no longer using money. You're using your limitless brain. So if Sue can do it, struggling for 15 years, losing a fortune, so can you. Sue found me on YouTube. Software developer, programmer who lost a fortune. She shared so much in a bootcamp. You can find her journey on our website. You can find Sue's journey on YouTube channel. She's trading it all and she's managing other accounts. She's trading S&P, gold, Bitcoin, oil, and silver. Students podcast. So many videos and journeys of students from all over the world. So, since I have only a few minutes left, this is a summary. I just finished teaching annual trading bootcamp during historical market conditions because this is holiday season and I love giving gifts. I have 2 spaces available for recorded trading bootcamp, additional value of $27.77 included in 4 packages available to you. Total savings of up to $10,000 with private mentoring. If private mentoring is well out of your league because of the cost, option 1 is the most affordable option. Option 2 with the bootcamp is the most popular option, savings almost $8,000. Why bootcamp recording is so invaluable? You're witnessing historical events. You're witnessing everything that played out during historical market conditions, during historical market crash. And in the trading bootcamp, I dove very deep into trader's brain. That's it. And again, you do not have come to live classes. Traders all over the world, in US and 58 countries, working full-time, having businesses, view videos 24/7. Bootcamp recordings will never be offered again. 2 spaces left. And again, member area for regular course has over 300 videos of prior live recorded classes. When you work with me in private mentoring, I work with you one-on-one. I polish your weaknesses, I perfect your strengths, and I show you what you should be trading versus not. And please remember, if you have any questions for me, simply click on Contact Us section and pick up the phone and call. I live and breathe what I do. And I will be teaching my students tomorrow a historical class. So my traders all over the world can do this. So can you. And one of the biggest compliments I ever received is this. That's it. No one else in the world does what I do. Again, please sign up for the trading room invitation and please see what traders share all over the world, especially those who struggled for many, many years. Thank you, traders. Happy Easter, happy Passover, everyone. As S&P heading to key level. But how to trade this, you learn in the course. That's it. Thank you so much, everyone. It's been my joy and honor to present to you. Thank you.
Thank you,
Any
Alla.
questions, call or email me anytime.
I put your contact in the chat there for you as well.
Thank you. Thank you, Anthony. Thank you so much for having me. Thank you, traders. Any questions, simply pick up the phone or send me an email. Thank you so much. My joy and honor.
Thank you, Alla. And thanks for your offer today to help traders streamline their systems and boost confidence. It couldn't come at a better time. So we're so grateful. Thank you so much.
Absolutely. Thank you so much for having me. Thank you.
All right, our next guest, let's welcome Erik Gebhard, co-founder of Altavest and developer of the Theta Trader platform. Today, he's going to show us how to automate your options trading, complete with one-touch trade alerts and risk management built right in. If you've ever wanted to trade like a pro on autopilot, don't miss this. Erik, it's all yours.
Yeah, thanks for having me. Let's see here. I've got to figure out how to get my screen here, so hopefully you can hear me okay.
Yes, we can hear you.
Okay, let me see here.
And we got your screen.
All right. I've got to be able to choose my screen here, so let me make sure I've got the right one being shown. Okay, let's see. Here we go. Okay, you should be looking at the title there for the first slide. I'll just assume you are. So everyone, thanks for joining me. And we're gonna look at the automated options trading tool that you need to have. So our proprietary algorithm will build spreads for you. We're gonna look at how to use trade alerts and accept those trade alerts with just one touch, automation for profit and risk controls, so you don't have to screen watch. And there's one rookie strategy that we want to avoid. And then, of course, to wrap it all up, you have actual live, real people and trading coaches to help you along the way. And remember, we're speculating, and we always accept risk when we speculate because we're trying to make a profit. Without risk, there is no possibility of profit. So do take a moment and look at that risk disclosure. You might want to take a screen capture of that if you'd like to read every word. But keep in mind, the main thing here is that when trading, you should be using risk capital, and there's always risk involved, and past performance is never a guarantee of future results. And Altavest, a little bit about us. Since 1997, we're a registered introducing brokerage firm. We've traded millions of contracts along the way. It's a picture of yours truly down on the trading floor. That's the S&P 500 options trading pit, and some of our floor traders that would fill our millions of options trades over the years. And we're the creator of the Dragonfly option strategy, along with our proprietary order execution technology, which allows that to happen, which you can't find anywhere else. And again, trading millions of contracts along the way. And we're registered with the CFTC, a member of the NFA. We're located in California, so we are regulated and registered. And maybe you've seen us before. We often get quoted in various articles. Here's one just a week ago and about trading gold. You can see here, Altavest here talking about the pullback in gold as a gift for anyone. And then just this morning, they quoted us again. That's just today here. Gold climbs to record highs above 3,300, up 26% year to date. Here they are interviewing us again this morning. So maybe you've seen us in some other presentations as well. But anyway, you found us. We're glad that you are here. A little bit about myself. I'm co-founder of Altavest. I graduated from USC with a degree in business administration. And I've had various securities licenses over the years. I currently have my Series 3 commodity futures and my Series 65 investment advisor licenses as well. So let's jump into it here. We're gonna look at what I think are the top 3 barriers that hopefully, I think, well, or not hopefully, but you can probably relate to this as a trader. So these are the things that you probably struggle with. Confusion, so a lot of noise, conflicting price targets, opinions, narratives, complicated choices. This has been here since December of 2022. This is just a good example of how worthless the media is. So Bitcoin is either going to 250,000 or 5,000 next year. So how on earth is that helpful and worthy of being printed? I don't know. And how about all the price targets from all the big financial institutions? So here we are, their 2025 price forecast. And of course, since they've made those forecasts, the S&P is lower than by a couple thousand points compared to all of them. So what do they do when they're wrong? Well, they just slash their forecast and just, you know, adjust their prices. That's what you call a moving target. It's absolutely ridiculous. It's worthless. So it's not helpful. The point is, it's not helpful. How about time? You need time and discipline to screen watch. We probably don't have a lot of time to do what this guy's doing here or what this guy's talking about. He sits from the market open until the close, trading full time in front of his computer, and every once in a while after market hours. It takes a big commitment to do that. I think we'd rather be doing something like this a lot of times, or sometimes my favorite. I think we can get an amen from that, some good rest. And how about number 3? Can you relate to, how about emotion when you're trading? Human emotions. We become our own worst enemy. We ride that emotional roller coaster. You're making money and you're euphoric. You start losing money and you wave that white flag of surrender and you become despondent, and then that whole cycle starts again if you start making money again. So you want to avoid that. And keep in mind, this is not your trading competition. It's not people sitting behind a screen like this in their house or wherever they are. Your trading competition looks like this, folks. It's automation. It's systematic trading, built-in controls, automation, no emotion. That's your trading competition. 70% of the markets here are algorithmic or software-driven trading accounts. So 65 to 70% of the American stock market volume, and that number is only increasing. And then look at this here, 50% of the global trading is controlled by algorithms. So traditional fundamental analysis is no longer enough. Your emotions, just basically you're not able to compete with those algos, but so why not use the algos in options strategies to compete? So we're going to look at algo-driven strategies, and we're going to look at some approaches to trading that large institutions and Wall Street likes to use, and professional money managers, hedge funds, you name it. So here's an insurance company example and how they might trade options, because, well, that's kind of how they operate their business. They get paid premiums. They don't buy and pay premium. They get paid the premiums to assume risk over a period of time, but they're always hedging themselves, and they're consistent and they're patient in their process along the way. And they look at probabilities, favorable long-term mathematical odds, statistics, and so forth, actuarials. That's how an insurance company manages themselves. So they want the odds to forever be in their favor. So why not turn the mathematical odds in your favor? And let's talk about collecting premium. These are premium collection strategies for options where you manage risk and reward. You're going to need some experienced coaches and help along the way, but really you're going to need a lot of the correct automation and tools. And we're going to look for lots of base hits. We're not looking to hit a grand slam on these types of trades. So these are strategies that can be non-directional, bullish or bearish, and you can target outcomes with fixed risk in advance. So very flexible. And these are how Wall Street trades multi-leg option strategies. So here's this woman here, and I'll show you who she is in just a bit, but she says an option spread is buying and selling different contracts. It's a very common way for investors to hedge risk and volatility, and it's cheaper because you can offset your cost by the proceeds from different contracts. and it's been used by Wall Street professionals for decades. So she's absolutely right. And before we jump into the demo here, let's learn some Greek. Probabilities. How do we determine probabilities when it comes to options trading? Well, one thing is here to look at delta. So how much does the option value change with a change in the underlying asset price? So that's the definition of delta, but it's also the approximate probability of that option expiring in the money. That's how options traders view it. So if the delta is 0.25, you've got a 25% chance that the option expires in the money, or conversely, that means there's a 75% chance it would expire worthless. Remember, delta is always moving. That number is not static. So as prices and time move, so does delta. And it is not the probability of a winning trade. So that's important to realize as well. And the only other Greek letter we're looking here today at is theta. And that represents time decay. Remember, options are a decaying or wasting asset with limited life. So every option has an expiration date. And when you refer to theta, it's a negative number. It equals 1 day of time decay. So if the option premium's 10 and theta is negative 0.05, all things remaining equal, the next day the premium drops to 9.95. And after that, 9.90, and the day after that, 9.85, and so on and so forth. So here's what it looks like on a graph. So here's your 120 days of hypothetical time till expiration, and then you go down to 0, you approach time 0, and the percent of that premium or option value starts to drop and drop and drop, especially in the last 30 days or so. You can see the steepness of that curve increases. So that's what it looks like in terms of a graph on theta decay. Here's an example of 5 option spreads you could immediately put to use. So here's a call spread that you would sell on the S&P 500. And we're looking at the E-mini S&P 500, and I'll tell you why in just a bit. But this is a strategy if you're bearish or even moderately bullish or just non-directional. So this is what it might look like. You have an out-of-the-money call spread that you sell here. The red line is the call that you sell. You collect 4.5 points, but simultaneously you buy this out-of-the-money call spread. This out-of-the-money call, the 64.30 strike, and you pay money for that. But the net result is you still collect 2.25 points, $112.50 in this example, minus any commissions. And you just look for the market to basically stay below this level here. And you can see here's the market trading sideways and down and up and down and up. And that's just a good example of selling an out-of-the-money call spread. Here's the inverse of that, where you sell an out-of-the-money put spread. And I'll show you in the demo a little more in depth, but here's the put spread that you sell. Here's the market just trading along. And then you collect, in this case, $100 for selling that out-of-the-money put spread. And then here's a non-directional strategy. It's just a combination of the put and the call spread. It's called an iron condor. So here's an example where you sell an out-of-the-money call spread and put spread simultaneously. You do this as one order. And here's the call you sell, and then the put call you buy, and then the put you sell, and then the put you buy below it. And you can see the market then just kind of trades along. And that's kind of what happens after theta decay. In other words, as time goes by, then you would want to buy back that spread. And you can see here this blue arrow pointing to this blue square. That's called the risk thermal indicator. And that's something that we're going to show you in just a second and how that works. But that's your signal to close out the position. So you would buy back the spread. You initially sell it, and then you buy it back for less money than what you initially received. And then you can see you buy it back before it expires. Here's your expiration date here, that vertical line. So you close out these trades before they expire. In this case, it looks like 8 days till expiration. Now here's a variation on the condor. It's called the dragonfly, something we created, and there's 6 legs to it. It's non-directional as well. And this is what it looks like. It looks like there's a lot going on, but I'll show you, actually we can simplify this quite a bit in the software, and I'll show you in just a second, but you're selling in these 4 calls. You buy 3 further out of the money calls, and then 1 closer to the money, and same structure with the puts. And I'll point out that this 1 call that you buy in this example is 50 points closer to the money compared to the 4 that you sold. So the delta is going to be higher on the one that you own, and it completely changes the dynamics of this trade compared to a condor. And I'll show you that there's some big advantages at times when you have a dragonfly versus a condor. It's a little more risk averse. You tend to collect a little bit less money because you have to pay money to buy this extra option here and this extra option here. That's kind of additional insurance or an additional hedge, and that costs money. But it can also save you, where you end up taking a loss on a condor and a dragonfly may not. Or the dragonfly may allow you to close out the trade much earlier than a condor. So here's what happens on a dragonfly. You can see the market chops around, and then you get a signal here. You've got, with 29 days till expiration, you get a profit-taking signal. And you can also automate this so you don't have to screen watch, and I'll show you how to do that as well. So again, you sell it, collect the premium, and then you buy it back in the future for less money than what you initially sold it for, essentially going short. So stick around here in just a few minutes. We're going to look at really a big key to what we're doing, and that's the live or the trade alerts, the one-touch responsive trade alerts, and we'll show you how you can just accept an alert just with one touch on your smartphone. Now, instead of just only non-directional strategies, kind of what we just looked at with the condor and the dragonfly, of course there are bullish and bearish position option strategies. Here's something we call a bull or a bear hedge. It's better explained on the graph. So this is a bull hedge where essentially if you're bullish, what you could do is you could sell an out of the money put spread. So that's represented down here. And you collect money for selling that spread, but then you use that money to finance the purchase of an out of the money call spread. So if the market moves higher, this call spread here that is something you own, and it will gain in value. And the put spread that you sold will basically lose value, and then you can buy it back for less than what you initially received for it, and then the call spread hopefully gains a lot of value, and then you sell it for more than what you paid for it. So that's kind of a bull hedge, or just basically an option combination spread. And the same structure with a bear hedge, except the opposite is true, where if you're bearish, you might want to sell an out of the money call spread and use that money to buy an out of the money put spread. And you can usually do these bull or bear hedges for even money for no cost, or sometimes even a credit. But here's the question: how do you know which spreads to create, which markets, what strategy to apply? What's the correct timing on the pricing? How do you manage risk and profits? I mean, there's literally millions of daily options combinations. Here's just one expiration right here, just a few strikes listed. So where would you even know how to begin and where to begin? The answer is Theta Trader. That's our proprietary solution. These are pre-built option strategies. These are called theta trades. These are built daily by our algorithm. You can respond to trade alerts with one touch. Any market condition, there are strategies, and there's automation for your risk and profit taking and profit tracking. So we're going to jump into the demo here. So let me switch my screen. All right, folks, we're now looking at the dashboard for Theta Trader. And let me see if I can zoom in just a little bit. Well, I think we're okay, actually. So you can see here under active trade alerts, and I'll address that in just a second. But here's our Theta Trades section. And here's any open short positions or sold strategies, and any open long or bought strategies here. And then here is your account information, and this is all integrated with your Altavest trading account. So Theta Trader works with your Altavest trading account and then your current price quote. So what I'll do here is we'll show you there are bullish strategies that are all pre-built There are bearish and there are non-directional or neutral. And then you'll see the markets here are the E-mini, S&P 500, NASDAQ 100, and Russell 2000. We focus on these particular indexes because that's where all the volume is. And I'll give you more detail on that in just a bit, but that's really the bottom line is you can't do a lot of these multi-leg strategies on individual stocks other than just the absolute most, highly traded or most liquid stocks. So this is where all your volume is. Now let's look at a condor for today on the, I don't know, we haven't done, let's do a NASDAQ. So here's a NASDAQ condor. This is one of the theta trades for today. And the algorithm has decided there's one available here for the NASDAQ for today. But sometimes it could be 5 of them. There could be 5 different expirations to choose from. It just depends on market activity. In fact, let me just see here. I'll go to the S&P 500. So there's 2 there and there's 1 here. So that's fine. So here's the first thing I like to do. I look at a graph. So this gives you some context. Here's the current price. You're selling this out of the money call spread and out of the money put spread. You do it simultaneously as one order. And you'll notice this table gives you all the details. So days till expiration, expiration date, the settlement value on the spread, your put risk, call risk, commissions, cash required, profit potential. This is your targeted return on cash and targeted annualized return here at expiration. And this number here really is to compare one trade to another. It's not realistic to expect 107% return just by placing that trade. So just keep that in mind. Now, here's one thing I want to point out. The puts that are being sold, the 15,900 puts, those have a delta of 9.6%. So that means the puts that you're selling to someone else, those have over a 90% probability that they will expire out of the money in somebody else's hands. And how about the calls that you're selling? 6.68 delta. So again, 93% probability that these calls you're selling to someone else will expire out of the money. So that's why the algorithm is choosing these. They have a high probability over a long run of basically expiring out of the money. So that's why the algorithm is selling those particular strike prices. And you can see here your cash required 1,766, maximum profit potential at expiration $234. It seems kind of inverted. Like, why would you put up 1,700 to make a maximum of 234? Well, the answer is in those deltas. It's the probabilities of success, according to the math, are high in the long run, at least. That's what the mathematical odds say. So it always defaults to a sell when you're selling a condor and the quantity of 1. So we can do 3, 4, 5, move them up and down. You can see the cash required, profit potential moving up and down. And we'll go ahead and leave the price here alone and just click place, and we'll place that order. So you can see that order there is filled, and because it's just a demo account, it just assumes you're filled. Let me go back to the dashboard, and let's look at a dragonfly. And then I'm going to show you a really cool feature. Am I allowed to say cool, or is that not sophisticated enough? But yeah, it is kind of it's a great feature. Useful, efficient, effective, let's say. We have a trading simulator. You can go backwards in time, and then you can sort of back test any of these option strategies. I don't know why I'm getting kind of a delay here, but you can see, actually I loaded some of those right here. Maybe I'll just jump into that real quick. I'm not sure what the hang up is. Let me give it just one more second, folks. Well, I'll let that just kind of churn away because what I did here is there's a there's a trade simulator. So this is where you find your trade simulator. And let's look at a iron condor, and we'll go backwards in time. Then we'll jump back to a dragonfly, so that's fine. So here's an iron condor placed on January 15, and let's see how that would have done. And this is the February end of month expiration on the E-mini S&P 500. Use these controls here to go backwards a day at a time, forwards a day at a time, or you can just play day by day and pause it, or you go all the way to the end. But you can see as day by day goes here, the green RTI is good. That means do nothing. Yellow is elevated risk, but still do nothing. You can see the trade is negative, and that's kind of typical because theta decay hasn't worked yet. The market's just chopping around. Now the trade's turning green and positive, and everything is fine. RTI says do nothing. And then look at this, you get a blue RTI, so that means take profits. With 8 days remaining on this iron condor, this is a profit-taking signal, and you can automate this, and I'll show you how to do that in just a second. So you can see here's the expiration date, and 8 days here before expiration, you get a profit-taking signal, and you can have an order placed automatically for you to buy that position back and close it out and take your money and run. So that's how that works on the condor. Now here's a dragonfly, and that's the February end of month condor. Keep that in mind. And here's the February end of month dragonfly. And let's look at a distinction or the difference. This is the same market movement, of course. We're just applying a different strategy. This is the dragon compared to the condor. But look at this. With 22 days till expiration, you get a blue profit-taking signal. So instead of waiting till 8 days till expiration, this dragonfly matured much more quickly and allowed you to have a profit-taking order generated, and you could close out that trade, you know, over about 2 weeks earlier compared to the condor. So I mentioned earlier some of the benefits of the dragonfly and why sometimes having this long call and this long put as an additional hedge can really make a big difference in closing out a trade earlier, or even keeping a trade from being a losing trade. So let me go back. Okay, so we're all set here. I don't know why there was such a delay, but let's look at a dragonfly. Here's a theta trade dragonfly. I just typically pick the one that has the most days till expiration when I'm doing these demos. So this is the June week 3. You can see the strike prices are pre-selected. These are the ones that are being sold. 45.50 put, and the 6100 call. And it gives you a little synopsis here, maximum profit potential and your targeted annualized return. But here's what it looks like on the graph. So here are the calls, here are the puts. The red lines are the calls that are being sold and the puts that are being sold. And the blue lines are the ones you're buying as a hedge or protection. So drilling down, you'll notice all the same information, but you notice it'll look different because the cash required is always going to be about 4 times higher than a condor, and that's because you're always selling in increments of 4 puts and 4 calls. So if you did 2 dragonflies, it would be 8 puts and 8 calls, and so forth. So more cash required, but of course a higher potential profit as well. And here's your targeted return on cash and your targeted annualized return. That's typically lower compared to a condor because, again, you buy this call and you buy this put, and that costs you money. So it lowers your potential target. But there are benefits to having those options, and we just saw that in one of the simulations. So you have a 9.94 and a 6.2 delta on the puts and calls you're selling. So over 90% probability and 93% probability that these options you're selling to someone else will expire out of the money. And just for the heck of it, we'll do 4 of these. And cash required moves up, profit potential moves up, and we'll go ahead and just place that order. So it just assumes you're filled on that demo account. So that's how easy it is, folks, to place a order with the Theta Trader technology. And we've already looked at this condor and this dragonfly. And let's look at another example of a condor. And this is back from May. And I kind of forget what this does, but you can see here, market moving up and down, RTI is green, do nothing, still do nothing. And then you get orange, elevated risk, yellow, not as much risk, but finally you get a red RTI. That means too much risk, you're losing money, take your loss and move on. And that can be automated as well. So this condor, this July week 3 expiration, ends up being a losing trade. But what if you had done a dragonfly on that same day instead of a condor? Same expiration, same market. So everything's going okay. Green, everything's, and then it turns blue. So you get a profit taking signal with 22 days till expiration. So the dragonfly in this case was profitable while the condor actually ended up being a losing trade. So completely different characteristics at times. That's why we like the dragonfly a lot. Now let me show you how to set up the bear hedge. Here's an example of a bear hedge. We talked about that. And let me just point out, you're short this call spread and you're long this put spread. And we can just go right to the end. And you can see here, you end up kind of with the maximum gain on that one. So those can work out well. And of course, if it went the wrong way, you'd have to cover your loss and your risk on the call spread that you sold. So to help you along the way, we have research that we do every day, proprietary research, something called TradeScope. A little bit of guidance on some of the technicals here on the stock indexes, and also what to look for ahead on looking at the Fed and sort of where they are with rate cuts and so forth. And that's done every day. And we have our daily commentary, gives you an idea of what happened in Asia and Europe, and then also here looking ahead, and then what's on the economic calendar as well. And then here's how to do your risk manager and automate everything. You go under your settings and you go to activate risk manager, just check that box. And then what you can do is you can use the default level at 0.50, or you could lower that to 0.38, or you could use a custom level anywhere from 0.5 down to 0.25. So keep in mind though, if you use something like 0.25, your losses will be smaller, but you'll have more frequent losers. So, or the same with the orange compared to the red. And you would just save your settings, and then you activate your profit directive as well. So that automates it. Just check that box and make sure to click save your settings. And that's how you automate your exits. So whether it turns red or blue, whichever comes first, you're going to be out of that trade. There's a great help file here that helps explain all the color coding. We're not going to go into all that right now, but in all the different details on the spreads. There's also a great video library here on navigating theta trader, how to place trades, exit trades, and here's education as well if you need to brush up on some of the particulars of options trading. So it's all available here in the help file. A lot of great material there. Now here's what I want to show you. You can see here these active trade alerts. So these were issued today, and you just click on these and it pulls up the alert, and it explains this is the May end of month dragonfly, and the puts were lowered, so moved down lower because we're a bit more bearish as a company at the moment. Here's the expiration date, and the quantity is there 8. It's all pre-selected for you in your account. You can lower the quantity if you wanted. You could go to say 5 or whatever it might be, but you cannot increase it beyond what was pre-selected for you. Gives you here your cash collection there, how much you're collecting, how much is the margin deposit, 45 days till expiration. If you like that, you just touch accept. So you can do that on your dashboard like I'm doing here, or here's another alert. And this is a bear hedge like we just talked about. You're selling this out of the money call spread and you're buying an out of the money put spread. And again, this is all customized to you. Everyone listening, you would get an order quantity specific and custom to your account. And also you're not going to get redundant alerts. If you already have a trade, it's not going to show up for you to be able to accept. So that's how that works, folks. And let me show you here. I'm gonna keep moving here so I don't run out of time. Let me switch back here. Looks like I've got about 10 minutes, which is fine. So the trade alerts we just saw, one-touch responsive alerts, they're integrated with your account. So you touch accept to place the order. And here's what it looks like on your smartphone. You'll receive a link. You just touch that link. It'll take you right to the alert page. And this happens to be a dragonfly alert. You see the quantity is pre-selected. You get a graph of the trade. You can see you're trying to collect 7.85 points. And that's the dollar amount being collected. You could also change that quantity to lower it and reduce your exposure, but you cannot increase your risk or add to the quantity on the alert. And then you just touch accept, and that's it. So people love those trade alerts. So here's how to get involved with Theta Trader and get a lifetime membership. You'll get everything we just talked about in the software, the Theta Trades, the risk thermal indicator, which is the automation, the trade simulator, valued at $3,588, and you get the trade alerts. That's all part of Theta Trader. Those are valued at over $4,400. So your Theta Trader membership includes everything that we just demonstrated, over $8,000 value, but I think what really makes it all work is the private coaching. We are all licensed and experienced traders, and you'll share screens with us, and you can review your trade history, look at what trades might work for you coming up in the future. Basically, we'll be your co-pilot. You know, we're on your side. Your success is in our interest too. Let's keep it that, let's put it simply. If you succeed, you'll be a client a long time. So that's valued at over $7,500. So that Theta Trader membership includes everything we just saw, over $15,500 value. And then don't forget that proprietary research, the trade scope, and the daily commentary, only available to our Theta Trader users. And we have that video help file as well. This is a lifetime membership. I want to make that clear. So you pay one time, valued at over $18,500, but of course that's not what we're going to charge. In live in-person events, this is a $4,000 package. People go to the back of the room and sign up that way. But of course, we'll do it even better. Our retail price on the website, $997, but we'll do it much cheaper than that for you. This special Traders Corner event, one payment of only $597. It's a very simple order form, and then you just touch become a lifetime member. And there's the link, cf.altavest.com/TT. So if you want to take a screen capture or a picture of that, and it's just that simple, click that button. And there's also, you want a free membership. If you have $100,000 or more, you get a rebate, full rebate, $25,000 and up, you get a 50% rebate of that membership fee. And there's a 30-day guarantee on that. So if you decide it's not for you after 30 days, we'll refund your membership payment. So you have no risk. And just a few more FAQs, and I think I've got 6, 7, 8 minutes here. Why the E-minis? Well, I talked about that. They're liquid, efficient, cost-effective. So liquidity, a wide array of expirations. I won't go into all this wording here, but here's a graph. This is your average daily dollar volume on the E-mini S&P 500. It's just rocketing higher. That offers superior execution compared to SPX. That's according to the CME group. So you get those tight bid offer spreads. So deep liquidity, lots of expirations. So what that means is here's the market trading sideways, and Theta Trader algorithm is looking for strike prices to sell, calls and puts to sell, and another set of calls and puts. And so as time goes by, it's always able to find what it needs. So there's a lot of volume, the price discovery, the technical levels, and it's about 10 times the value traded across all the S&P 500 ETFs. So the E-mini S&P 500 market about 10 times greater than all the other S&P 500 ETFs. There's no day trading restrictions like for pattern day traders, where you get additional regulatory scrutiny, or you're prohibited from making further trades if you drop below 25 grand. So none of that. Margin is efficient. There's tax efficiency when trading with us compared to trading individual stocks. Basically, your 60% of the gains are taxed at the lower capital gains tax rate. That's according to the IRS section, I believe it's 1256 contracts is what they call it. So no more itemizing as well. Big advantage, no more hassle like this poor chap here. But do consult your tax attorney or advisor. You can do an IRA with us, absolutely. We get all those types of accounts all the time. Remember, the Dragonfly is one trade, 6 legs and 1 order at 1 trade. No legging in or legging out. You can't do that with stocks. So you get sophisticated option strategies compared to stock options traders. She points out here, retail investors mostly have access to the most basic call and put options. They don't have access to sophisticated spread or other more sophisticated strategies. And she's talking about stock options traders. So with us, you have sophisticated strategies available to you in just by default. Remember, the pros are not just buying options. The rookies only rely on buying options. It's really the worst strategy to rely on, because you're basically buying options and time is always against you. Here she is. The appeal for retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. This is kind of a funny statistic. In 2021, 11% of Robinhood active users made options trades, but less than 1% of the 11% actually made a spread trade or a multi-leg options trade. So with Theta Trader, you can use those Wall Street style, professional, sophisticated strategies right out of the box. More advantages to trading, and then no margin calls, because all the options we trade and strategies are covered. No naked trading, no naked options trading, no margin calls, no unlimited risk when you're trading with us and doing these strategies. They're always covered. So you don't want that margin call. Thought this was a good joke. Who is Margin and why does she keep calling you? It's this poor guy here. So none of that with us. Our commissions are 5 1/4 round turn, and that's inclusive. So if you see rates quoted that look cheaper, they're probably not, because they only quote that at half a turn, meaning one way, not both ways, and then they add more fees on top. So our rates are competitive. Everything is net of all trading costs in Theta Trader. And then performance, of course, everyone has different performance results because everyone uses it differently. And we think it makes a lot of sense to have access to something like Theta Trader because these strategies are so flexible. Remember, inflation is really chewing away at our dollar. Here's $1 million house when we were kids, and now here's what it looks like. Even Apple, when adjusted for inflation, revenue is down in the last 5 years, if you can believe that. So Theta Trader is alternative. You don't want to just be passive. And I'm just going to kind of skip through some of these. I thought that was kind of funny. Someone making some analysis there. Anyway, a wide margin for error on some of these trades. It's a time saver. You don't want to sit in front of the screen 10 to 12 hours a day. You can diversify. That's a big thing here. You want to be able to diversify. You don't want to just be passively long. You need some exposure to alternatives. Remember, drawdowns can last decades. I don't want to go into this here, but from 1906 to 1975, the stock market equaled 0 inflation adjusted return. That's kind of crazy. Even according to bonds and stacking up against bonds, it doesn't always beat inflation. So how about the NASDAQ bubble? Remember in 2000, it took 15 years to recover if you bought at the worst time there at the highs in 2000. So we'd like to help you diversify. These are just kind of summarizing Theta Trader and all the advantages and the trade alerts here, how simple it is to respond to those trade alerts, and then have automation manage everything for you. So that is all the time I think I have, just a minute or two remaining, but go to that link, cf.altavest.com/TT, and then you get started, and then we'll just get you onboarded and get your login credentials and get your account open, and you'll have access to all those algo-driven trades, help control your emotions, and bullish strategies, bearish, non-directional. You'll have access to the trade simulator where you can go backwards in time. And that offer, $597, is good. Let me know if there's any comments or questions along the way, but it's going to wrap it up for me. And for being with me, you can always get that phone, that email address as well.
Thank you, Eric. That was packed with value, and your exclusive offer today is sure to get traders thinking differently about automation and consistency. Well done. We appreciate it.
Thanks for having me.
Thank you. Thanks for being here. Next, we're bringing in Will Busby, founder of Pure Financial Academy, who's going to break down how to measure corrections in real time, size positions smartly, and spot key price levels. This session is all about precision and execution. So let's go, Will.
Hey guys, thank you so much. Real quick, I'm not seeing the screen share option. There we go. Okay, thank you so much.
Welcome.
Let's see. Let me go ahead and stop that and select. Give me just 1 second, folks. Sorry about that. Okay. There we go. Now that option is back up. So let's check and see which one we can get you all on. There we go. Just confirm if you would. Are you seeing the presentation? Hey, Anthony, if you don't mind, just kind of let me know if you're seeing that. Okay. Maybe someone can type a Y. Let me go. Give me just 1 second. If you can type into the chat. Okay. Thank you, Eric. I really appreciate that. I want to make sure that I'm on the right chat as well, so I'll kind of focus on that in a little bit. So let's go ahead and get started, everyone. Yeah. So I appreciate, sorry about the little inconvenience here of getting started, but we got it going, I believe, as we're all set. All right, I want to get started quickly and promptly because we'll get through a decent amount of material, but it was interesting because I happened to catch just the tail end of the prior presenter there. Good job, by the way. And I just wanted to make mention, again, I found it just ironic. I loved it because he talked a little bit about margin and getting margin calls and things like that. So hopefully we're going to really love the Invest Suite presentation because that is a massive feature that we implemented. And please don't let me forget, as I'll come back to that, I actually want to tailor a little bit of the presentation around that just because it's so very critical, so very important. In fact, funny thing, before we get started, I'll tell you the market decline right now, I'm actually using the tool as we speak because I want to ensure proper everything that we're going to talk about today, and it'll make a little bit more sense as we get started. So we're going to talk about the Invest Suite. It's specifically designed for NinjaTrader 8. It's so robust. I mean, the abilities that we have for coding purposes and just our capabilities are so vast that, yeah, we do extensive development for NinjaTrader 8. Okay, so what we're looking at today is an investing technical analysis, which we have attempted to make extremely simple for ourselves, as well as anyone having the tool, of course. All right, so as we get started, I do want to make it clear that trading, this being all for educational purposes, trading, of course, contains substantial amounts of risk, not suitable for everyone. I'm not a licensed professional, please remember that, and everything here should be considered hypothetical. Okay. We'll go ahead and run through the, as you all know, about the CFTC rule most likely, but again, as I said, all considered hypothetical. Okay, very good. So what in the world is the PFA Invest Suite? So it's a comprehensive technical analysis toolkit, and it's tailored, as I said, for NinjaTrader 8. It consolidates essential investing data resources into a single integrated package. I can't tell you how much we use this. And I just want to preface the entire presentation with, I realize that there are a lot of people probably here today, and more so that we talk to, who are what I would consider traders, right? So they trade, day trading, things like that. And this is applicable across the board. Having said that, it is predominantly applicable to investing. So like I said, I just wanted to preface it with that. As we get through the presentation, I think that will become, abundantly clear. Okay, so it monitors historical as well as real-time evolving corrections and extensions. Automatically calculates position sizing. This one, of course, for us is absolutely critical. As the markets are moving, at any given time, I'm thinking to myself, okay, great. Let's take today, for example. We're getting a pretty substantial decline. Okay, great. Well, I need to be able to, decipher through all of this. I need to determine how many contracts specifically pertaining to the futures, but it could be applicable to equities as well. I need to know, without doing major calculations, based on notional value, again, we'll get to all of this, what can I afford based on my account? What can I afford to enter? Maybe one contract, maybe 100, who knows? But at the end of the day, it's going to do those calculations for me. So this, as well as the many other, is a critical part of everything, and especially in the fast-moving markets. Today, price is dropping substantially, so if I go in and I began the day, I may be able to execute, let's say, 2 contracts, right? By the end of the day, I may be able to execute 3 or 4. And I need that to compute. I need that to show me in real time what I can do, so that I'm not having to constantly track the market up and down, as well as calculate against my account, right? Very important. So it displays significant price levels directly on your chart, delivers essential market metrics in a customizable info box. And the suite offers simplicity and clarity, making it suitable for both beginner as well as seasoned traders. I should put there, and investors, without unnecessary complexities, right? So why does this matter for to most traders? Understanding the position sizing and market corrections are fundamental to investing effectively. Markets naturally move, as we all know, up and down, creating corrections that provide context. Knowing the exact size of said corrections helps to inform my own trading and investing decisions. Proper position sizing is, of course, and as I just touched on, essential for consistent risk management. And having all the information in one place saves exponential time. And of course, it reduces confusion. As I was saying just a moment ago, just an example, right? That's just one part, but position sizing, I would say, is a pretty important one. And just having that information there readily available, so that I'm not having to overly think about things, is always optimal. The Invest Suite presents this information visually, giving you a complete picture without complex calculations. So let's look at some of the core analysis capabilities. If we have time, by the way, I will actually get out to the live charts, and we'll take a look at this functioning in real time as well. So the core analysis capabilities, the heart of the Invest Suite is its constant tracking of ongoing price movements as well as corrections, right? So when we say corrections, just understand that a correction could also be similar to an extension. In other words, one's negative, one's positive. So if we refer to corrections, just know that it is computing that on both sides, positive and negative. If you might want to think about Fibonacci retracements and extensions, right? So we're handling both sides of the market. One case scenario there might be, I want to enter at X percentage decline. I want to have a profit target at, an extension percentage on the upside. So that's just, again, one case scenario. It automatically identifies highest price point, calculates those pullbacks and extensions I was referring to. It does this in both percentage as well as point terms. Some of us might love the percentage values, but some might want that literal number that says I'm, 73.25 points above or below. You get the idea. Okay, so this gives us immediate context for current price action. Additionally, daily and year-to-date tracking helps you understand how today's movements fit into the bigger picture. I love today the way that it's happening. And again, I want to get out to real time as quickly as possible, but having all of this there is crucial, constantly computing in real time. So that being, quite important. As we move into what we were referring there as the daily and the year-to-date tracking, I'm sure you've all been watching, let's say CNBC or other outlets, and they're commentating, and you'll hear, hey, the market is down X percent today, it's up X percent or what have you, or, we're up or down X amount year to date, and so on. Well, we don't have to listen to that. I mean, we love to listen to it, but we don't have to, as it can be right there on our chart functioning in real time, right? So the visual information system, let's go ahead and take a look at that. It presents critical information through a customizable information box directly on your chart. It shows multiple tracked correction percentages, daily changes, and position size calculations. I did mention at the beginning of the presentation, I'm going to mention it again. There are other things that we're going to be doing a follow-up session on Friday. I would encourage you all to be there because we'll do nothing but be out on the live markets and do all of this in real time. But there are really cool things like the margin call. Again, I'm going to get back to that, very important, and we'll put that to work as well. You'll see that today as well if we can get out to the live charts. So it can be positioned in different locations on the chart, some basic stuff, right? You can choose from horizontal or vertical layouts. This is just a very basic thing, but ultimately, how do I want that to be visible on my chart? Maybe I like really clean charts. I do personally, so I like to keep it, I don't want it to take up much real estate on my chart. There are a lot of calculations being derived. So it's fully customizable in its appearance to match your own preferences. It ensures important data is always available at a glance without switching between indicators. So I want to stay where I am, I want to get all of the information, and I want to make very promptu decisions. So the information is at our fingertips. You can see here in the left, or rather on the left side of the screen, we have some calculations there. Within the information box, you'll find key metrics organized in an easy to read format. So it's pretty basic. I mean, we don't want to complicate what doesn't need to be. At the end of the day, once we understand what these calculations are, we can look back and say, oh, that's, of course, this is, very simplified, if you will. So it's the algorithms underneath the hood are just, they're vast, let's say. But ultimately, the information that's being spit out it needs to be simplified. Like, for example, if we're using Word, a Word document. All I need to know is that I can type in and create, I can write whatever I want. I don't really need to understand all the algorithms. I just want the information. The current correction percentages from multiple reference points. Daily and year-to-date market changes, touched on that a moment ago. We haven't touched on this one yet. Notional value calculations. I'm not sure, if we have savvy investors in here, you probably knew that term right out of the gate. So notional value, if you're not familiar with it, I would encourage you to do maybe a quick Google search. As far as investing goes, notional value is very, very, very important. If I don't know what the notional value, and this is pertaining to futures contracts specifically, right? But if I don't know what the notional value of the, of the E-mini contract is, and then I attempt to invest in it, I could get a margin call very, very fast. And again, ironic timing coming in, with the gentleman speaking in regards to that. But the notional value allows us to, of course, populate all of these calculations as a derivative. Okay. Position sizing calculations, we talked about this. Trade exposure. So based on the notional value, based on the position sizing and so on, I can, at any given time, look at right there at the box. And I'm not sure, let me do this really fast. I think you can do a visible thing here. Pointer and just make this visible. There we go. Okay, so now you should be able to see my mouse. If you look over here in the left column, I can see what my trade exposure is. So currently, if I'm trading 4 contracts with a notional value of 29,585 on said, in this case would be micro S&P, I would have a trade exposure of $118,340. That's for 4 total contracts. So it's going to do all of this calculation. It's going to pull my account, and it's going to say, hey, you can trade at this given time 4 contracts. Now, if the market changes in real time, as it always does, This too will auto update, and it's not just like it doesn't update, you know, frequently. I mean, it's real time update, so it's going to be constantly changing and evolving, if you will. All of the information updates in real time, as I just mentioned, as the market moves, giving you continuous awareness without manual recalculations. Kind of put the cart before the horse there, didn't I? Okay, so we're just basically expanding on this, kind of let you see some of the information that's in the box. Okay, some of it is missing. You can enable, disable. Again, all of it's very customizable. I could show any, all, some of this. It just depends on what's most important to us and what we really need at the given time and you know, when we're investing. Let's look at the visual price level system. This creates a dynamic visual framework on your chart with horizontal lines at key correction levels, and you can specify these levels. Examples here, 5, 10, 20%, etc. As I mentioned earlier, we can set negative or positive values. So that's where we're going to come in and talk about corrections versus extensions. So this is going to highlight those key market levels. I need to be not only aware of the calculations on my chart, but I need to see it. For me personally, it's very important. I can submit my orders, you know, I can place them on these key levels. It's, you know, it's very important for me to be a visual or have visual aesthetics, excuse me. All right, so it also has clear labels showing both percentage and actual price values. Optional vertical line marking where the highest price has occurred. So what is the highest price? Ultimately, it's doing all of these calculations, and there are so many things that we can compute this on, but it can track constantly, so it can validate the high of the market, such as to say the all-time high. It could also validate from a very specific date and then track that going forward. So let's hypothetically say that I entered into a position 1st of January. I can tell it, no, I want you to start on that day and track it going forward because that's when I entered my position. So what is a 20% correction? What's a 10% extension? How many contracts can I trade? And so it's going to calculate all of that so that I can, again, maintain my current position. The system provides immediate reference points for potential support or resistance areas, creating a complete visual context for understanding market corrections. Moving relatively fast, this is good, okay? So let's look at this a little bit larger, put a little price action chart up here so we could see, give it a little bit more visual appeal. Again, these are very basic. You can see these lines on the chart, but ultimately what this is doing is tracking this ongoing. And you can see down here we have a 5% correction at 58.58. A 10% is going to come at 55.49. Now at the time that we put this image in, we were not trading in the 56 to 5900s, were we? Or are we? Excuse me. Yeah. So we were at this time, but we've moved down quite a bit from that. And so it's been very nice. I'll actually show you when we get out to the charts how we've reacted at these particular levels. Okay, so again, up here you can see what's called our base price. And I believe we touch on this a little bit further, but the base price is ultimately where am I tracking from? In this case, you can see that we're tracking from the high. So if I said, look, I want you to track from, let's say we'll go from October back here, but I want you to continuously track that. What it would do is ongoing, it would continuously track. And as you can see, that's exactly what it's doing. So the base price is moving with the highs of the market, right? And then at such point, until it makes a higher high, it becomes static. And that's what's happened right over here. So this was the highest high, comes in at 61.66 quarter. This is on the March contract, by the way. And that became our base price. We're going to then become, we are going to derive the further calculations from said base price. So hopefully that makes sense. I'm sure that it does. All right, so position sizing made simple. Managing appropriate position size is crucial, as we know, for consistent trading and investing. The Invest Suite includes powerful tools that automatically calculate trade sizes based on your account value and risk parameters. You can use a fixed account if you want to. So for example, I can input the fixed, I could say, I want you to base all of this on a $100,000 account. Okay, I could do that, absolutely. That is a capability. Or I can connect it to my live trading account for real-time calculations, with all calculations respecting your maximum and minimum position limits. So to each his own. I like to connect it to my account so that it has the actual value, and then it can spit that back out for me. We can see here where we have flexible sizing approaches. I have implemented these for very specific reasons, and let's just stay focused on the ratio. This is probably the most straightforward one. The ratio is going to track the ebb and flow of the market. So as it moves up, as it moves down, it's going to constantly track based on that notional value and then derive all of the calculations from that as well. Okay, so again, it takes the ratio of the current market, the current price, and it validates all of the calculations based on that and the ratio of the notional value. Okay, so it offers several approaches to it, some of which the ratio we just touched on, but there are others, and I don't want to go too far into this. I can go as far down the rabbit hole as we like. I would prefer to do that on Friday. And we're doing just a free, you can subscribe to our YouTube channel, by the way. If you want to do that, that's where we're going to do it. You can turn on notifications and so on. So there's no cost or anything, just be there. So the threshold methods, it divides the account by a set dollar amount. So I can specify that dollar amount as well. The ratio method considers both account size as well as the instrument value. Special features, in addition to that, we can have what we call a no decrease, which maintains positions evolved minimum. So if I've evolved from 1 contract to 3, I can say, okay, going forward, constantly tracking, set that minimum. I don't want to go back below this, all right? And that's where that margin call, we can focus on the margin call aspect, because that's going to keep track of that as well. And it's going to throw a very big warning at me and say, hey, you don't want to be in the market at this point. And it gives exact price values, percentage, and so on. We also have an increase if lower feature, which requires lower prices to increase the position. In such case, I could say, okay, I'm trading 2 contracts, great, but I would really love to go to 3 or 4 or 27, but I'm only going to increase my contracts if the value is lower, right? So if we go down in price, and the reason for that is it essentially decreases the notional value, which increases my ability to invest in more. Simply put, I have more money to invest the lower that price goes. So I can require that as well. If price goes up and I'm trading 2 contracts, as price increases, if I'm not in the market, I'm losing notional value. So I need to factor that in and decrease potentially my contract size to ensure that I don't get a margin call. So that all the options are easily configurable to match your personal trading approach. Customization for your needs. You can adapt the PFA Invest Suite to your preferences with select, for example, which highest price to track. Touched on this a moment ago. So we can, I'm going to go a little bit further here. When we're doing the tracking, the Invest Suite intuitively will handle all that for us, but it needs to know what we want to track. So in such case, we can track based on the high, close, open, or a custom value. This we found to be very important. I've found in my experience that a lot of investors who have been around for a very long time, they tend to use the close price versus the high. It's, to each his own, like I said, but the capability is there, all right? You can choose which correction levels to display, both horizontally and real time. Set colors, line styles, and the information box appearance. So, whether you're using, let's say, NinjaTrader's dark theme, their light themes, and so on, you can, of course, adjust it to your liking. Configure position sizing parameters to match risk tolerance. Save settings as templates for different charts or instruments. So this is rather native to NinjaTrader. In the settings, you can, dependent upon what you desire, but you can make all the changes that you want and simply save it as your template. And that way, anytime you open it again, you can load that template without making those changes. The visual customizations, of course, enhance readability with the user-friendly UI. It is simple to implement. Getting started is very straightforward. It installs directly into NinjaTrader via our custom installer. So like, pretty much any software these days would do. Add to the charts like any native indicator. You can begin with those with our preset configurations. Adjust the settings as you become familiar with the features. And again, there's so many that I wouldn't expect. This is such a short period of time. There's no way we can go through all of them. But on Friday, we absolutely will. You can save your favorite settings as templates, as we just mentioned. The learning process is intuitive with immediate visual feedback. Plus, as always, we are very happy to support you ongoing. So let's look at a real world application. In this real chart example, you can see how the Invest Suite brings clarity. Correction levels clearly show the extent of the market pullbacks. The information box provides immediate metrics without clutter. It's very simple. Position sizing calculations help maintain consistent risk exposure. All elements work together to give a comprehensive market view. That one's really important because everything that we talk about so far, hard to explain, I suppose. This most basic version of it would be to say on the back end, the algorithms work together as a team. One may need the other, right? So let's say, for example, that notional value. Without the notional value, I couldn't compute the number of contracts. I couldn't compute many things. So they are working together collectively. All right. This consolidated information supports more informed trading and investing decisions. Let's look at that image again. Just some visual aesthetics there. Be a little bit more appealing on the charts. And the benefits to your trading. It transforms complex analysis into clear visual information. Saves time by consolidating multiple functions into one single tool. So again, we don't need to have different news outlets. We don't need to have a bunch of different indicators, calculators, and so on. I can have it done for me in a single tool on a single chart. Reduces chart clutter while providing comprehensive information. Provides consistent reference points for decision making. Promotes disciplined risk management through position sizing. Enhances your trading process with valuable market context. And yeah, there we go. All right, so as I said just a moment ago, or probably multiple times now, we are going to do a follow-up event. Let me do this really quick. You can see the link there, but I tell you what, give me just 1 second, folks, and I'll get you these links directly. Okay, let's see if I can make sure that I have. You know what? I'm not seeing the chat. So do me, if you don't mind, Traders Corner there. If you don't mind posting the links, I would really appreciate it. Just so I don't delay you all or anything like that. That's the link that you're seeing on the screen right now. That's literally just a newsletter registration page. If you want to sign up for that, it's obviously free for the newsletter, but ultimately you get invites to any events and updates that we may provide. So for example, you would get an invite to this follow-up event. Conversely, we can go directly to YouTube if you wanted to do it that way as well. So again, that's where we're going to do the this follow-up event. And I'm going to also paste in a subscription link. That's just, here's what it does, just to be clear. That link sends you directly to our YouTube channel, and it also it'll populate this subscription, not like subscribe, but it'll pop up a pop-up that asks you if you want to subscribe to the channel. If you do, that way you should get instant notifications for any of our ongoing YouTube live streams. We do those daily now, things like that. So you would be notified of that as well. Okay, very good. So of course, like I said, free, that's going to take place definitely not Monday. So we got that wrong. I think that was from the prior. So it's going to be Friday, the 18th, and it's going to be at 10 o'clock a.m. We'll put this to use, like I said, in the real-time markets. All right, very good. And then of course, we couldn't be here without a special offer. We've only offered, in fact, this is the second time only that we have even launched this to the public. And so therefore we decided to push out the same 60% off discount. Okay, so hopefully that helps a lot. I mean, at the end of the day, it's only $3.99 anyway, but you know, for the next 72 hours, you can get 60% off of that as well. And in order to do that, I will give you the direct link to that. There we go. So that's the link, and just use the coupon code here, Invest Suite, on the checkout page. I'm sorry, not Invest Suite, Invest 60 for a whopping 60% off. Okay. Okay, folks, let me see if I can now get out to the charts. There we go. I love this. I'm so excited. So if you've ever been a part of PFA, or if you've been in our recent live streams, anything at all, you know that you would probably be sitting back saying, oh boy, they're very excited. Yeah, so it's been very good for us, and I'm loving this. I really don't like the aspect of the market going down. Don't get me wrong. In a general sense, it's a very sad thing, because I don't want that to impact 401k accounts. You know, people across the board, it's terrible. You know, a lot of people can get hurt that way. Having said that, hopefully those, you know, intuitive investors were maybe able to close positions, I don't know, re-enter, or dollar cost average. There's so many ways to go about that. But yeah, so I can't apologize for wanting to buy it lower, right? At the end of the day, if we go to the car dealership, right? Maybe I want to buy a new pickup truck, and if I go there and the MSRP is $75,000 for the truck that I want, I would never apologize for wanting to buy that truck for $70,000. Okay, so that's kind of where I'm at today. Really like the decline. If you were in our live streams, you've seen this level on our chart for weeks, long time actually. So out of this entire decline, we had this level and this level, well, these levels rather. In other words, none of these levels up here, but we wanted to buy the market specifically at 48.16.5. So of course you can imagine trickle little tier when the market went down to 48.32.5, if memory serves me correctly. I'm not kidding you, missed that by 16 points. Tough day, right? All joking aside, it happens. What are you gonna do? So let's look at the Invest Suite. As I said, you'll see it working in real time. Note over here on the left, the bottom left of your screen, I mentioned that you'll see these updating in real time. So you can quite literally see the numbers changing as we speak. I can tell you right this very moment, the notional value of the micro S&P is $26,000, 26,450-ish. Okay, it's fluctuating there. So based on that, if I entered the market right now with 4 contracts, I better have enough funds in there to not get that warning, right? I don't want to see that margin call. So I would have a trade exposure of $105,775, okay? If I had that, the futures markets work differently, okay? So the equities, you know, I could go out and buy SPY, which is the S&P 500 ETF fund. I could buy Apple, I could buy Tesla, I could buy Coca-Cola, you know, you get the idea. And I could ultimately just hold those. There's no expiry. However, on the futures markets, there is. In the S&P specifically, it expires quarterly. So I want to always be aware of that. I'm going to have, no matter what, I know that if I invest in the futures contract, I'm going to have to roll that position at some point. Many times, in fact, right, depending on how long I'm holding positions. So in addition to that, we have margin. I love the futures markets. I really do. They're my favorite asset. But you know, if they're not well understood, they can be very, 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 very dangerous. So some of the tools that we use to mitigate that, I'm going to scrunch my chart down. Remember before I told you that we would have our base price and then the corrections, as well as up here we have extensions. That's going to auto-populate. It'll even put the proper text there for you and everything. But let's keep scrolling. So I know right now, if I entered into the market, specifically, again, the micro S&P futures, with 4 contracts, when I decline, or rather when the market declines 76.09%, and I reach a value of 1,474 quarter on this particular instrument, I'm in trouble, right? I'm in big trouble. I have effectively just wiped out my entire account. And the reason for that is because of the margin. So don't quote me on this. I would encourage you to go out to the CME's website. They give you these numbers, and I will tell you, I have seen them update more recently than ever before. So when you're seeing extreme volatility come in, more than likely you're going to see, like, for example, the exchange of CME in this case, they're going to update the margin values. And yeah, so there's a lot that goes into that. But anyway, right now, I don't need to guess at it. I have the value on my chart as we speak. So I'm going to get a margin call at 1474 quarter if all of this is based on my account, right? And as I go in, I can see the current low that's tracking the low of said bar. I can tell you right now that the low for this week has been a negative 14.31%, which is equivalent of 882 half points. Current price, as we speak right this very moment, we are 14.28% negative on the micro S&P futures. All right, so just having these analytics is a pretty powerful tool for investing purposes, right? The lowest low I can see, we've been down 21.63%, 1,333.3 quarters points there. Today, we are down 2.6%. Year to date, we're down 10.98%. The notional value is currently 26,400-ish. Settlement price, this is important, settlement is not the close. So the exchanges have to come up with a settlement price, and that could be different from the actual close value. So we're tracking the settlement, which is yesterday we settled at 54.28 quarter. Again, I have a lot size tradable at 4. I can trade 4 contracts with a trade exposure of nearly $106,000. And again, I am warned. Okay, down at this level. There is a new feature that I want to talk about. I'm going to talk about that. I'm running out of time here. I have roughly 10 minutes. So I'm going to talk about that feature on Friday, and it is very cool in my opinion. I don't know if that's the right word to use, but not very professional, I suppose. That being said, it's very nice because I can track everything in real time, but I can adjust it as well. So again, we'll go into that. So I may want to adjust things. Like right now, if I wanted to adjust to current price, I could say, look, where would my margin call be if I enter the market right now? Well, I can do that, okay? All I have to do is click and drag, and all of that becomes intuitive, all right? In fact, what are you waiting for, Will? Let's do it, all right? So I know based on, I'm just gonna go ahead and do it. We'll launch it right here, right now. I wasn't planning on doing this, but let's do it anyway, okay? So I can grab my base price, and if I wanna pull it down, and say I enter the market right now at 52.92, I understand that my margin call drastically changed, right? I'm now down to 600 before I have anything to worry about. Now you can probably see why that notional value is so very important, and why keeping track of all of this is just absolutely critical for any intuitive investor, right? So let's right click, we'll reset, good to go. I'm not going to touch on this one too much more or anything other because I am limited on time. Again, on Friday, please make sure you grab those links, sign up for the free newsletter if you want, or just simply go subscribe to our YouTube channel. I would encourage you to do the newsletter. Reason being is because oftentimes we'll send out updates for software purposes or something to that extent. So you might want to do that, but I'll leave that up to you. Again, 60% off. Invest 60 is the coupon code. You have the link there. I hope that helps. And if you do have any questions, I have about 8 minutes here. I'll knock them out and then we can conclude. And I do sincerely apologize as well, folks, because Anthony, I'm not sure if I have this. I don't see the questions, but I didn't really see the option to do it. Currently, I have it on organizers and panelists. Let's see. That's okay. If you and I will definitely address. Oh, there we go. Thank you so much. You guys are amazing, by the way. Yeah, you've done this a few times, huh? Oh, Traders Corner, you guys are amazing. I really appreciate everything. So there we go. Now I can see if you all do have any questions, do post them into the chat, and I'll get to those promptly in the next 7 minutes. Very good. Let's see. I love that we're doing this together in real time, folks. I really do. As we're looking at this and as we're discussing, I'm waiting on the questions if you have them. I did mention I would show you how it reacts to our levels, and these are just basic levels. I could ultimately put in there 38.2 if I wanted to, right? Any number, it doesn't matter. But notice how we come down, we tag this 5% correction at 58.58. We get a pretty substantial rally off of that. These are weekly bars. We then come down to our 55.49, 10% correction, and we rally substantially off of that. And then finally, we've arrived at our 20% correction. At such point, wow. I don't know if you were all paying attention to the market on that day, but that was historical. It was very impressive what the traders and investors are capable of. I was very shocked. But, you know, hey, we're shocked all the time, I suppose, right? Okay, folks, listen, I don't see any questions coming in. Hey, I could be missing them. I apologize if I am. Email them over to us directly through our website at any time. Absolutely jump into the live stream on Friday, grab the discount, sign up for the newsletter, and I will ensure that you are well taken care of. You have nothing to worry about there. Again, we're always very happy to support any and all folks who come through PFA. Okay, God bless you so much, and thank you all so much. Traders Corner, really appreciate you all putting on this presentation, allowing us to, and we hope the rest of it goes extraordinarily well. All right, take it from here, guys.
Hey, thank you so much. Outstanding, Will. Your toolkit is a true edge for active traders, and the offer you've made today is incredibly generous. Thank you.
Thank you so much.
Yeah, thank you so much. Next, let's switch gears to the world of back testing, strategy automation, and simulation. Jeremy Tang and Zach White of Shark Indicators are going to show you how to test your system before you ever risk a dime with their intuitive tools, Bloodhound and Blackbird. Traders, this is how you reduce errors and increase confidence. Zach, I think you're on mute. Same thing, Jeremy.
There we go. All right.
Okay, great.
Thanks. This is Zach. Yeah, I had to click the unmute button a couple times there. There we go. All right. Well, I thought we were gonna start here in 4 minutes. So Jeremy, I know Jeremy's here.
Do you want me to make you the presenter or Jeremy?
Jeremy's gonna start off as the presenter.
Okay.
So.
Yeah, sorry, I guess we started a little early.
There we go. Jeremy's coming in.
Hello, hello. Just doing a mic check. Can you hear me?
All right, we got you, Jeremy.
All right.
All things are go.
Good. Okay, can you see me too?
Yep.
All right, thank you for that. Thanks for hosting us again, Traders Corner. It's always a pleasure to be here, and especially following our friends at Pure Financial Academy. Will there, it's a pleasure again. You just heard the voice of Zach White. My name is Jeremy Tang. I'm one of the co-founders of Shark Indicators. Zach, how are you doing?
Good, good. Hey, I hope everybody's ready for Good Friday coming up and then Easter Sunday.
That's right. A lot of action in the markets recently, isn't there?
Oh man, tell me about it.
Yeah, it's been
right. Aren't we all clutching onto our retirement plans right now?
Yeah, it's been a bit of a wild ride, but you know, we've seen these kind of things before. And today we're going to kind of focus a little bit about that. That's because it's pretty much on everybody's mind. I think you can't really turn on the news and, you know, without seeing some sort of message about the volatile markets. Obviously, the trade, the tariffs are kind of like front and center for a lot of traders and investors. And really, we just have a lot of volatility. And today we're going to talk about how we can trade in volatile markets. Okay, so let's back up a little bit. I'm going to talk a little bit. I'm going to mention something like we're going to talk about trade systems. That's really what this is all about. You know, and if I've got a chart here about up here on the S&P 500. And like I said before, we've seen these times, we've seen these sort of drawbacks, we've seen these sort of pullbacks or recessions or whatever you want to call them in multiple times in history. And in fact, if you were to argue, the S&P or the broad market tends to go up about 70% of the time, which leaves about, and of course it depends on kind of what your time horizon is when you measure that, but that leaves about 30% of the time where if you're not kind of a value investor, or maybe you're more of a sophisticated trader, you have to figure out how to trade in markets where it's not constantly going up. And so let's look at two very recent events. I'm sure all of you can remember the COVID pandemic. That, of course, had a huge impact on markets. As you can see in the chart here, this is 2020, right? We had this humongous drop and then this really slow, steady march up that continued for about a period of 2 years. And then similarly, but slightly different in slightly different circumstances, we had a bit of a hiccup in 2022 as well, right? And arguably this could be because you know, we had a market that was marching up constantly for 2 years. There's going to be some kind of pullback or whatever. But a lot of things kind of happened in this market, which we're going to talk about, because what we want to do is try to figure out how are we going to trade today, right? So presumably, you know, you're trading, you've got maybe some sort of methodology or trade system, and you know, you got a set of rules, and they work. Presumably, they work well in this kind of market in the past, right? And in fact, I would say even this kind of market, you know, if you're just a simple investor, you just buy some stocks and go to sleep and you'll do just fine. The tricky part is this transition though. Those investors or those people that did that kind of strategy, buy and hold, if you call that a strategy, right, wouldn't have done so well in this period. But turns out this volatile period is actually a time to make a decent amount of money if you know what you're doing, right? And so the question is, do you guys think, is it going to be more like this recovery period, or are we going to see something more like this? Okay, and I can't give you the answer to that. I'm not an economist, nor do I have a crystal ball, but there are some things to point out, right? Number one, this was caused by a lot of inflationary pressures, supply chain issues, and if you think about it today, right, the Fed just spoke today about inflation being a concern brought on by the tariffs. Tariffs also are trade barriers, very similar in effect to supply chain issues, because that's gonna gum up the international supply chain as companies are rerouting and reconfiguring stuff, right? There's gonna be hiccups there. So arguably, you know, we'd be wise to try to find a trade system that does well in this market here, in the hopes that we can use that to trade a very similar market condition going forward, right? Does that make sense? So again, how do we do that? Well, like, we got to create a system, and then the idea is, and we're going to show you in a moment how we're going to do this, is we're going to create a system, and then we're going to back test it. We're going to test to see how well would that system have performed in this market condition. Because if it performs well, and your hypothesis is that going forward it's going to be very similar to this section here, then presumably that same trade system will do relatively well going forward today. But of course, you have to sort of agree with me that that's what's going to happen going forward. So here's a great tool in your tool chest. But let's talk about back testing, because this is kind of where it all starts. So say you've got a system, you've got some rules, and you got some ideas on how you're going to trade this. Now you got to see how well it's going to perform in that little section of time that we pointed out. Okay, so the old-fashioned way, right? You got your system, you got your charts up, You can start marking off, you know, your buy entry points, sorry, I should say, not buy or sell points, entry points, and your exit points. Then you got to tabulate it all in a big spreadsheet, right? And as you can see, that's a pretty time-consuming process. And imagine, you know, you've got your trading idea and you're just kind of working it. You still got to do some tweaking to it because the first time around, you're not going to probably be happy with the initial results. More than likely, you're going to have to kind of do this cycle. You have to do this a couple times, and only then will you kind of finally arrive at some trading rules or a trading system that you'd be happy with to trade. Of course, because this is a manual process, that year might be over by the time you even get a chance to do it, right? So obviously, there's a way faster way to do this. We can actually use computers to do the back testing, because why not? I mean, that they're great at crunching numbers. So obviously, why would we not take advantage of that? So let's think about that for a second. How do we use the computer to backtest? Well, you would have to tell the computer when you're going in. You'd have to tell the computer when you're going out, your entries and your exits. And presumably you'd have to tell the computer as well if you have some ideas in terms of how you're going to manage the orders, profit targets, stop losses, and the like, right? That's all part of your trade system, right? It's not just entries and exits. Really what you're building, actually, when you think about it, is a full-blown auto trader. And I think a lot of people don't really make that connection. You need a full-blown auto trader in order to pull off a back test, right? Not just for execution, but just to pull off the back test. And to build an auto trader, well, I mean, you got to learn, you got to basically, you know, unless you have our software, we're going to talk about in a second, you got to be a coder to do that. And that's kind of where we come in, is we offer, and we've been doing this for over a decade now, 13 years. We offer software solutions to build your own auto trader without having to code, right? So you can use a really nice graphical node-based interface, and as you can see here, you could mark up charts really quickly with entry signals or exit signals or setups, whatever you like. It's a very flexible engine, and that's kind of like what we're going to show you today. And so what we're going to do today is I'm going to introduce two pieces of software that work in conjunction together to build these auto traders. One is called Bloodhound. And again, this runs on the NinjaTrader platform, so it's for NinjaTrader users. And if you're not on NinjaTrader, you know, you can definitely download it. And actually, there's a free version of it as well. Our software works with that, and it's great for study. It's great for research, like we're going to do today. We're going to do back testing. And so you basically have Bloodhound, which is our first piece of software, which is a logic and no-code engine, no-code logic engine, which allows you to describe signals. It could do more than that, but we're to keep it simple for today. We're going to talk about signals, entry signals and exit signals. You can then plug that into Blackbird, which is the order side or the trade management side. And then that in turn allows you to do the back testing, which is what we're going to do. And we're going to try this out. So the two together, these two products, when you combine them together, actually lets you build fully automated trade systems that are your own. Okay, so what we're going to do now in a minute, I'm going to pass the buck over to Zach, who's going to build one of these trade systems and tweak it. And I'm going to show you kind of how, with the process we go through to do that, and get some back testing results. All right, Zach. All right, I don't think you can hear you yet, so just, and also possibly you got the wrong monitor shared there. Oh, Zach? Yeah. All right, bear with us with some technical difficulties. Okay, Zach, we still can't hear you, or at least I can't hear you. Can any of you guys hear Zach?
No, I had my mic still muted there.
There you go. Okay,
great. Working on, getting the screen share switched over. Okay. All right, so I get to do the fun part here. I get to demonstrate the software for you. So I'm going to focus in right on this consolidation period that we just had right a couple of years ago, as Jeremy kind of outlined. And what I'm going to do is I'm going to take this, I think it's fair to say this is a fairly well-known system there. It's called the Connor RSI2 system there. If you haven't heard of it, yeah, just do a Google search, you know, and you can find out the details. But it's really a simple system here. And I'm going to explain it here in just a few seconds. So what it does is the Connor system it was designed for the S&P 500 index there, right? And you can see all of these green vertical lines here. This is Bloodhound, right? So this is partly what, you know, Bloodhound can provide you there is, you know, green typically denotes buy signals, right? And red typically denotes sell signals here. So we can see that this Connor system generates buy signals only, right? Because as Jeremy mentioned again, right, the market's, you know, on an overall average kind of trend, you know, upward 70% of the time there, right? So it's designed that when you get a pullback, right, it gives you a buy signal there. So you can kind of see on some of these little micro pullbacks, a buy signal, pullback, buy signal, little micro, right, pullback, buy signal, so on and so forth, right? But when there's market consolidation, like we have here, right, we can see there's no signals here. And that's due to it using the 200-day moving average there, right, as its trend filter there. So, right, so when the market kind of rolls over, right, and the market's below that, then there's no buy signals here. So what I'm going to do is I'm going to use Bloodhound to demonstrate, you know, how you can build, you know, one of these systems really easily. Again, right, these green buy signals here are coming from Bloodhound here using this graphical node based interface here, right, to build these entry signals. So I'm going to take this existing system here and tweak it to see if we can modify the system to work right in these kind of consolidating, you know, or even downtrending periods of, you know, when the markets are kind of uncertain here, right? Because again, right, our big question is, you know, what's this next year going to be looking like, right? We can already see that this Connor system is not going to work anymore, right? So can we find something, you know, that kind of fills in and works for these uncertain markets here? So, all right, so so here's my narrowed down focusing chart here for just 2022 there, right? That little uncertain period. And one of the things I'm going to do to modify the Connor RSI system, right, is again, remember it uses a 200-day moving average. Well, we can see the 200-day moving average is pretty much above the market most of the time here, right? So if we're going to modify this, right, so that it gives us buy signals, you know, when the RSI there is bottoming out and goes oversold, you know, and then sell signals when the market, you know, is above a moving average and that RSI is going into overbought territory, right? So I want to use a little quicker, faster moving average there. And, you know, I just kind of played around with it a little bit, you know, and 75 period, you know, looks to seem to be pretty good. So I'm going to test that theory out right now in front of you guys here. All right. So while I build this in Bloodhound, Jeremy's going to narrate there for you so I can focus on building.
Yeah. Yeah, and this is a very good way to come up with sort of some sort of you got to start somewhere, right? So Zach has found this Connor RSI system, but you could find systems all over the place on YouTube, or if you subscribe to Stocks and Commodities magazine, you can do that as well. That's a great way to start to get some ideas going, so that you can build it out. Right, and so this is a node interface, like I said before, and you can examine all sorts of stuff on your chart. So right now, what Zach is going to do is he's going to examine the RSI, and that was part of the original system. So that kind of gives you a good idea. So what he did there is you could select any indicator on your chart, and we're going to select the RSI right now. But honestly, you could select, it supports any kind of indicator that's installed on your system. So even the stuff that you saw earlier from PFA, our friends there, like their indicators are compatible with Bloodhound. But if you've downloaded indicators from Nexus 5 or wherever, you can also select those too, and you can incorporate that into your trade system. And so anyways, let's go back to the RSI. So right now, Zach is trying to get those zones identified where you have periods of overbought and oversold according to the RSI. So what he's done is he's biased it in the opposite direction because the counter RSI is kind of like a counter trend type system. And so anytime you got this overbought situation, right, it's gonna bias you to a short signal and vice versa in an oversold situation. And as you can see, the chart has got all these markings on it already. So it's time to do what a lot of traders will do when they're creating their system, and that's to filter out some of these signals so that we don't get inundated with too many signals. And the original Connoisseur RSI used the 200 SMA as Zach mentioned before, but we're going to try using the 75, do some tests and see how that goes. Right? So sometimes you don't really know how well your system is going to do until you back test it, right? So this is really all part of the process. All right, so now we've got the filter marked out here, and you can see anytime it's above the 75, we're going to be looking at going in reverse direction, and anytime it's below the 75, we're going to be looking at going up, right, long. Again, because the system is sort of designed to be a counter trend mean reversion style system. So this will get us some nice buy and sell signals, which we can then plug in to the second component, as you saw earlier, the trade manager called Blackbird. Also, what we're going to do too is Zach has prepared exit signals as well, because Bloodhound, again, like I said, it's just a logic engine, so you can program any kind of logic you want and use it however you want, whether you want to use it for an entry, an exit, or like, we're not going to get into this, but you can actually use it as triggers to change the behavior in your trade manager to do certain things as well. So although we don't have time to get into that stuff, we're going to keep it simple today.
So as Jeremy mentioned, I'm kind of giving you bits and pieces here on this counter RSI system, which is the counter RSI doesn't use profit targets and stop losses. It uses a really tight moving average here as your exit condition there, right? So for example, like if you're buying, on these pullbacks here, then your exit is when price crosses this tight moving SMA there, right? That's your exit condition there, right? So the approach here is to try and keep you in the market as long as possible, until that market does do a pullback there, right? So like for example, this sell here, right? It would keep you in the market there until eventually, right, the market crosses that tight moving SMA there, like right there on that bar. So, all right, so we have our entry signals built here. And so next step is, let's pull up our strategy, right? And, the strategies are common for all trading platforms out there, right? The indicators are what go on your chart, and the strategies is what submits the order, so you can do back testing or auto trading, right? So this is our Blackbird, right? This is our trade controls, and this is where we open up the interface for Blackbird as well. So first step, for back testing is we need our trade signals there. So let's select the Bloodhound, and then we're going to load in our file. So this is something that you probably have never seen with a trading platform, is our software saves your system configurations to a file, kind of like how Excel, right? Once you build out a beautiful spreadsheet, right? You save that to a file so you can open up that spreadsheet later. So Bloodhound and Blackbird do the same thing here. So I'm going to load in that Bloodhound system there that I just built. And that next thing is to select the entry signals. So, right, so we made this RSI2 modified system there. And also this, right, this Connor system has exit signals. So let's go select our exit signals there. And there we go, right? All right, next step is create our entry orders. So this is just a market entry, right? So when you do get a signal, right, you just go long. Well, traditionally, right, you go long at the end of the day here. So, and as mentioned, there's no profit targets and no stop losses because the Connor system uses, you know, an SMA exit. So I'm just going to go with that, right? I'm going to try and just do as minimal amount of a modification here as I can, you know, see if we can get the system, you know, working with this period of consolidation here. So, so that was it, right? We're ready to go here. So let me save that out, and then the next step to do with is to reload the chart, and now we can get some backtest results there, right? So there you go. You can see the arrows there that NinjaTrader puts on the chart for us there, right? The sells and the buys, signals and everything. But what we're interested in here, you know, to see if our modification is working, is to pull up the strategy performance report, right? This is your backtest results. And first off, right, so we're submitting one contract, and I gotta say, not too bad.
Not too bad.
You know, yeah. And let's see, even our profit factor is pretty good.
I was going to say, like, one like number to look at other than just your net profit is look at your average trade as well, and look at your average winning and average losing trade, because those are kind of the numbers you'll experience as you're performing the trade itself, or you're performing the system, right? So you gotta, this is almost like a preview of what could happen, right? That's why backtesting is great, is because you can, okay, you gotta ask yourself, can I stomach a $3,000 or $4,000 loss?
Yeah. Right. Look at those metrics and see if it, you know, matches your, you know, your risk profile, because every person out there is different as to the amount of risk, you know, that they can stomach while that trade is on live, right? So, okay, so you know, if you're really paying close attention here, you might notice, right, some of these entries here actually have multiple bars here, multiple days where there's an entry signal, right? So, you know, what happens if we scale in additional contracts on those additional days, right? So as the market, right? So, you know, one common theme with this Connor RSI is as the market continues to go down, you will get additional signals, right? Because as this RSI stays oversold for multiple days, right, you'll get multiple signals here, right? And so the same thing with this modified version, right? As the market's heading up, you might get multiple days where the RSI is overbought, right? So let's see what happens if we scale in additional contracts there on those additional days. So what I'm going to do, right, is we have our first order set up here. So I'm just going to make a copy of that. And then I'm going to go in here and make an adjustment here because I want this to be a scale in order here, right? So I'm going to switch over here and I can add some prerequisite conditions here. So first thing I want to do is, right, I want this second contract, right, to wait for the next entry signal there. And then also, I don't want my scale-in contracts to buy at the same price, right? So, right. So sometimes you'll get multiple signals, but the market, yeah, I wish these bars were a little bit bigger, but you can kind of see how really there's not much price difference between those 2 days there, right? So I don't want my, so my thinking is, if I'm going to scale in, I don't want to be scaling in at the same price, right? I only want to scale in if the market goes much lower. So I'm cost averaging down into the trade at much, much better prices there. So I'm going to add, this other criteria here that says, all right, I want at least a 10-point separation, right, between, these scale-in contracts there, right, to hopefully spread those scale-in orders apart there, right? So there we go. So I got that done. And also I'm going to add some more contracts here. So let's save that. And next, let's reload and get our next backtest results there. All right. So strategy performance again. Check our historical backtest results. And as hoped, right, if you're scaling in, you would hope that you're at least going to double your amount of profit, right? So it looks like we're headed definitely in the right direction there. So
yeah, what's really interesting is the average losing trade is about the same. So that's a really good sign. But if you go down to like the average MAE, which is the average maximum adverse excursion, which is kind of like, that's like saying, okay, what's the high point versus the low point you're going to experience, right? That's like how much are you going to feel of a loss, throughout the trade. So you might gain something and then you lose it. Those numbers are a little bigger. So again, you got to ask yourself, can I stomach those swings? That's one of those questions and this is also why back testing is very useful, because you can sort of preview again what to expect.
all right, so let's continue on, right? Because some of these signals we're getting here have 3 days, right, of signals, and we even have one that has 4 days. So let's go and add another scale-in contract here. So, and again, I'm going to increase the number of contracts, and I need to make a quick modification to this entry order here. So I want this to go in on the next trade signal, right? So there we go. Quick and easy, right? So again, order set A, this goes in on our first entry signal. This one goes in on our, scales in on our second entry signal. And this one scales in on our third entry signal there. All right, so we'll save that out. And again, do a reload here. And then pull up our strategy performance. Take a look at the historical backtest results. And again, we doubled our amount of profit there. So again, right, if you're going to add more contracts, right, you're going to be expecting, to get that same amount of return on your system there. Yeah, so as Jeremy likes to look at, right, our average winning trade there is now 14,000, right? The average trade is still staying around the same there, so that's good. That's not lowering. And our profit factor is continuing to increase as well. So it looks like we're.
Yeah, I was going to say, about the losses too. Like I think a lot of people have aversions to losses. Traders tend to be a little bit more of a different breed. But you consider, right, the alternative would have been a kind of a very simple investor putting their money in, going long, and possibly losing a lot more than that over the course of that year, right? So obviously not losing would be great, but hey, in this case, if you can find a system that actually makes really good profit in those conditions, you're way ahead of the average person.
All right, so this is going to be our last little test here, because I think we only have one entry point that has 4 bars here, 4 days with entry signals there. So let's reload our chart again, and let's take a look at those results like so. And so now, yeah, now it looks like, you know, with the 3 contracts that basically we hit kind of like our maximum return there, because actually we took a little step backwards there, right? So we added a lot more contracts, but we didn't double our profit again, right? We actually took a little step backwards, you know, so maybe, you know, so it's looking like, you know, 4 scale ins, or I'm sorry, yeah, four entries is a little too much. Maybe we should just keep it to 3 scale in opportunities there. And while I got the time here, you know, let me show you some of the other little bells and whistles here that Blackbird has, right? So, you know, if you're day trading, it has all your money management metrics there, right? So obviously, you know, it has the max profit, right? So you can, if any of these trade metrics are hit, you know, Blackbird will turn itself off automatically for the day, and then it resets itself, right, over midnight, and it'll start trading again there. You know, so if you have a fully automated system there, right, you got some money managements that can turn the system off automatically, and then it'll reset for the next day there and keep going. So, and also it has a customizable scheduler here as well, right? So, you know, this would be for intraday traders there. So I think the most common example here would be, you know, maybe you're into trading the oil futures market there, right? And, you know, if you are, you would know that you really don't want to be trading during the government oil inventory report, right? Those are very volatile moments in the morning there. So you can restrict that. You can tell Blackbird, okay, don't trade on Wednesday mornings when that oil inventory report comes out. Yeah.
And I want to point out, like, we just showed just a tiny fraction of the features here. There's a whole swath of order management features in terms of controlling your profit targets, your stop losses, and this is more for the day traders. But you can also do things like we analyzed how professional discretionary traders trade. And we found in the end that actually, like those discretionary traders put as much effort, if not more effort, into how they manage those profit targets and stop losses throughout the life of the trade. So Blackbird has got a lot of tools to really mimic and change up how you move those profit targets, how you place them, how they behave in the market over time. So those are all things that are kind of built into the software as well. So, but we're just showing kind of the basics in terms of a basic back test with just scratching the surface of what Bloodhound and Blackbird can do together.
Yeah, and so this is Zach again, and I host weekly training workshops here. So, you know, so if you have really in-depth questions as to whether Bloodhound or Blackbird can do something, you know, these workshops are open to everybody. So it's free to sign up and free to join. You don't have to own our software or anything. It's open to the public, you know, and you can come in, you know, and join me on Thursdays and Fridays and ask your questions and pick my brain, and I will build stuff live in front of you, just like I did during this presentation here. So,
all right, yeah.
With that, I'll turn it back over to you, Jeremy.
I hope you guys seen like how powerful of a research tool Blackbird and Bloodhound can be when you put them together. And we didn't even really get a chance to talk about the execution side. The software is also incredible at executing, especially day trading or intraday trading possessions and managing them. So that's a whole other topic though. But for now, let's resume the slideshow here. I can try to take the screen back for myself. And this is always the tricky part, figuring out what monitor to go on here. Okay. All right, yeah, so you guys witnessed Zach just basically putting together a systematic trade system within like what 10, 15 minutes with some rules, and then tweak it, test it, right? Doing that back test cycle very quickly. And that's what we're all about, is giving you the tools to create and research and find those those good trade systems that work with your personality, work with your risk parameters, and then be confident that you can trade those systems in the live market and get you there as soon as possible, right? So like I said, though, we just barely scratched the surface in terms of what is possible with our software. So there's a bit of a learning curve, but once you get to that point, you can build just about any conceivable system that you can come up with. Right, so we have a lot of online documentation and videos. We have about 13 years of videos, thousands of hours, literally, of videos. We've been actually working hard to try to catalog these all, so they're actually reasonably easy to find. But we have also unlimited email support. This is for both customers and for trial users as well. As Zach mentioned, there's a live workshop every week. This is a great free resource that a lot of our customers love to use. You've got a system or some ideas in your mind and you want to see how you build that. You just attend the live workshops that run every Thursday and Friday, and it's like a live classroom. So, and again, that's free. It's just a great way to learn the software, get started, and get acquainted with how to build certain systems, or even just sit in there to get some ideas, right? So there's almost an infinite possibility in terms of what types of trading systems we've seen out there. It's really amazing, actually. We put this is why we love doing this stuff. We put this tool out there, and our customers come up with all sorts of crazy stuff that we never even thought was possible, right? Like, and they bend the software in certain ways. We're like, oh wow, we didn't think you could, we didn't think of that idea. That's great, like, and they come up with very innovative trade systems. And so again, it's built to build. This tool allows you to sort of express your creativity, and you can build kind of a trade system that matches exactly what you've got in your mind, and then put it onto like reality, right? And then test it and see if it will work. So we also have a Discord community, and we also have private one-on-one training. I do want to mention, right? We also have 100% money back guarantee. We've been doing this since the inception of our company, and basically, we stand by our product. It's worked well for us. If you don't like the software, even after the trial period, and you bought it and maybe you've just discovered that trading in general is not for you, or this tool is not doing what you need it to do, we're happy to refund it for you within 30 days. And like I said, this is because we stand behind our product. So if you want to find out more information about our software, you can hit us up at sharkindicators.com. That'll take you to this website here. And all you do is you go to the free trial, you put your name and your email in there. Because I visited it already, it's sort of disappeared on me. But what I definitely would recommend is here you can actually schedule for a private meeting, and this is awesome. This is a one-on-one session, which is basically a new user orientation. And you can say, I have these ideas. Can your software do it? And this is the easiest way to just kind of try it out and get familiar with the software. It's a great way to maximize your time and minimize your effort when it comes to learning our stuff. And you can also just join in on the new user orientation that we have, kind of an open office hour, if you will. The next one's on April 21st, which I believe is Monday, if I'm not mistaken, at 1 p.m. in Mountain Standard Time. And yeah, if you're interested, that's a great way to just sort of get inducted into our ecosystem and our technology. So that basically concludes our presentation. And
Jeremy,
hopefully-
while you have the website up, we have a
Yes.
question here. Yeah, we have Bob on our homepage, and he's
Yeah.
asking what products did we present today, and what platform do they work on? Yeah,
Okay.
there you go. Perfect.
Again, it is for NinjaTrader. NinjaTrader does have a free version. I believe our stuff works just fine on it, and that's great for researching. And if you're doing back testing, especially, it's perfectly fine. If you do plan on trading, especially day trading with a broker and that sort of thing, I do believe you need a actual license of NinjaTrader as well. And our software sits on top. It's an add-on to NinjaTrader. And the two pieces of software that you saw earlier were Bloodhound and Blackbird. And Bloodhound was the one you saw first, and that was the one where you had those nodes and that graph. It's basically that logic engine. You can think of it almost like a circuit board. And then Blackbird was the one that allowed you to set up the entries, the order steps, we'll call them, and then you can do the profit targets and stop losses, as well as the risk and money management settings, that sort of thing. So the two combined is what you need to use to build a full-blown algo traded system. However, you can use them. You can potentially use them separately, right? They actually are standalone products.
Yeah. All right. Yeah. So this next question we have here is from Greg about multi-time frames. So I'm gonna take back the screen here for a moment, and
All right, we're about to go deep. We're about to go deep into
we're getting technical now, folks. Yeah.
Yeah.
So let's see here. All right. Yeah, it says I'm on here. Okay, so yeah, I'm gonna open up Bloodhound again here for Greg, and he's asking about multi time frames here. Yeah, so on the left here, right, this gives you your list, right, of all your nodes here, right, that are checking all the different criteria and conditions. And there's a add chart button. So you can add a chart, right? So it's more than just a time frame, but you can literally add a different chart. So if you wanted to, you can go and select a different instrument. So you can pull in other instruments to check for that correlation. Yeah, so Greg was kind of asking, can we check if there's multi-time frame correlation? Yeah, and you can even pull in other instruments, a whole different chart, and check for correlations on there. Yeah, so let me put like a 15-minute time frame on there, and then you can take nodes and move them on to the other time frame here. And if I zoom in there, you can see, right, this node here, we can see right above it says 15 minutes. We know this is running on the 15-minute time frame, and this node, is running on whatever your chart is set to, right? So for this demonstration, right, I have a daily chart. So all of these nodes are running on the daily time frame, and this guy, just me now, is running on the 15-minute time frame there. So yeah, so there's and then as far as matching up, the second part of Greg's question is making sure that the different time frames match up. And that's what an AND node does. Yeah, that's what the AND node does, is everything that gets plugged into an AND node, everything has to be in agreement at the same time. So you just take your different multi-time frame analysis that you're doing, right, and plug them all into an AND node, and there you go. So pretty simple.
Great. Okay. I think that's pretty much it for questions. Again, in conclusion, I just want to say, like, this is a great tool just to experiment with. And hopefully the idea is, you build a trade system, you back test it to your heart's content, and you find something that actually gives you some confidence of trading it in today's market, which is, like we said before, it's kind of an uncertain market. So, but we've been through these uncertain times before. It's not the first time this has happened, and won't be the last. And there's certainly people making money in these uncertain markets all the time. So why not be one of them as well?
Mm-hmm. Yep.
All right.
Well, so if we still got more time, and guys, if anybody else has any questions, please go ahead and get those in here. Yeah, I'd like to just take a moment here to kind of show you, if you want to come into a live situation here, you can sign up, just go to our support and go to the training workshops here. And so these are on Thursdays for Bloodhound, Fridays for Blackbird. Actually, unfortunately, there's no workshop this Friday because of Good Friday. There's no data feed here, but you can join me tomorrow and ask your Bloodhound questions all you want. So this is a live, open environment, you know, for everybody to ask any kind of questions you want about Bloodhound. So, and then also, let's see, Jeremy, where's that open house link there that Keith does?
Yeah, I showed that earlier. That was under the free trial. Yeah,
under the free,
on the top right there, the menu button there in the top right. Yeah, free trial.
Oh, there we go, free trial.
Yeah.
There we go.
And then basically you go past this. You have to fill it out. But once you do, you'll be presented with the screen to select a time to do for a one-on-one sort of orientation.
Right. Yeah. So if you want kind of a private hand-holding consultation there, yeah, you know, you can enable this private consultation there. You know, so if you don't want to ask your questions in a public setting, yeah, you can do this as well. So, and let's see here. Looks like we got another question from Bob.
Yeah. Well, actually, I'll just preface this before we like, we didn't plan on diving too much into the pricing. It's more of an introductory thing to our technology. You know, but you know, in this industry, we have I would say this, the thing we like to say about this software is it's like the last tool you'll need to buy, in terms of once you can use this now over and over again, changing market conditions, that sort of thing. But the long and short of it is actually, Zach, if you want to hit buy now, we can actually show the pricing real quick on the top right there, on the top right in the menu. Yeah, and so that's basically the if you want to purchase it there, $9.95 for Bloodhound. Again, you can purchase each product separately because they do run independently, depending on your needs. You do need both though to actually do a full-blown auto trader. But we have a sort of a bundle, if you will, right? So you can save money if you buy them both at the same time, and that's $19.95. Oh, and perhaps you could show the Discord link as well. That's a question that Bob has.
Yeah, so to get to Discord, go to our support there.
Community.
Yep, and it's under community, and this will bring up our Discord. Yeah, and I'm sure you guys are going to have more questions. So you can see there's a contact us right there. Yeah, so you can use the contact us and fire off an email there to us. Or of course, you know, just like every company these days, we do have a support @ email address there, so you can just email us directly if you'd like as well. So yeah, this support is our one-stop shop email address, so you don't have to remember multiple email addresses, right? We want to keep it, you know, as simple as possible, so you can just fire everything off into our support email, any kind of question, sales related, you know, operations, you know, related, you know, things like that. So
I think I'm going to add one tiny thing before we get kicked off here, because it's now 1:45. Do put your email in the free trial, because we are announcing a pretty game-changing feature May 1st. Yeah, I'll just leave it at that. It's something that's, like, we talk a lot about automation, we talked about back testing, and now we're talking about automating the back testing too. So that's a very exciting feature that's coming up, and we're launching that May 1st. It's been in the can for about 8 months now, and we've been kind of honing in on this feature for a while. So if you want to be kind of kept up to date on what we're doing, and want to know what that is, stay tuned. on your email, and it'll be and we'll have an announcement on May 1st.
All right,
Okay.
thank you, Jeremy and
Okay.
Zach. Your technology is empowering retail traders in a huge way, and the offer you've given our audience today is incredibly generous. We truly appreciate you.
Well, thanks
Thank
for
you.
hosting us again. Yeah, and everybody, have a good Easter weekend
Yeah.
coming up here.
Yeah. All right,
Thank you.
bye-bye.
Thank you, guys. Have a great one.
Okay, thanks. Bye-bye, guys.
Closing out our summit is a crowd favorite, Rory Powers of Right Line Trading. Rory is known for his hands-on coaching and automated trading expertise. Today, he's going to show us how AI-powered bots are helping traders eliminate emotion, adapt to market volatility, and profit like institutions. If you're ready for smarter, faster trades, this is your moment. Rory, are you there? You're welcome.
Thank you, Anthony, for that beautiful introduction. I really appreciate it. I love being on these summits, and thank you so much for having us. All right, just like Anthony said, my name's Rory Powers. I'm with Right Line Trading, and I want to first and foremost wish everybody a happy Easter. We got Friday coming up, Good Friday. That was the bad news, the death and crucifixion, but the good news on Sunday, there was a resurrection. Amen. So happy Easter, everybody. I've got a really exciting presentation. We've got a system that's making money. So please stick around. Then we're going to make a special offer for this Easter holiday. I know it's been a long event, but listen, wake yourself up. I got 40 minutes, and I'm going to show you something that I've personally been able to make about $25,000 in the last 3 months. And I'll show you how it works. We're really leveraging some advanced machine learning algorithms, some artificial intelligence into fully automated strategies that run on the NinjaTrader 8 platform. Once the strategies are enabled, the system will execute and manage the positions for you. Before I go any further, I just want to mention that I am not a licensed financial advisor. I'm not giving any financial advice here. I'm just somebody who's familiar with the trading system here at Right Line Trading and who's been trading it a long time. If you're not familiar with the risks associated with trading, please do yourself a favor, consult with a licensed financial advisor, get some insight into the possibilities. You could lose your entire trading account. All right, with that being said, let's keep going. One thing that really distinguishes Right Line Trading from our competitors is really our transparency. And I'm going to put into the chat box a link to come join us on YouTube. We have a live stream every morning at 9:15 a.m. Eastern. And we trade these bots live on YouTube for the world to see. And let me tell you something. If you've never seen these bots trade on a live market, make sure tomorrow you come in and join us. I'm going to stick first this Thursday's YouTube link in the chat box so I don't forget later on. Let me just find the chat. Here it is. All right. And thank you all so much for joining me today. I see a lot of familiar people, familiar names, and I want to say faces. Billy, Bob, Carl, Chris, Dan, Dwayne, Greg, good to see you. George, awesome. Thank you for coming out and listening. So what's really got us really excited about this first is our members are making money, which is really number one in our priority list. We received a testimonial from really a God, speaking of Easter, a God-loving and God-fearing woman. Her name is Marcia. What I know, one thing you could take to the bank about everything that Marcia says is it's 100% genuine. In fact, if you go to our YouTube channel, you could see her entire testimonial in her own words. But I'm going to, because it's been a long day today, I want to kind of shorten it and give you the main message. The main message is Marcia came to Right Line Trading as a complete newbie, had never traded futures, had never been on the NinjaTrader 8 platform. Her only experience in trading was she got, really the short end of the stick with a company that sold her some bots that traded the Forex pairs, and then kind of left her in the dark as to how to run it and set it up. So she came to us after a bad experience, and she was able to make accomplishments and achievements that it would have taken any one of us, anybody normally, it would have taken us years. And it would have been very expensive lessons and education in order to learn the things that she was able to accomplish within just 60 days. Within 60 days of starting, she had 10 fully funded accounts with Apex. Today she has 20, still has those same 10 accounts, and now has upped it to 20 and has $1 million in funding through these prop firms. So her learning curve was significantly shortened. The achievements and accomplishments that she was able to make were done incredibly fast. And to wrap it up, she really gave credit to the AI Auto Trader, to the community of traders that we have here at Discord that all supported her through this journey, and also of course, our team here at Right Line Trading. So it's really a beautiful testimonial. If you have a chance to check it out on YouTube, you can go right to our YouTube channel. It is our mission here at Right Line Trading to develop innovative trading strategies that provide our members with an edge. Our number one priority, we want to give you tools that are going to give you an edge to make money. We want to give you an edge over all of the other retail traders. Along the way, we've been around for about 14 years. We've built a beautiful community of traders of all experience levels, from the complete newbie to the experienced professional full-time trader who this is what they do for a living, and everything that falls in between that spectrum. Over the past 14 years, a beautiful community of traders, and we all help each other. There's power in numbers to be part of a community and learn what's working for somebody, or maybe even more important, what's not working, so we could kind of sidestep those speed bumps, those painful setbacks in our trading journey. So it's very valuable information to be part of a community. We've got a great team. I'm so proud to be part of this team. Extremely experienced, educated, I'd like to think handsome. Let me just quickly introduce our traders. Our futures trader, Mr. Craig Emery. David Kushner is our prop trading extraordinaire. And we've got a great options trader, trades the SPY super system, a leader in the Reddit community of traders, 20,000 traders deep. He's got a verified track record with an 89% win rate. Really a mentor, a great guy, Mr. David Wise. Really, I think, and I want to just mention this because my presentation, of course, is on bots, but these guys are extremely successful traders. And the reason why they're successful is they're able to channel out all of those human emotions, and they keep those human errors to a minimum, but they have a set in stone rules-based system that they have etched in the back of their head. And in a fast-moving market, they're able to recognize their signals because they've practiced their skills and they've honed in on their skills over several dozens of years each. And they now are like a robot, okay? Their thinking when they're trading is very similar to a robot. All of the conditions must be met in order for that trigger or that entry to take place. And that's when they deem risk to be at its absolute lowest. And their chances of getting a profitable or successful trade are at the highest. And that's what distinguishes them from being profitable traders. So if you're not gifted like these guys are, like myself, I am not gifted like that. We have a solution for you. We've got bots that do it automatically, and I'm really excited to show you the results that we've been getting. First, let me just show respect to my team, and it's important to know if you're putting your money at risk in the financial markets, you want to know, that the vendor that you're doing business with is reputable, that they're qualified, and you can trust them. Well, I think you'll definitely find that here at Right Line Trading. Our team consists of Mr. Brock Miller. He's our college student. He's getting his degree in college in computer science. We have Mr. Charles Sider. Charles Sider is a 30-year engineer, software engineer, who is a graduate of UCLA. He has his master's degree in computer science. We have Sergio Luque Rodriguez. Sergio has his master's in computer science, and he is the main beneficiary of a large, really, investment in the resources here at Right Line Trading. The owner of Right Line Trading, Mark Miller, really purchased the company to integrate artificial intelligence into these automated bots. That was his primary purpose for purchasing Right Line Trading. And Sergio, immediately when he purchased the company, he went into collaboration with a world-renowned AI lab. He really wanted Sergio, who's our developer, to be able to code and write code to be able to leverage artificial intelligence into NinjaTrader 8. So while this collaboration was taking place, Sergio picked up on it extremely quickly. Over the past 10 years that I've worked with Sergio, I've seen him code complex algorithms, mathematical modeling, and now artificial intelligence into NinjaTrader 8 language, and he can bring it to life. If he doesn't know how to do it, I guarantee, give him enough time and he'll figure it out if it comes to something on a computer. The team is led by Mr. Mark Miller. He has his MBA from Cal State. He's a U.S. Army vet, and he brings those core military values into the forefront of everything that we do here at Right Line Trading. If those values of honesty, integrity, transparency, if those values are not part of anything we do, they are eliminated quickly. I assure you of that, and that's why I'm so proud to be part of this team. So a little bit about me and who I am. The voice that you hear behind the desk, my name's Rory Powers. I'm a graduate of Syracuse University. I've been with Right Line Trading. This is my 11th year, and I've really worn all hats here at Right Line. My favorite job here is I answer the phones. So everything I tell you, I'm going to tell you the truth, because when you call me, I'm the one that's going to be answering the phones here. I reside in South Florida, and I have a passion other than trading the financial markets. My second passion is saltwater fishing. I live right by the Florida Keys, and this was a recent fishing trip that I took with Mark Miller, Sergio, this is Luque over here, and myself. We caught these beautiful snapper and grouper. When we got back to the dock, this restaurant in the background, they cooked it up, and man, it was just delicious. But my prize catch, the catch of a lifetime, was my beautiful wife, Christelle, a beautiful Haitian American, a good, strong, spiritual woman. God bless me. Not only is she spiritual and a strong woman, but she's beautiful. And also, we've been blessed with two beautiful girls. My 6-year-old, Marilee, and my 2-year-old, Heather. All three of the girls in my life, they all have birthdays in March. Not on the same day in March, but all in the month of March. And this was a recent dinner that we went out and celebrated all their birthdays. So that's a little bit about me, but let's get on with it. This is my favorite slide of the whole presentation, and this really sets the tone, because every single one of us, I'm not going to, I don't like to point my finger and put anybody else on Front Street. I like to put myself as the one that blows the accounts and is not a good trader. But answering the phones here, I know for a fact that I'm not alone, and it's comforting to know that. So this very professional, it looks like a conservative woman because of her business suit, educated, she looks highly intelligent. This nice woman has come to her boiling point. You see, she's watched her trading account dwindle over the past 6 months to almost nothing. And she's come to the boiling point because she's absolutely convinced that has to be a conspiracy. There's something going on here that just doesn't smell right. And there's a conspiracy between the market makers and her broker, and they're out to drain her bank account. She's sure of it. So after watching her account over the last several months dwindle away, she's gotten the sledgehammer out of the bottom drawer. Oh yeah, it's gone that far. And she's ready to smash that monitor into smithereens. Have you ever felt like that? Let me tell you, I sure have. I know exactly how she feels. And this feeling of blowing our accounts and losing and going to sleep talking to ourselves at night, wondering why we just can't get it, this was the genesis of the AI auto trader and these iBots. We've all experienced problems with consistency. I was in a trader summit here on Traders Corner, and I was listening to Christopher Mullen. Christopher Mullen, extremely intelligent guy. He was talking about how he had done a study on human personality traits and whether or not they lend well to being a good disciplined trader. There's core personality traits that we all share as humans. You have, for example, you have your driver. A driver is someone who says, go, go, go. They might pull the trigger and they're in every trade trying to get a winning trade. They're over traders. Then you have the analytical. And I always think of my good friend Charles, who's the consummate engineer. The analytical, they want to weigh, they want to have all of the information, all of the data to make an informed decision. They don't want to make a mistake or the wrong decision, and they might let a trade pass them by. They might have problems pulling the trigger. So those are just a couple of examples of personality traits that just don't lend well to being a good disciplined trader. So Christopher Mullen found in the course of his study that maybe one or two of these core personality traits that we all share lend well to being a good disciplined trader. So listen, if you're just not one of those two personality traits, that you're just not a good disciplined trader, you're not alone. It's not your fault. I like to blame it on my old man. It's my genes. Genetically, I'm just not disposed to be a good trader. We've also, bought indicators that lack price or lack a proven trading methodology. But listen, we all know where it leads to. It all leads to that same cold, desolate place of blowing out our trading account. And that was the commitment, consistently blowing out our trading accounts. That was the genesis of this AI auto trader, and it's become our team's commitment to bring this to an end. So we've narrowed it down to two things that we believe are going to create trading success for the vast majority of us, not just one or two personality traits. Number one, you have to have the proper tool set. If you're going to battle, and I always use the analogy of a battle with trading, but if you're going to battle, you want to go in with a more technologically advanced, bigger, badder weapon than your adversary. You don't want to get outclassed on technology or the power of their trading system when you're at war. You won't come home alive. Well, the same holds true with trading on the financial markets. If you don't go into battle with the most technologically advanced tools, you're going to lose your money. We're going to lose our money. Number two, if you're anything like me, I am a habitual, I squeeze my stop. my goodness, do I squeeze my stop. The minute I get up on a trade, I squeeze it up so tight that I get wicked out, only to watch that trade go on in the direction I had the position, and I would have made a very nice profit. So ideally, if you're anything like me, you want software that can do it for you automatically. You want to get in and get out of these trades at the most opportune times, and you want it done automatically for you, okay? That's what this technology that I'm about to show you will provide you. The benefits of using our automated trading systems: there's no more human error. All of those human emotions, overthinking, hesitating, it's all out. It's all out the window. It disappears. We have a system through artificial intelligence that's going to place your stop and your profit target in the most ideal location based on the current trading environment. And that's the key. These are bots that will self-optimize and change their own parameters based on the market conditions. Listen, this is a very news-driven market. We can go from a choppy, ranging market, and a minute later, there's an economic news report or a tweet or an overseas occurrence, a geopolitical occurrence that happens, and all of a sudden, we went from a ranging market to a market that's trending in one direction or another very quickly. So the problem with bots in the past, and I've been doing this a long time and I've seen it firsthand. The problem with bots in the past has always been that the inputs get stale. As market conditions change, they're no longer optimized. They're no longer good for the current trading environment. What artificial intelligence has done is it's provided these bots with the ability to self-optimize. They change their own inputs based on the market conditions. So that's been the game changer with this AI auto trader. If you're a prop trader, stick around. I'm going to show you prop trading on steroids. We've got bots that will pass evaluations, and we've got bots, once you get funded, are going to keep you funded. So I'm really going to be showcasing two systems. One is our AI auto trader that leverages artificial intelligence. The second is called our iBot. The main difference is our AI auto trader has those self-adjusting parameters that I mentioned. Your charts are very symmetrical. Throughout the trading session, there's repeatable candlestick patterns. It has a machine learning algorithm that recognizes certain candlestick patterns and will exit a trade or take a trade based on candlestick formations. It also has trading session hours that will dynamically change based on past performance. You see, each one of our bots runs in tandem with what we call a drone. A drone is really just what it sounds like. You think of a drone, you think of this little aircraft that's hovering above the environment, that's looking, getting a bird's eye view of the landscape, and it's sending down the message to the user, and it's telling them what the landscape looks like from a bird's eye view. Well, that's exactly what this drone is doing with our bots. It's telling the bots what the average true range of the markets are. It's telling it through the 23 hours it's taking trades, what times of the day it trades the best. We have some bots that do very well during the Asian Open. We have other bots that do well during the London Open, and some bots that do good in the American session. Well, these bots learn historically when they do the best, and they will dynamically adjust their own trading session hours. The iBot is really just, I mean, you think of the fastest, I call it the fastest trigger in automation. You think of Clint Eastwood as the gunslinger. He had the fastest draw in the West. If I go to my next slide, what I'm talking about is the iBot leverages the actual market internals. What I mean by that is the iBots require a professional grade data feed. You'll subscribe to either Kinetic or IQ, and this is data that pulls the data right off of the stock market, the cash market. And what it's looking for is imbalances of advancing or declining volume. It's looking at the advanced decline ratios across the Dow, NASDAQ, S&P 500, Russell, and New York Stock Exchange. When there's an imbalance, a disparity of buyers versus sellers, that's the trigger that will trigger this system to take a trade. Nothing on your trading chart is looking at in order to trigger a trade. Most bots are looking at things that have already occurred on our trading charts. Maybe a MACD crossover or an oscillator divergence signal. These are signals that reflect what's already happened. These market internals are actually the DNA, the pulse of the market, of the cash market. So these bots will fire into a trade before a move even happens. It picks it up. So it's really provides you with lightning fast, highly accurate entry signals that are far superior to lagging indicators. And that's what the iBot is leveraging for the trigger. And this is just showing the imbalances of advancing or declining volume. Parity is, there is no imbalance. If there's an advancing inclining, it's going to go long, or declining, it's going to go short. So the machine learning algorithm is really what I've already mentioned, and I want to keep moving because I know it's been a long day. I mentioned the candlestick pattern recognition that's coded right into the strategy itself. How our drone technology, let me show you a real life example of this trade performance. If we look at a trade performance of, let's say, the sniper, what this is showing you, I'll show you in just a second. These are the 20 Unarenkos over the last 30 days. So 20 Unarenko, if you're not familiar with Unarenko bars, is a very big bar. It doesn't get caught up in whipsaw. It doesn't get faked out. A 20 Unarenko, you've really got to be in a confirmed trend for this bot to take a trade. So we have both the bot and the drone checked. So if we disable them both, you see that I'm not playing games. It's March 15th to April 15th. So the 20 Unarenko bot, let me show you the output first of the drone. The drone took $5,000 in winning trades. The drone is taking trades 23 hours a day through the Asian Open, the London Open, and the New York Stock Exchange. It takes a break between 5 and 6 Eastern when the market closes. We never hold a position overnight. So the drone is up over the last 30 days, $5,000. But look, it had $6,800 in drawdowns. A lot of our members that have cash accounts or a prop account, they don't want that type of drawdown. So what we do is we have, if you look at the drone, if I go to the analysis of it and I change it to the half hour of the day, and I look at the entry times. Well, look at these entry times right in here between 9 and 9:30. Man, it makes a fortune during these hours. So it tells the bot what time to trade. And those other times that it wasn't profitable, it does not trade. It's not going to trade unless it has the most likelihood of being successful. So you could see now that the bot turned that drawdown into a $1,491 drawdown. It didn't quite make 5,000, it made just under 3, but the output is much more efficient. The output becomes much more efficient. So that's how that drone, that bot drone model really work. That might not have been the best example to show, because in that example, the drone actually made more. But in most of these other bots and drones, there's a huge disparity. The bot, especially on the NASDAQ, always on the NASDAQ, does much better. So a couple of our top bots, because really it's an automated system, and what it boils down to is performance. And I want you to know that what the performance I'm showing you is not performance that's a back test or a hypothetical. These are trades that were actually taken on a live market, a forward testing. One of our strongest bots was introduced to us by one of our members. He purchased our system. He happens to be a professional in this niche, and his expertise lies in the optimization of strategies. He's an extremely valuable member of our community. His name happens to be Robert. We call it our ES30 star. And this ES30 star on my computer between February 1st and this one goes through March 10th was up $15,544. But if I show you what Robert, who's one of our members in Discord, I'm going to show you, because he's been running this strategy for 6 months. For 6 months. And you can see right here that he's up over $60,000 trading this ES30 range bot over the course of 6 months. It's important to know that this is not a back test. These are trades that were taken on a live market. And Robert, I asked Robert because his passion is bots and the optimization of automated systems. So he's purchased bots from, probably at least 3 to 5 other vendors. And I asked him, out of curiosity, how do ours compare? Which I think is a fair question. And he said, Rory, the big difference between right line trading and every other bot that I have is the one that you guys have, I never have to optimize. I don't have to go in and mess with the settings. These other bots I have, some on a daily basis, I've got to get under the hood and start making a bunch of tweaks and get my strategy analyzer and all my tools and go through the ringer with it to optimize it. If not on a daily, then on a weekly basis, and it becomes a full-time job. And that's why he's referred his friends to purchase this bot because of the incredible performance that our bots have been producing for him. So that's the ES30 range. It's one of our most powerful bots. That's on the AI system. The iBot, we have the iBots on the ES. We have a 4 Unirenko that has very comparable results, $17,220 from February 1st to March 15th. We have an ES that runs on an 8 Unirenko. 8 Unirenko really is a beautiful chart. The 30 range, by the way, today, this happens to be our chart, and the system comes with all of the chart templates. But you could see our ES30 range today was up $2,800. This is the same bot that we're talking about that Robert shared with our members. But this is just a beautiful chart that we share and we trade every morning on YouTube. So the AI on the ES8 Unirenko up 15,130. That's trading one contract after commissions. After commissions. The iBot on the NASDAQ, those big bars that don't get caught up in whipsaw with this environment with the increased volatility. Listen, since January 20th, the only thing for certain is the uncertainty. The Trump administration, they came in like gangbusters, and the market, we don't know what he's going to do next. So, we've seen gold, the volatility in gold spike. I mean, the price of gold now, you've got to be a millionaire to buy a gold chain these days. But anyway, the NASDAQ, these bigger Unirenko bars are doing really well, is my point on the NASDAQ. This one was up 16. The NASDAQ on a 1 minute February 1st to March 14th, is up 26,000. But these bots love that volatility that's being created in today's trading environment. Me, I'm 10 steps behind these bots. I couldn't trade like them. They're just incredibly fast. If you're a prop trader, I like to refer to this system as prop trading on steroids. This system has really been the turning point of me personally, my trading career. I'm a habitual. I wasn't lying to you. I've blown out more accounts, I'm telling you, than I can count. But this is a system that comes, and for the Easter special offer, we're going to include all of our prop trading templates, which, believe me, is great news. With these PA account templates that we have now, it's going to be an additional charge in the future. So it's a $16.99 value. You'll have these included for our Easter special offer. The prop trading templates include our one-day pass templates. The one-day pass template is the one-day pass is a very aggressive way to pass your evaluation. If you're familiar with prop trading, you know, let's say, for example, you have a $50,000 prop account. In order to pass that evaluation, you got to make $3,000, and you got to do it before you lose 2,500. Oh, and you got the trailing threshold, that can take you out if you get any type of drawdown. So these one-day pass templates will execute the maximum number of contracts that you're allowed to trade. On Apex, it happens to be 10 contracts in this example. And it will go for the minimum number of ticks in order to hit your profit goal of, let's say, $3,000. So on the NASDAQ, it's 10 contracts, and we do 60 ticks as 3,000. We make it 62 ticks to cover slippage or commissions. So these one-day pass templates, 1 out of 3. Okay, listen, there's some of them that sometimes get up to 50% win rate. But I'm comfortable telling you, because I answer the phones here, remember, I'm comfortable telling you if you buy 3 evals and you trade 3 one-day passes, statistically speaking, you're going to pass 1 out of 3. Now, you do have a chance to pass all 3. You do have a chance to lose all 3. But statistically, it's been 1 out of 3. And that will get you a funded account in 1 day, 1 trade. This is an example of one that had a 76% win rate, but trust me on this, it's going to be about 1 out of 3. Now, the PA accounts is really where the rubber meets the road. Myself, I have actually the privilege, the honor of being able to trade this system on our YouTube live streams. And my goal is I try to make between $250 to $500 a day. I'm not looking to break the bank. I mean, listen, I've talked to a lot of you, and I know you feel the same way. I've talked to so many people that say, look, Rory, listen, I got 5 accounts, I got 10 accounts, I got 15 accounts. I only want to make $100 a day. That's it. I'll copy it across 15 accounts. I'll make $1,500 a day, and I'll live happily ever after, and my retirement will be beautiful. We hear you. I hear you. And I'm doing the same thing. And I do it every morning on YouTube. We've automated a trade. We call it our power play trade. And I'm going to show you a very short video of the power play trade. This is a trade that we do. Let me set up the video. We do this trade every morning at between 9:32 and 10 o'clock. 9:32 and 10 o'clock. We've been doing it since January 15th every morning. They're all recorded. You can go back and see the recordings. So to set this up, the way it works is I have a 20 Unirenko chart here, a 30 range down here, both on the NASDAQ. When I enable my trade copier over here, it's going to copy the trade that gets executed down here on the 30 range. It's going to copy it across all of my funded accounts. So this is one of the power play trades that now is fully automated. And this is how this trade works. When the 20 Unorenco market structure-wise aligns for a short trade like it did here, clearly, it's way below the 50. My 30 range way below the 50. I have a multi-time frame alignment of trend. That's really the main filter, one of the main filters of this trade to be triggered. So you can see that this condition has been met and the system takes the trade. And really, most of the time with very little heat, you could see this trade mature. And I needed to go in my profit window, is what I'm saying is once it matures, you're going to see my stop in just a second. My stop right now is up here. Once this trade, my profit target is 100 ticks. I have a 60 tick stop loss. So I'm risking 300 with the potential to make 500. But there's a caveat. Once the trade matures 75 ticks in the direction of my trade, my stop is going to fly down and lock in 50 ticks of profit. It's called our profit window. So in just a second, you're going to see my stop come in my profit window. When that happens, you could breathe a sigh of relief because you're either going to make at that point $250 or $500. All right, so let's play the tape. Now it's in the profit window, and boom, on that particular trade, it happened to go all the way, and I was one and done with a $500 winner across all of my Apex accounts. So that's the spirit of that power play trade that we now have fully automated. And let me show you the results because really the numbers speak for themselves. From January 15th on these funded PA accounts, I'm going to show you. This was yesterday. From yesterday, it was at 25,312. Well, today, the streak continued, and we hit another winning trade today. And you can see now that we're up to $26,000 in these PA accounts. So these accounts, we can withdraw the funds whenever we want now. It was brought to my attention. I thought we had to make another 9,000 across them all. It turns out I was wrong. So you could see that for a prop trader, or if you're trading a live account, look at this beautiful equity curve with very little drawdown. This is what we need as a prop trader. This is what we need. Today, if I show them my trade copier from today, and it's all recorded on YouTube, you can see I took that same exact trade. I copied it across my 3 PAs and 3 evals, and across my 3 PAs, I was up $705. I made 305 on one account, 205 and 195, and it came out to a total of 700 on 3 PA accounts. But listen, with an 80% win rate, just getting that $200 or $300 winner, and periodically we'll get a 500, it starts adding up to significant amounts of money. And you could see over the course of from January 15th to April 15th, I'm up over $26,000 trading this automated PA account template. This Easter weekend, it's going to come fully included. I always get asked, hey, can I get a payout using these bots? Yes. Yes, you can. We've gotten them. Now, it's not just me, and I think that really spiritually, this is what's the most rewarding, is seeing our members. When I see that chat in YouTube, it happened this morning, it happened last week, it happens all the time. Our members are doing incredibly well also. It's not just me. We're all jumping on the bandwagon with this power play trade. It's a nuance that we just happen to have found, and we're going to ride it until the wheels fall off of our wagon with it. Steve on the NQ Scalper made tremendous amounts of money. Sood is another member on the NQ who was doing very well. Simon, a trader from across the pond, was up $16,000 over 7 accounts in one single session. That's why I like to refer to this as prop trading on steroids. Limit up, same as Simon. Crazy profits, something that you or I in a million years would never be able to do, that these bots have the ability to do. One of our favorite members, Ron, he's like you, Bob. He's been around. I see Bob R in here. Bob R and Ron N. These guys were here before me at Right Line Trading. But Ron N, is running these bots. And one day he made 10,000 on gold. I've seen him make 20, 25,000 with the iBots in a single session. And these are members, it's important to know, that have been with us for 14, 15 years. Okay. So when you come aboard here at Right Line Trading, it's the beginning of a relationship. So many people that are, in attendance today, I've known for years, and I consider them really my friends now, my personal friends, because it's the beginning of a relationship that we hope is going to be a very profitable endeavor. So Suzanne is one of the leaders in our community. She's getting ready to become a full-time trader and quit her job because of the success that she's been having trading these automated bots. So here's our special. I've kind of run out of time here. So let me get right to the special offer for Easter. The AI Auto Trader. I think these are the most powerful, technologically advanced bots available to the retail trader. We're going to do an Easter special. We're going to keep it at 50% off, and we're going to include the automated power play. That's the PA account template. That's up 26,000. We're also going to include all of those one-day passes, all of the chart templates, all of the strategy templates, and ongoing support, right? Isn't that nice? A company that actually supports their products. I heard Jeremy, and Jeremy's a great guy. I mean, God, that guy's so smart. It's great. It's crazy. I'm speaking of Shark Indicators, extremely reputable, and they stand behind their product. And so do we here at Right Line Trading. And I think that's really speaks volumes. So if you come aboard today, and 3 years from now, if you need help or you want your update, you're going to get it, and we're going to do it for you. So 50% off. We have 3 sizes, small, medium, and large. The monthly membership is normally $9.99, $9.98. We're going to do it over Easter for $4.99 a month. The annual, which I think is really a phenomenal value, it's normally $29.98 for the year. However, for Easter, we're going to put it at 50% off, or $14.99 for the entire year. If you divide $14.99 by 12 months, just to give you an idea of what it breaks down to, you are billed the entire $14.99. I had somebody misunderstand me, but if you look at what you're getting, if you divide the $14.99 by 12 months, it's $125 a month. For $125 a month, I'm telling you, you're going to be trading with us every morning live on YouTube. You're going to be part of our Discord community where we do live training sessions, and you have an open line of communication with all of our members. You're going to have this system for the full year for $125 a month. Really, this system can really burp and make $125. It's incredible how powerful this system is. The best value is obviously, if you're somebody that just doesn't like subscriptions, it's the one-time payment. There's no muss and fuss. You don't have to worry about getting rebilled. If you have the means, at $29.99, you pay it one time and you own this forever. Any future instruments that we add on or updates are always going to be included for you. You have the members only Discord chat, fast, easy setup. We're going to get you set up before Monday morning. I assure you. We're going to get you set up hopefully today or tomorrow. And we also have all of the one-day pass prop trading templates. Now I see out of the corner of my eye, the PayPal later, which is really a great concept. When you think of financing, you think of interest, and you get sick to your stomach with today's interest rates. I'll answer your question in just a second, JV. But with PayPal later, if you qualify, there is no interest. There is no interest. You could pay it over 6 months interest free. So for the IBOT is the system that leverages that market internals that would require the subscription to Kinetic. We have a special offer. It's a buy one, get one free. If you want the IBOTs are going to be monthly, a 50% discount. Monthly is $7.99. The annual is normally $59.98. The annual is $29.99. And the one-time payment to own it forever is going to be $59.99. Now, the good part about this offer, what makes it a really sweet deal, is it's a buy one, get one free. If you buy the iBots, you're going to get the AI auto traders included. So you're going to have the full portfolio of strategies running on your computer. For legacy clients, I see a lot of legacy clients here. If you've purchased, what I mean by a legacy client, if you're a member of Right Line Trading, you've purchased one of our trading systems on a lifetime license. Lifetime license. You purchased the prior trading system, one of our auto traders. Legacy clients, we're going to provide a 75% discount on these new iBots, and it's going to be $29.99. You'll just need to send an email to support@rightlinetrading.com, and we'll just confirm that you purchased one of our systems, and we'll send you a discounted invoice. So legacy clients get a really sweet deal through the weekend. So I see a question here, the profit factor. Let me take a look. It's a good question. The profit factor was 1.45. 1.45. You're welcome. All right. So it's important to know if you're not familiar with NinjaTrader 8, remember Marcia. This nice woman came to us with zero. Believe me, green. Did not know a thing about Ninja. What she did come with is important to know, with the extreme thirst, the strong desire to be successful. And man, that's what I love about traders. That's what I love about you guys. That's what I love about us, is we are, what is the name for it? Survivors. We're very resilient. We keep coming back regardless. We are perseverers. And I love the underdog. In the Bible, my favorite story is David versus Goliath. And I always make that analogy with these bots, and putting us in the game with these, institutions and these hedge funders. And, we're just little David with the slingshot. But let me tell you, this system has really changed the trajectory of my trading career. But we're going to provide you with unlimited VIP support. So if you're not familiar with Ninja, don't worry. We're going to trade the system with you live every morning on YouTube. One of our members, and this is the last testimonial I'm going to do. I've run out of time. But one of our members had purchased, and I talk to people all the time. They had a bad experience with another vendor. They bought a bot that just didn't work out. It wasn't. It didn't, trade as promised. Okay, it did not come out as promised. And what Gary Sparks, Michael Edwards, we were in YouTube. And remember, YouTube is a public venue. Anybody can come, whether they're a member or not. And he started asking one of our members, Gary, what he thought of the system. And Gary mentioned to Michael, Gary's a very humble guy. He's been around for, I must know him for at least 6 or 7 years now. Barely ever says a word, but he said to Michael, he said, listen, he's bought bots from several other vendors, and he names them right here in my slide. But what he found through the course of his experience with a half a dozen bots, very similar to what Robert told me, was that RLT kills it, that our bots are superior to our competitors. That's why I'm hoping that you take me up on my offer. Come take a look tomorrow. I put the offer links. Actually, my associate Brock put the offer links in the chat box, and I've also put the link to come join us tomorrow at 9:15. We're going to try to keep the streak alive. It's, we have a week shortened by the Easter holiday, and so tomorrow is like our Friday. The stock market is closed for Sunday. So Russ asks, do you need to be right on direction? Russ, the system has conditions that must be met in order for a trade to be triggered. And we have the parameters very conservative. Any trade that we ever take is always going to be in the direction of a trend. So it will automatically keep you in the right direction, Russ. So whether the market goes up, down, or sideways, we have a bot, we have a diversified portfolio of strategies that trades on many different time frames. We have anywhere from an 8-unit Renko to a 20-unit Renko to a 30 range to a 2-minute. We've got a diversified portfolio of strategies, and we have what's called a leaderboard. And we know which ones are performing the best in the current trading environment. We've kind of been at this for a long time. So we're a very experienced team that's kind of graduated really from the school of hard knocks. And we really are putting forth a product that we feel is going to give you the best opportunity to be successful. And without the experience or natural born talent to be a good trader. So I want to end with this, going into the Easter holiday. If you're somebody that's experienced problems with consistency in your trading career, if you've hit some speed bumps and potholes, if the journey hasn't been a smooth one for you, a beautiful equity curve headed straight up to the moon on a rainbow, if you're anything like me and you've blown out several accounts and you haven't been able to find your groove, I come with a message of hope today. These automated bots, like they did for me, do have the ability to do the same for you. And I hope and pray that you take me up on my offer, because I want to see you win. I assure you I want to see you win. So everybody, I hope you have a blessed Easter holiday. Please spend some quality time with the people you care about the most. Life is very short. My wife is an RN, and she always reminds me, we have our health. And when we have our health, and when that's gone, it's all gone. We can't bring the money with us. So I hope you have a blessed Easter weekend. Anthony, thank you so much. It's really, I'm sorry I went over, and it's always an honor to be here on Traders Corner.
Thank you, Rory. What a powerful way to close out the day. And your offer to help traders get started with these next-gen bots is just incredible. The feedback is already rolling in. Thank you all to our speakers, and thanks to everyone in the audience who joined us for this special event. We hope you're walking away inspired, informed, and ready to take action, because it's time to do that. If you haven't yet taken advantage of the exclusive offers shared today, don't wait. You've got to, because they'll expire soon. So be sure to check your email for the replay link and bonus materials from today's summit. Until next time, trade smart and have a blessed Easter holiday. Thank you.
You know what, Anthony? Excuse me for one moment. I noticed that Brock didn't put our link in the chat box, so I'm going to go ahead and put it in now.
Okay, you go ahead and do that.
I'm really sorry. And listen, if anybody had a question, that I didn't get to, please put your name and your number in the chat box, and I'll give you a call. I'm going to get a drink of water here in just a moment, but I assure you that I'll give you a call and answer any question. I'm not being rude. I just ran out of time. So if you have a question, please put your name and your number in the chat box. And here's the link for the AI Auto Trader system. And remember the 2-for-1, the buy one, get one on the iBot system. I'll put that link in as well. All right. Sorry about that, Anthony. I'm all done now. Thanks, everybody, for joining us today.